I'm not going to go buy these deals, but they're available to you. Like if I was 25 years old, this is what I would be buying. If I was 25 or 30 or 50 years old and I had the time and the energy and the inclination to go buy a deal, find a deal, do the homework, manage the deal, collect the rents, I would go do this. By the way, I would do this over every other choice I would have. Literally, if I was 19 years old today and I was making a choice to go to college or to learn what I'm going to share with you guys today, I would do this. And I know, based on what I've experienced now over 40 years, I would become a millionaire many, many, many times over if I just followed the information I'm going to share with you today. So a couple things I want to just share with you about the audience, okay? Put in the chat where you're from. Throw the chat on this screen so I can see. I think we got a lot of Texas here, Pennsylvania, New York, Alabama, some Florida. Yeah, there's some Florida. There's some more Florida. Washington, D.C., New Jersey, Auburn, Mass., Scottsdale, Arizona, Chicago, Nashville. Oh, wow. Fort Myers. Oh, these are all great markets, by the way. Northern California. Going to be tremendous opportunities in Northern California. Long Beach, California. Unbelievable opportunities in South, what's it called? Southern Cal. SoCal. Okay. We got Maui, man. God, if I could buy real estate in Honolulu or Maui or Kauai or any of those places where all the rich people are going over there buying stuff right now, stashing real estate. San Clemente, California. San Antonio is going to be a great market. It's going to benefit from Austin. Also, I want to congratulate all of our members of our mentor program that decided to be part of this and become part of our mentor program. You guys are all in these cities. Each week, we're going to be answering questions for our mentors on an ongoing basis about how we can help you find deals, solve problems, find debt, find equity, etc. So welcome, everybody. Glad to have you here. Natalie says, please make me a co-host. Okay. All right. Okay, so about the audience, okay, I told you a little bit about where people are from. 26% of this audience said that they own a piece of real estate already. Now, I don't know what that means. When I talk about real estate, just so you understand, when we ask a question like this, it should have said, other than a house, Rhett. Other than a home, do you own any real estate? I actually don't even consider a home real estate. Like when you say to me, man, you got any real estate? I don't think about my houses. Right? I think about the real estate I own that doesn't own me. Where you live, that place owns you. Okay, this is the distinction. Real estate that pays you, you own it, right? So if I have a piece of real estate, I own a piece of real estate, and let's say it's 4 units. And these 4 units pay me $4,000 a month, $48,000 a year, and even after the expenses and the interest on the loan, I end up with, let's say, $12,000. That real estate, I own it. It pays me. I don't pay it. Okay, now the house that I live in, I have a house right here in town. I live down the street. Dude, I pay this thing all the time. Okay? It owns me. I don't own it. I have to pay the property taxes. I have to pay the electrical bill. I got to pay the plumbing. I got to furnish the damn place.
Put a new gate on it?
I got to put a new gate. I got to paint the gate. I got to paint the gate when somebody hits the gate, which somebody did. When the gate breaks, I got to fix the gate. None of this is covered by insurance. And by the way, I got to insure the place that owns me and never use the insurance as the insurance continues to go up. I never even get to use the insurance because most of the stuff that happens, it doesn't even hit the deductible, right? If the grass goes bad, I got to put it in. If the landscaping goes bad, I got to put it in.
Sand in the pool.
Sand in the pool. This property over here, all that stuff, all these X things that happened, the X, Y, Z, the whole alphabet that happened, the R, okay? Everything that happened over here, I was funded from the property's tenants. I own this real estate. This real estate owns me, okay? And so when we asked you guys, do you own some real estate? 26% of this audience said they did. 21% said they have more than one property. 67% of you guys said you need education. I don't know what that means. But I would expect, based on what I know today and what I knew when I started, I didn't even know what education I needed. Like I thought.
Yeah, you don't know what you don't know.
Dude, I know everybody says that. You don't know what you don't know. I remember I did a loan. I brought my first big deal. It was 48 units. I brought it to the bank and said, "Would you guys lend me money on this deal?" I didn't even know that they were the wrong place to go to. It was like going to Taco Bell to get
Cappuccino.
Salmon. Yeah.
A burger.
Yeah, a burger.
Yeah.
I'm like, "Hey, you guys do burgers here?" And they're like, "No." And I'm like, "I'll reject it." Right? Well, I was at the wrong bank. The bank didn't do loans on these assets. And by the way, most banks won't tell you that. They're just going to tell you they're not interested. They're not doing that loan right now. They're not interested in that. They think that market's not good right now. They'll actually give you bad information rather than telling you, "No, we're not lenders for that right now." Did you see New York Community Bank?
Yeah.
Oh my God. Okay.
Fresh, huh?
Okay, 15% of
You want to tell people what that means real quick?
I'm going to go back to New York Community Bank here in a second. We're in the biggest correction I've had in my lifetime. This is the most exciting moment of my lifetime. I feel right now about real estate the way people feel about Bitcoin. Okay, these diamond hands. You know what a diamond hand is?
No.
Yeah, I'm never selling.
Yeah.
These are diamond hands, bro. Okay, so 15% of you guys said that you need help sourcing deals. Now this right here means you don't understand that the biggest problem in real estate is sourcing deals. Like if you guys think if you think only 15% of this audience thinks that your problem is sourcing deals, and 7% of you said you have a problem with getting equity. Okay. So the way this deal works is this. Now you guys should be taking notes right now. All you out there that are so smart that all you have to do is listen to something to remember it. Trust me, okay? You are I'm humbly telling you, you are sitting with, you're going to get a tremendous amount of intelligence today. I'm going to share an IQ that's off the charts on real estate with you, and for you not to take notes and write down the things you don't understand and the things that kind of hit you. Like, what am I doing? I'm buying a piece of real estate I can't own. The house, you can't own it, ever. Even when you pay it off, you don't own it. Try not paying property taxes to see how long you don't own it, okay? Okay. Hey, don't treat the termites and see who owns it. Fucking termites own it, okay? Put it on the ocean and try to see how much Mother Nature says you own that paint job. Is rust everything on the property, okay? So all that costs money, time and energy. So 15% said you're having trouble sourcing deals. That's not true. Everybody's having trouble sourcing deals, including myself. I'm going to show you where to find those deals today. 7% said you're having trouble finding equity. If you could find equity from friends, family, me, I'm your buddy. I'm your friend as long as you're looking at real estate that I like to buy, okay? Then equity could be a problem. But this is how the deal works, okay? And you want to write this down. First, you have to find the right property. Most people, in my estimation, my experience, we've looked at hundreds of thousands of properties without exaggeration. Hundreds of thousands. In the hundreds of thousands I've looked at and have worked with other people in our groups, our clubs, our mentors, in my big real estate events, hundreds of thousands of properties. The number one most important thing, and this represents 90% of the activity, okay? You've heard me talk about the New York deal that Trump lost, the hotel.
Talked
about the Plaza. I've been talking about the Plaza for 3 or 4 years. If you've ever been in New York City, you know the Plaza. Now, if you could get the Plaza under contract, okay, the rest of the pieces would fall into place, which is this. The second most important thing is the debt, okay? So I had a guy talking to me about a big deal yesterday. He's like, I got this big deal lined up and I already have a lender. Okay, well, that tells you what? Oh, man, I got a deal and I already have a lender. Those are go signs. Okay, they're like, okay, most of this deal is done. This probably represents, I don't know, another 5% of the transaction. And then there's going to be equity. Okay, you're going to need equity in the deal. Okay, which is going to be about 5% of the transaction. Now, it doesn't break down like that financially. Typically, it breaks down like this financially. You're going to get about 75% of the debt and 25% in cash. Okay, I want you guys to understand these two things. When I'm talking about 95 and 5, 90% the deal, 5% the debt, 5% the equity, probably even less than that. This is probably like
2%?
2%. And the other 3% is going to be your network and your confidence, okay? Which I could tell you, without confidence, none of this happened anyway. I've seen all this lined up and people walk away from deals. One of the biggest deals I ever did, the guy had the deal, had the money, had the equity, had the cash, had everything and the deal, and he didn't have confidence and let it go. I had the confidence. I went in and got the deal. That deal made me $200 million. I'll show it to you today. One deal, one decision. But I had more confidence than he had, but I wasn't picked. Somebody else was picked. They lacked the confidence to close the deal, and I went in and grabbed it, okay? Now, what does all this mean, okay? This is the importance of things. This is financially how the deal goes off. About 75% is going to come from a bank, 25% is going to come from equity. Neither of these, by the way, is defined as you. You're not the debt. So when I talk about debt, I'm talking about a loan. Okay, you're like, I don't want to get a loan. This is not a Dave Ramsey workshop where we're trying to get no loans. This is good debt, and you want to get a loan, right? Now, we don't use this much debt. I actually use like probably 65%, even as low as 50%, okay? And the rest would then be equity. You follow me? 65% from a bank. New York Community Bank gives me a loan for 65%, and the rest of it I would raise as equity. This does not have to be my money. Could be $1 of my money. Could be $100 of my money. 1,000. It could be all my money. Okay. Equity is not defined as your money. So those are the things we're going to break down today. None of this matters though if you don't have the deal. Okay. Because both these groups over here, the debt and the equity, the debt and the equity, this group and this group right here are going to want to know about what?
The deal.
The deal. And then they're going to want to know about this. Once they like the deal, they're going to ask about you. And that's your network. That's your trust. Okay? Now, if me and you've been rolling on 3 or 4 or 5 or 6 deals, we've done 23 different funds at Cardone Capital. Dude, that's my network. My network is my deal activity. It's my people that invest with me. This is why you guys want to bring investors in. This is why you want to use lenders. Okay, all the wealth on this planet has been created. Like if you look where all the wealth is stored, where the 1%ers, I'm talking about the mega wealth, the Vanguards, State Street, the BlackRocks. These guys all are located in the same block in New York City. Across the street from one another. They're networked, okay? They're doing deals together. They're trading deals. This is a consortium. It's the mafia, man. It's the mafia. It's the way people move money around this planet. And you guys got to join. You got to join the Cosa Nostra, okay? Now, here's the problem with joining the Cosa Nostra, the mafia, the BlackRocks, and the Vanguards and the straight streets. They're not inviting you, okay? The old adage, how do you get a seat at the table? Okay, well, you're either invited in, you buy your way in, or you serve water, okay? Now, I'm serving water to them. What does that mean? Because they didn't invite me in. I don't look like them. I don't talk like them. I'm a bit of a headline risk for them because I'm noisy. So they're like, yeah, we don't need to deal with Cardone. Okay, we're going to deal with Goldman and J.P. Morgan. We're going to deal with the other aristocrats. They're approved of, Country Club. They're all very kind of like, they all look a certain way. They have briefcases and shoes and a special car and belong to a certain club, and they all have a special language. So Grant Cardone's not part of that club. So what did I do? Okay, what I'm going to do is I'm going to serve water. What does serving water mean? It means I'm going to buy their properties. I'm going to grab their assets. Assets that they would sell and exchange. I'm going to consume those assets and then later trade them to them, okay? So what is that? That is the property, okay? Whoever controls the property really makes the rules. Like if you control the property and could get the debt and the equity, you would actually be able to start making the rules. And up until a few years ago, individuals couldn't do this. Today you can. Okay, the rules have all been changed. Barack Obama signed in the Jobs Act in 2004?
14.
No, 8, and then it was amended. I think it was 8, and then it was amended. Is that right, or am I wrong?
2012.
2012 is written. It was amended later in 14 that you can now when you find the right property or the right asset, could be a company, you can actually crowdfund that. Crowdfund. And when in the beginning with 3 or 4 or 5 people, like it's not even a legal document. It's virtually just, I'm gonna go with 3 or 4 or 5 of my friends. I found a piece of property. We're gonna raise money for it and buy deals. Okay, so the most important thing right now is what? Number one is that property. I'm gonna show you the rest of this stuff later. You're taking notes, you have a legal pad, okay? Tell your kids to leave you alone unless they're there to learn. Tell them, hey man, go eat your freaking cookies, go eat breakfast all day long. I know that's what they want you to do now.
Yeah.
And get a notepad and get ready because you're like, I can't find any good properties. I guarantee you right now, the room is saying, where's the deals? There's no deals, okay? All the headlines, there's a shortage of real estate. Okay, this is complete, it's ridiculous what what people are telling you. There's no real estate to buy. Nobody's selling their houses. That's right. So quit trying to buy houses that aren't being sold.
Right.
The deals are not in houses. This is not a house market. This is a multi-family rental market. This is the biggest opportunity of your lifetime, okay? Now, I'll tell you why here in a second. Actually, let me just do that now, and then I'm gonna show you a bunch of deals, okay? This is why right now is the time for you guys to pay attention. 7 reasons why right now is a once-in-a-lifetime opportunity. Number 1, there's a major correction underway right now. $2.4 trillion worth of debt is coming due. $800 billion is due this year. What does that mean? Okay, let's say I have a property. I bought a property. I'm giving you examples that are important, by the way. Let's say a guy bought a property in 2020 and he had a 3-year loan on it. 2023. The loan was due in December 23. The loan is due, okay? And let's say that loan was for $10 million and it's due. And let's say he paid $14 million when he bought this deal. He put $4 million down. He financed $10 million. And the loan at that time was 3%, okay? That loan is now due. This is a real situation on $800 billion, almost $1 trillion worth of debt. Not the property's value, the debt's value is now due. We're going to take this one deal at $10 million. Well, when the loan rates were 3%, those rates are now 7%. Okay, this loan is only good for about $7 million now, and the loan is due. Everybody follow what happened? Look, the rents are still coming in. They're still paying property taxes. The expenses on the property is still rented. It's 99% rented. It's a great property in a great location. Nothing changed on the property. Nothing. The tenants are paying their rent. The owner's the same owner, cool dude. Him and his wife bought a property in the right location. Everything was cool. And then what happened was this changed. This went, it's backwards, but it's inverted. But the rates basically 2x'd. Okay? The rates went up, which means the loan amount, not the property value. Okay? The loan amount is now can only support $7 million because the interest rates went up. So when interest rates go up, the amount of money that can be borrowed is less in order for the loan to be a good loan. Okay, just trust me on some of this if you don't understand it. So this guy's loan, I'm just showing you right now, this guy's loan now will only support $7 million, but he owes 10. Follow me? Where does the $3 million come from? The loan is due. It matured in December. Here it is in February, and he's like, what I got to do? What I need to do? You guys tracking this? You guys in the room? Is everybody tracking this? I know you, Jared, you are. Do you guys understand what happened in this situation? Because this is the asset you're looking for. I'm describing to you how to find the exact perfect asset right now. You're looking for something. Literally, I'm giving you a cheat sheet. Okay, in the first 23 minutes, I'm showing you, and then I'm going to show you deals. I'm showing you what you're looking for. You're not just driving your car, going to work every morning, unconscious, under some hypnotism. I'm going to work today. I'm going to work today. You got to wake up, man. I'm driving to work every day. This is all I'm doing. Where's the deal? Where's the deal? Where's the deal? Every city I go to, all I'm doing is looking at real estate the whole time. I'm looking out my window, right? Where's the deal? Where's the deal? When I was consulting car dealers and I was 28, 29, 30 years old, when I drove around, all I could see was two things. I see the dealer, oh, there's the car dealership. And I'd see the real estate. Because that's what you gotta look. But what are you looking for? Are you looking for a big house? You're in Dallas. I'm like, oh, I'm gonna go live next to I'm gonna go spend this weekend. We're gonna drive all the beautiful big homes. You're looking at the wrong stuff, folks. This is how you're gonna get the big home. You gotta figure out how to get the money, the score, the deal, the bag, before you look at, I'm gonna live in a palace one day. This is why people have things out of order, okay? I go to school, I get an education, let me earn some money, let me get good at it. Now, what am I gonna do with the money? Not, I'm gonna go buy a house now with the money. I'm gonna go buy a bigger car with the money. I'm gonna buy a bigger belt or a nicer belt, or I'm gonna go get some Gucci. It's time that you, this weekend, right now, change your mind about what you're looking for, okay? Not to get better at your job, you should do that, okay? Everybody should get better. You should master your job. And then in your free time, you should be looking to do with how do I invest in my mastery, okay? I'm a great waiter. I'm getting bigger tips. I'm a great masseuse. I'm making more money. I pay a lady $700 to give me a massage for a week or whatever, right? Or I go to the chiropractor guy and he gives me some work. What are they doing with the extra money? You saving it at the bank? Okay? Don't. What you want to do is take all the extra money you have, all of it, okay? And I am giving you financial advice right now.
You want to talk about the investment sequence?
All of it right now because of this correction that's underway. All of this garbage, this stuff is junk. Okay? It is junk. And take this, and dump it into this correction. And the correction's underway. I'll show you where to find the deals. Number two, Fannie Mae just came out with some regulations that says, and I'll show you a deal right now, 4 units up to $1.3 million, and I can put 5% down and buy that deal. 95% I would be given a loan by a group called Fannie Mae. I'll show you how to go get that deal, how to find that deal, how to fund that deal. But most importantly, I'm going to show you why some of those deals won't work and why some of them are traps. But I will show you how you could actually use great leverage on some of these deals and make explosive returns. I mean, phenomenal, like 8 and 10x returns on some of these 5% money downs. Like that deal right there would cost me $50,000 to buy a $1.3 million deal. $65,000. Now, whether it works or not, I'm not sure. We'd have to find the right deal, okay? Number three, there's what's called a DSCR rule. You have to understand what DCR is. I'm just giving you the primary things, and there was a basic change in the rule in the DCR that allows some of the rent that you're collecting, particularly in some of these smaller deals, to be considered as your income. This is a big, big game changer. What this means, that DSCR, is that let's say I have no income from a job, or let's say I earn $40,000 a year at a job, okay? Well, you're probably not qualified to buy anything in America. But there's a new rule that came out, DSCR, that says if I bought a piece of real estate that earned $40,000 a year, I could actually include some of this income as my income. I'm going to show you how to do bigger deals today and use friends and family and actually have to use none of your income to substantiate the loan. In fact, I'm going to show you how to do deals today where your credit score wouldn't even be involved. So guys, take notes, don't leave. Okay, I don't know how to tell you this. Just because you're here don't mean you're here. You know what I'm saying? Are you here right now? Okay? Because 4, there's a glut of inventory coming. A massive glut. I've been waiting for this glut for 3 years now. I've been waiting for it since COVID. I said, okay, COVID, it's going to happen now. Here's the big crash. Why do I want a big crash? Because the crash is where you make the cash. Okay? See, when there's a correction, okay, when there's corrections, okay, the correction in real estate is not like the stock market. Nobody really understands the value of the stock market. Why did NVIDIA go up $288 billion in one day? One day it's worth this. This is what my wife's saying. Well, what just happened? I said it went up a third of $1 trillion, one company in one day.
Right.
You guys don't even know how much money that is?
No.
One day it's this, and the next day, bam. What happened, man? a bunch of people got more confident about it. Okay, Bitcoin 6 months ago was, I don't know, $30,000, $28,000, just 6 months ago. Today it's worth $62,000. What happened? Okay, what happened? Well, things do happen that cause people to have more confidence in an asset class. Okay, well, in real estate,
A year ago, Bitcoin was 23.
23,000. Okay, it's $62,000.
Up 163%.
163%. So why? What changed? Did something actually change? Yeah, some things did change. Okay, there's ETFs on Bitcoin now. You actually have BlackRock, Vanguard, Fidelity, and Merrill Lynch offering pieces of paper for you to own Bitcoin. They've now made it easy for you to own Bitcoin. Problem is you got to go through a middleman. There ain't no middleman here. Like, I don't know why you guys keep feeding the beast, man. Like, if I'm going to own Bitcoin, I'm going to own Bitcoin. I'm not going to own Vanguard's Bitcoin. I'm done. I am done feeding the princess of this planet. So as long as you guys continue to participate in the scam, guess what? They're going to keep taking advantage of you. And it's not a scam, by the way. You already know what's happening. If you continue to eat bad food, well, guess what? Okay? No abs. Okay? All right. So watch what happens with real estate. Okay? These are values. This thing represents a value. Okay? This is the top. Okay? The top always goes up, by the way. It just keeps going up over the last 2,000 years. And then there's crashes. Okay? Why is there a crash? Let's say this property is worth $14 million right here, and the loan came due 3 years later, and now they can only borrow $7 million. Well, the debt in real estate, you want to write this down, the debt is what's driving this glut and this correction. The debt is due. When debt is due, or when they have what's called a debt problem or a financial crisis, go back to 2008. 2008, that was not actually a real estate crisis. The real estate crisis was preceded by a debt crisis. First, the debt crisis, always in real estate, it's always one thing. In stocks, you never know what it is. It could be a war, it could be a pandemic, it could be a failure of one company that takes the whole system down. Like, you never know what it is in the stock market. It's always something new, okay? But in real estate, the beautiful thing about real estate, only one thing wrecks the value of real estate. The debt is due, okay? So this deal, remember this deal this guy paid $14 million for? Now he can only get a loan for $7 million. The debt is what determines the value of the property. How much money I can go borrow on real estate. And unfortunately, this is why so many people don't invest in real estate, because it's a little heavier. It's heavier than me carrying cash. See, look, folks, the easier they make it for you to do, just understand this one simple rule in money. The easier it is to get and to hold and to trade, the worse it is for you. Okay? What's similar to this? Credit cards. You cannot tell me there's a more poisonous, victim-making product than a credit card. Here, it's free, man. Okay, again, it's free, right? Like, when somebody gives you something that's easy to get, my mama used to tell me this. We'd go to Las Vegas. She said, son, if they offer you something in this town, don't take it.
Fourth quarter of 2023, credit card debt was $1.129 trillion.
$1.1 trillion and growing. And by the way, we're at the highest interest rates on credit cards in the history of credit cards. Easy to get, hard to get rid of. Cash, easy to get, easy to get rid of. And easy to go down in value. Easy to print, by the way. Just print it forever. Okay. The thing about real estate is you can't print it, not very easily. Okay. So what else do we have that's easy to get and hard to get rid of? Ryan?
I don't have it.
STDs.
I do not have that.
Okay. Oh, you knew where I was going.
I knew where you were going. I do not have any of those.
Okay, so stocks, okay, stocks. They made stocks very easy for you to buy. In fact, you don't even have to buy all of Apple Computer today. You don't have to buy one share of Apple. You get to buy a fraction of Apple. They make it so easy. Put in $1 and then they give you fancy words. Dollar cost average. Put in $1 every month, dude. Okay, look and see how much money's in retirement accounts. Look how easy they made it for you to put money into a retirement account. I'm guessing $38 trillion.
37.8 trillion.
Okay, close. 38 trillion. And I want
26.3 was in employer-sponsored plans, and 11.5 is in IRAs.
Okay, so I'm going to take 38 trillion. I'm going to just show you how much money is being made by these companies. 38 trillion. I don't know if I can do this actually. There's 38 billion right there. Times 0.015. Okay, what they make on that every year is $500 billion in fees. To keep your money. $38 trillion has gone into pension funds. 38 trillion. They make $580 billion every single year.
Wow.
Consider that this is a 30-year term. Guy started his retirement account when he was 30. He's going to get out somewhere in his 60s. Okay, taxes here are about 19% today. 30 years from now, the way we're printing money, these taxes could be 59%. Nobody, and I mean nobody, this will get me scorched on the internet, should be an IRA. Why? Why would you not just want to pay your taxes right now when they're lower? Why would you wait? Does anybody here, just throw it in the chat, does anybody think in the year 2062 taxes will be lower in America than they are today? Does anybody believe? No, 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 no. Yes, because you'd be president. No, 30 years, I will not be the president. I'll have dementia just like Joe Biden. All right, so why would you do that? Okay, now let me ask you something. The reason you guys are saving your money in cash, how much is in savings account? Okay, you guys have more of this than you think. You're like, I got $5,000 in a savings account. It shouldn't be in a savings account. $5,000 should be in a piece of real estate. $5,000 can buy today can buy a $100,000 piece of real estate. That cash flows, by the way. I wouldn't have $5,000 sitting anywhere. Now, what I do have for my emergency is the cash flow from the real estate. You're like, where's your emergency fund coming? From the cash flow from the real estate, not from the cash that's going down in value. Who thinks the value of the U.S. dollar will go down in value over the next 20 or 30 years?
$802 billion as of April of 2023.
So there's $800 billion, almost $1 trillion just sitting in cash. I would expect it's way more than that.
Is that just in the U.S.?
Yeah, it's got to be more than that. Okay.
That's just in the U.S.
Okay, so
$802 billion just in the U.S.
No, it's more than that. Okay, it's going to be way more than that. But the point is, we're sitting on cash that doesn't work. You're buying stocks that you don't know anything about. You're in little scams called IRAs and 401ks. I mean, the trick is, look, if they're using a what's it called, acronym, they're probably ripping you off, dude. Like the acronyms all FBI, IRS, 401, IRA. Like if you're using an acronym, it's typically something going on. What you want is something very real, right? Remember this, okay? When this happens, this guy's got to trade his property because it'll only support $7 million worth of debt. That's what's happening right now. This happened in 1996, it happened in 2008, and it's happening right now. Debt becomes a problem. And when the debt comes due, the values go down, okay? The value goes down because the interest rates exploded in a very short period of time. And it's going to create a glut of inventory. And I'm going to show you where to find that inventory right now. Also, number 5, Biden is providing first-time buyers. Is it first time?
Yeah.
First-time buyers a $25,000 credit to start getting activity into these units that cash flow. Not single family, but units that cash flow. Number 6, interest rates are moving around right now like crazy, okay? They were 3% what was that?
2 years ago?
2 years ago? 24 months ago. In 24 months ago, they were 3%. Today, they're 7 and north of that. I know some people borrowing money at 8, 9, 10, 11%. Means their deals have negative cash flow today because of that interest rate movement. Now, I predict that in the next 24 months, interest rates will be back to 3%, okay? So when interest rates, remember this guy, his loans due right now is $7 million. He owes $10 million. He's going to lose $3 million. This is either going to go to the bank, okay, or he's going to tap out right now. There's $800 billion of this, so there's no shortage of it. I just need to show you where to find it. First, I need to wake you up. Second thing I need to say, don't look at that. And third thing is, look at these, okay? And you'll know what today, when you leave today, what to look for, okay? This $7 million is due, and this is 2024. It's due right now. By 26, Okay, I think that these rates by 26. Let me put 26 right here. I'm gonna change this up a little bit. Okay, let's put 26 right here. I think these rates will be 3% again. By what do we got? All of this year? Yeah, I think by the first year of the next administration, we'll probably be at a 3% interest rate again. If that happens, if I'm right, this piece of property right here will be worth $18 million, not the 14 this guy paid, not the 7 that you got a loan for, and somebody's going to end up making somewhere between $4 million and $6 million on this piece of property, which would probably be like a 4x return on the investment. Massive opportunity right here, a short window. So today, right now, congratulate yourself for being here. This is going to be the ride of your life if you pay attention to me. Number 7, and this is a big deal going on right now, there's a lack of what's called yield from real estate, okay? This real estate that you're buying right now, even though you would be borrowing money at 7% today, okay, it still should cash flow somewhere between 6 and 8%, providing you with cash flow. And if you guys don't know, man, I really believe cash flow is a very, very important thing. You see my boy over here rocking his hoodie. I don't know if you guys can get to the hoodie or not. Okay, but cash flow is everything, folks. As long as you got positive cash flow, you're not going out of business. As long as you have enough cash flow, you're not going to get rid of that real estate. The reason this guy's got to sell this real estate right now is because he doesn't have the $3 million and his cash flow went negative because the interest rates went up, all right? Okay, so where do we find some deals? Let's go to my computer, Johnny. I'm going to show you guys where to find deals. For all of you guys who think there's no deals out there, I'll show you a deal right now. I bought this deal in you remember what year I bought this, Jared?
I think it's 96.
I would buy this piece of real estate today if I was in California and wanted 48 units. I bought this years ago. I know this deal works. It works right now today. You're going to make money on this deal. It's going to be positive cash flow. And then all this is long-term stuff, by the way. This is long-term going down in value. Stocks, who knows what they're going to do? I have no clue. 50% of all Americans own no stocks. Less than maybe 5% of the wealthiest people on the planet control the entire stock market. It's a beneficiary to the super wealthy and the big funds, not to regular everyday people. Most millionaires have some exposure to real estate, but 80% of all millionaires have money invested. Did I say million? Yeah. 80% of all millionaires have some money or a lot of money invested in real estate that cash flows. So we know
1998.
1998, I bought this piece of real estate, okay? I bought it for $4 million.
4.325.
Yeah. I'm going to do this again, okay? This is 1990, what, 96?
96.
I bought this piece of real estate for $1.9 million.
Sorry, 98.
$1 million, yeah, $1 million, 98, okay? When did I sell it, Jared? 2000?
2002 it was sold.
Yeah.
Your loan in 98 was 1.7 million.
Yeah. What did I sell it for?
4.325.
I sold it for $4,325,000, and I made whatever the difference is, $3 million, yeah, $2.4 million, and had a positive cash flow. Okay. Correction happens in, I guess the next correction would be 2008. Yeah. Okay. Properties probably goes back down to $3 million. You should have bought it right there. Okay. It was a very short period of time, by the way. Apartments didn't get hammered the way single-family houses did, but when all the debt got squeezed out of the market in 2008, nobody could pay their loans because 40 million people took on loans, no documentary, what do they call it? No doc loans?
Stated income.
Stated income. You know what stated income means? I made shit up, but they call it stated income. You state the income. Basically says you lie about your income. Okay. Well, this property went from $4.3 million probably down to $3 million. You should have bought it right here. What's it worth today?
There was a loan taken out on it in 2021 for $6.4 million.
So somebody lent $2 million more on it, which means that property's probably worth $10 million right there. But I can tell you right now, if the rents, how much are the rents here? Just going to do a little math for you guys. I'm looking at this deal right now. Nothing's available. These rents got to be $2,200, $2,800.
1,900.
Okay. So I'm gonna tell you what this property's worth. So you guys should be able to do this, by the way. Everybody here will know how to do this.
It says 1,900 to 2,300.
Yeah, I'm gonna go 2,200. Okay, 48 units times $2,200 times 12 times 0.95. That is the math on this deal. Times 0.65. Okay, 48 units times the monthly rent times 12 months. You know what that means? Times the occupancy. That's probably what it is right now. It's probably 95 on this property because it always was 95 when I was there. The place was unbelievable. And I think you can operate this thing for 35% expenses. 35% expenses means I keep 65, so that's the number I'm interested in.
18.5.
Well, so that's it's 782 is your NOI. Is that what you want?
$782,000 is my NOI times, and I want 65% of that.
Well, no, that is 60.
Oh, that is, okay. So that's the 782 divided by 782. Give me divided by 5. $15,640,000. What did I say it was worth over here?
10.
No, I said 10 million is the loan. Oh, no, I said 10 million.
You said it, yeah.
I said 10 million. You're right. It's worth $14 million. So I'm just telling you, you guys could go buy this deal. If you could buy this deal for $10 million today, you'd make $4 million. Oh, God, where am I going to get the money? Don't worry about the money, man. There's so much money on this planet, it is endless. Mm-hmm. Remember, 90% of this deal is about the product. Now, this is a deal I bought once, made money on, and I would go back and buy today if I was in California and so inclined to invest in a 48-unit deal. There's one deal, but it's not even for sale today, so let's forget about it. It just happened to be in my computer, okay? Let me go to another deal, okay? I'm going to go to deals. Here's some favorites that I've saved on a product called LoopNet, owned by a company called CoStar. LoopNet is the free version of CoStar. It's where all the junk is. These are not the best deals. However, in times where things are problematic, people will tend to start putting assets out everywhere, okay? So you can actually today find good assets on LoopNet. When the market's hot, you're not gonna find good assets there. When the market's cold, you can find assets, you can find them anywhere. You can find them on a billboard, okay? Because now people are frantic and trying to sell their assets, okay? I'm gonna go to Mobile, Alabama first. One of the markets I like, I'll give you a whole list: Texas, Florida, Alabama, Arizona, anything Florida, by the way, North Carolina, South Carolina, parts of Georgia I like, some parts I hate.
Nashville,
Clarksville, what's that other ville? Chattanooga. There's another one up there too.
Huntsville,
Murfreesboro.
Huntsville, I love Huntsville. No. Yeah, I like that.
Murfreesboro,
Murfreesboro, okay?
Murfreesboro.
You got to be a redneck to even say that. I don't like Memphis. Never have liked Memphis, but parts of Memphis I could buy. Because if you have part of a city that's bad, then you're going to have a strong part of that city that's got a wall around it, okay, to protect it, okay? So here's a deal in Mobile, Alabama. I put this in this morning. This is an active deal right now. Johnny, I don't know if they can see this. 304 Michigan Avenue. This deal, cute little deal, charming. What do you call this? Like a cottage? Mm-hmm. Look at this. Renovated 3 years ago. Oh, wow. There's those 3 years I just talked about. Okay. Updated units, vinyl plank floors, neutral. This guy bought this, 10 units, was renovated within the last 3 years. Can you guys find out when this traded last? Are you looking for it on CoStar? It has $87,000 of gross per year. Estimated rental from long-term leases per unit is between $7 and $850. Okay. Now this deal, anybody in Mobile, Huntsville, anywhere, that part of the world?
January of 2026.
That's when it traded.
I'm sorry, January 26th of 2023. They took out a new loan at 6.3%.
Short-term loan.
Sold last. Let's see, standalone mortgage. It was sold last January 26th. The loan amount was $392,000.
That's the loan on the deal. See, I'm going in the deal backwards. I'm not worried about the price of it. They want $649 right now, by the way, $650,000.
75% of that would be 522
Of this?
of the loan.
Yeah.
Of the loan. I was just backing into it.
Really? Is that what it is?
Well, if the loan's 392, 75% of that is 522.
What?
I'm just trying to figure out what they paid for it last.
Oh, so Ryan's saying they paid 522, that it was valued at 522 in order for them to qualify for that 75% loan, which is good. He went in backwards. So he's saying, hey, this is probably what they paid. Now, we can get the documents. Here's another beautiful thing about real estate that you cannot find in stocks is, dude, when did it trade last? What's the insider trading? I want to know what you paid for the damn thing. Imagine if you could buy a company for a guy bought the stock for $200, or the company is worth $200, but you could buy it for $100. That's what you're doing here. Literally in real estate, you have documentation on everything, okay? Now this is 10 units. And with a Fannie Mae deal today, you cannot do the 5% down, but you could, this loan could be bought today for $150,000 down. Okay, you'd finance $400,000. Okay, and you'd have basically 10 units that pay $850 a month. That's what it says the rents are. Does that seem affordable?
$87,000 per year is gross rent.
Okay. $850 seems very affordable.
Yeah.
The thing's cute, man.
It just says estimated rental for long-term leasing per unit is between $700 and $850.
Yeah, so $850 times 12 times how many units? 10. I'm sorry, 10 units. 10 times $850
$8,500 per month.
Times $850 times 12.
$102 per year.
Times what can I operate in that market for? You think 70%, 30%? Yeah, 25%.
Yeah.
25% expenses.
You're
Okay.
self-manage.
I'm going to collect all the rent, by the way, on this deal. It's a small deal. I'm going to keep it full all the time. Times
0.70.
0.770. Divided by 0.06. I'd buy this thing right now.
1.1.
You could pay $1.1 million for this thing and it still makes sense. This deal's a steal right here. Okay? You're going to make 8% on your money right now. This $400,000 loan is going to cost you, you're like, man, how do you know all this? Well, you're going to get to know it too. This loan is going to cost you about 7 right now, Ryan?
Yep.
825. So $33,000 a year. That's the loan.
That's P&I.
Okay. What did we say it was going to make, Ryan? This is the P&I.
It was like 71.
It's going to make 71,000 NOI.
Yep.
So the deal's going to make 38,000 bucks a year. Cash flow, free. Okay, 38,000, and you put $150,000 down. Now you guys are like, okay, is that a good deal or not? 38 divided by 150,000. Yeah, it's a 25% return on your investment. Where are you guys earning 25% a year?
In the drug trade.
Yeah, where are you earning 25%? You're earning 1% at the bank right now. You're paying 25% on your Visa card. The BMW you bought ain't making that. You guys can figure out how to buy a BMW. You can figure out how to come up with 150 grand. How am I going to do that? Well, what you're going to do is you're going to go to 4 investors and say, hey, I need 4 of you guys to put together. I'm going to put in 50, and 3 more people are going to put in 50. Okay? You need $150,000. We already have the asset. Show the asset on a split screen, Johnny. Can you show it over there? Okay. Guys, $150,000 buys this for a 10-unit deal. If I got to go live in the damn thing and make sure, I'll go put a tent out front and make sure people pay their rent.
Yep.
That's how Ryan got started. That's how I got started, dude. Like, I'm like, whatever I got to do to collect the rent. I did my first deal. I went, picked up the rent every month from this chick. I'm like, pay me. You good? We good? You need anything?
Right.
Give me my damn check. Okay? You put in 50. Let's say you don't have any money. You get 3 guys to put in 50,000. Okay, we already know what the deal is going to pay us. The deal is going to pay us 25% on the investment. Don't worry about your money first. Worry about the deal first, and then you'll find the money. Okay? I know I can get a loan on it. You're like, how do I know I'm going to get a loan? I promise you I can get you a loan on this deal. A bank will lend you money at 7%. That's what they're in the business of doing. If you put $150,000 down, you will get a loan. But what if I have bad credit? Your credit will not even be considered on this loan. Your experience managing real estate will be considered more than your credit will. I don't have any experience. Good. We'll show you how to get the experience. Part of what you're doing today is getting experience learning real estate. This is part of your experience. You're learning the game. So you get 3 guys to give you 50 grand, and you tell those 3 guys, I'll pay you 10% a year. That's a good return. That's not good enough for you? I'll pay you 12% a year. That's not good enough for you? I can pay you 15% a year. 15% a year, and by the way, the deal is going to do 25, so you're going to keep 10%, $15,000 a year, and you didn't invest anything in it. And then what you're going to do is you're going to go in this property and you're going to go raise those rents from $850 to $1,050. Now watch what happens now. You're making money and they're making money. Your investors are making money. You're cool. There's cash flow. The cash flow, all you're doing is collecting the rents. You're making 15 grand. Now you're going to do this. You're going to pay them 15%, and everything above that you get to keep because you are the sheriff of this new town called 304 Michigan Avenue, which probably you're going to probably change the name of it to New Effing Sheriff in Town. Okay? Okay? Just call me cash flow. All right? So what we're going to do is we're going to change those rents
200.
over the next 12 months, $200. 10 units, 200 times 12. That's $24,000 in new money. New money. Okay, guess who gets to keep that? You get to keep that. Because the deal you made, okay, now you're making $39,000 a year on one deal with no money. The return is infinite, immeasurable. It makes Bitcoin look like a joke. Okay, oh, also forgot to tell you, what's the value of the property now? You want to write this down. The value of the property is determined by its rents. The value of the property is determined by its rents. The more rental income it collects, the more valuable the asset is. Why? Because the more rent it collects, the more debt it can service. Okay, there's one deal, okay? Anybody interested in this deal in Mobile, Alabama? All I want is a finder's fee on it. Send me a little nibble. Anybody, by the way, let me just say this. Any of you guys that are in our club, we have a club. It's $25,000 a year. It's for investors that are serious. Any of you guys that do this in the club and bring this deal to the club, I'll bet you I can raise the money for this deal in 4 minutes. 3 times a year, we have a meeting here in our offices where people come in and pitch their deals. Guarantee you. Do you think this deal would be pitched?
I do.
Do we have a shot of Ryan so everybody knows who Ryan is?
They do.
Yeah.
Right here.
I haven't seen Ryan, though. Let me see what he looks like over there. Look in the camera, Ryan. Tell everybody hello.
Hey, guys. How are you?
Okay, and then we got Jared Glant over here. Let's take a side shot to Jared, okay? Jared Glant. Jared works with me on this training. It's a weekend. We're doing this with you guys. This is my team. We're here to help you guys. Any of you that have questions during the day, did they already do their calls? Everybody did their calls already?
Yeah.
Okay. Bring this to the club, and this is the deal based on what I'm looking at right now. I don't know about the neighborhood. Look, I don't know about the police reports. I don't know about the tenants. I don't know a lot of stuff I don't know yet. I don't know the location on this deal, but I'm looking at this saying, cute, cheap, and it works. And it works at their asking price. Now, what we don't know is why they're selling it, and I'd want to find that out. Did you ever find out what they paid for it?
It was
What's the address, Jared?
304 Michigan. Was it Michigan Avenue?
Yeah.
Avenue in
Mobile, Alabama, 304 multifamily. Let's see, on CoStar it says for sale, $649, $64,000 per unit. Let me see, it doesn't show.
It just says loan amount in January of 2023 that there was a $392,000 loan placed on it.
Interesting. It says sold price in March of 22 for $350, $31,000 per unit.
Yep.
I mean, dude, this is.
But it's a rehab. It's a rehab job because when you look at if you Google the address on the street, you can see that it looks a little.
Oh yeah,
Looks a little banged up.
Yeah.
They did some stuff to it.
Yeah, but it's cute, bro.
Yeah.
It's affordable. It's Now, I don't know if the rents can be raised there, but if they can be, what you're looking for is deals, and they're going to be out there. This is not only a deal. I'll show you more deals. You're looking for deals where there is the potential for rent growth, okay? So like if I go back out here to LoopNet, and I'm just showing you guys LoopNet because it's available to everyone. Here's another deal on. I'm going to Pennsylvania. Let me just back out. I want to show you guys how I found this to start with. Not that it really matters to anybody, but I want to show you when I go in. Johnny, go ahead and go here, or whoever's on the. You showing me? So I just go in here and enter a property type, multifamily project, property, and pick a city. Give me a city. Anybody in the room? In the chat, give me a city. First city I see, I'm going to put up.
Wisconsin.
Okay.
Scottsdale.
Where in Wisconsin?
Lincoln, Nebraska.
Lincoln, Nebraska.
Lincoln.
Nebraska. Now I probably should open this up. So you got a little confined, right? You're a little selfish. Oh, juicy. I'm gonna put some filters on here. I don't want to look at all this other stuff. I just want to look at multifamily. Okay, I got 3 deals. Now there's a way more than 3 deals in this market. These are just 3 deals on
certain criteria, unit criteria.
in Lincoln. Okay, now watch. And I only have like 2 to 4 units here. This is 2 units, $249,000. Now that makes that deal in Mobile look cheap, right?
Does.
Why does it make the deal in Mobile look cheap? And it doesn't mean, by the way, it doesn't mean just because it's cheaper per unit that it's better. Okay, here's the deal. Look at this deal. 15 units, $1.5 million. This is a cute deal. Obviously, this is a big house that was converted into 10 units. I lived in a place like this when I was a kid. I was in leaving high school, going to college. I lived in a place like this. You know, half the people in there smoking weed. Jared, I know that you lived in a room like this where you shared with a girl and you guys, you know, traded services and fluids and you know, all kind of stuff, right? And y'all split the rent. There's all kind of benefits. This is a nice looking deal though. Let's see here, 157,000 a unit. Let's see what the rents are on this. This is so random. I'm just doing this. 10 units, B, building class B, 4 stories, built in 1926, rehabbed in 2022. Oh, loans due. Okay, any loan done between 20, 21, and 22, that's the sweet spot. Maybe even late 19. Let's see here. What are the rents on this little beast? Can you see this deal, Jared?
Let me just see here.
It was assessed for $600,000. The land's worth $70,000, so there's going to be some good depreciation here.
What's the address?
12th and G Apartments, 810 South 12th Street. 810 South 12th Street. Again, this is a random city. Somebody said Lincoln, Nebraska. So
It says 800.
Says it was they paid 800.
2 vacant units left. $800 studio.
Oh, I thought you were going to tell me how much it sold for.
Oh, I can tell you that. Loan amount in Jan of 2022 is $511,000. Sale price in 2021, April of 21 of $375,000.
3,750,000.
$375K.
375,000.
Wow.
Yeah.
And now they want how much?
1.57.
1.57 million. Okay, that doesn't bother me. What I want to know is why are you selling it right now? This is the worst, biggest correction,
It's a rehab.
biggest glut. Why now? But even if it's a rehab, oh, that's our business plan. Yeah, but why right now, dude? Why don't you just keep it? Our partners don't like each other. Okay, why don't y'all like each other right now? Because if everything was going good, you guys would like each other. Why don't you like each other? Because the damn loans due right now. We fighting. 2 guys want to get rid of it, and 1 guy wants to keep it. Oh, really? What about the loans due? Well, our loan is due. How much is the loan?
It looks like they might have 2 loans on here.
Of course they do, because they got a rehab.
495 was the initial loan amount.
They got a $495,000 loan.
Plus another loan for $511.
And another $511,000. They would have $1 million worth of debt due right now.
Wow.
And all of a sudden this thing went to 7%. Somebody's going to steal this deal. You're going to pay less than $1 million for this deal, not the 1.57, because the guy's got pressure. Write this down. You have to have urgency. You have to have pressure for the price to be compromised. You cannot get a compromised price. You cannot find a compromised seller. You cannot find a distressed owner without some urgency to sell. Okay? So we're not looking for distressed properties. You want to write this down. We're not looking for distressed properties. We're looking for distressed owners. Typically a partnership that was done in 2019 or 2020. They're upset with each other because something happened. The plan did not come to fruition. All rehab jobs, every rehab job, 100%. Of course, there's exceptions to this, but I'm saying all as in almost every rehab job will have short-term debt. Why would I have short-term debt on a rehab job? Because I was going to rehab it, fix it, and either put new loans on it or sell it. All rehab jobs are suspect, meaning opportunities for you to go crack somebody. Okay? New note, the money at this point in the cycle, your money will be made on the purchase. It will be made the day you buy it. Okay? You will know the day you buy it. Somebody's going to make 500 grand on this deal the day they buy it, only because if the interest rates were 3%, this deal would sell for $1.5 million. But somebody's going to buy it for $1 million because it will not support. Let me just see what it supports. Okay, guys, don't worry about it. I know you're sitting here saying, man, how do I keep up with this guy? All you got to do is stay here. Just stay with me. Don't leave. Don't go take a leak. Don't go grab something to eat. Don't quit mentally. Don't say, shit, I'll never learn this. You will learn this.
Yep.
Just stay with me, okay? This is not, you're not learning how to fly a plane, even though you would learn how to fly a plane if you just don't leave the simulator. Mm-hmm. Is that right, Ryan?
For sure.
It's about hours, man.
It's
how
about
much time are you going to put in? Huh?
Takeoff and landings. Takeoff and landings.
Takeoff and landings.
Underwriting deals.
Yeah,
Yep.
underwriting deals. Don't quit right now. Oh, I'm a woman. I don't understand math. Don't do that to yourself. Stay with me, okay? You are a woman, and I'm going to show you the math over and over and over again. So it's simple. This is not complicated. This is not trigonometry or algebra. There's a reason behind my madness here, okay? $800 rents, $850 rents, I'm going to put times, how many units here? 10?
10.
10 times 12 times 0.92. I just made it up. Times 0.70, $65,000 of NOI divided by 0.06. And this property is worth $1 million today. When the interest rates go to back 3%, this property is worth $1.5 million overnight. It's cute. Is the location good? I don't know. I've never been to Nebraska. I mean, I've never been to Lincoln, Nebraska. I've been to Omaha. Okay, so I'm just showing you deals right now. For all of you, I'm trying to crash this idea that you have that there's no properties. I've showed you guys pick a city, and I'm going to give you a deal. And I guarantee you could drop me in any city in America. I was already challenged to do this once. Drop me off in any city in America, and I'll bet you I can find a deal that we would make as a partnership, we'd make $1 million on. Okay, let me go back to another deal.
But Grant, that's a perfect example though of what you're talking about. You just backed into the number.
Yeah.
It's worth about what the debt, if Jared's debt number was correct.
Yeah.
It's worth about the debt.
Yeah.
And then the next thing that you always do is it's worth $1 million divided by the number of units, which is about 100 grand. And then the rents are about 850 to 900. So like some of these metrics that you always go over.
Yeah, yeah.
Like when people really look at the deal and the debt, their timing was just off.
That's it. It's got nothing to do with the property. The property is not distressed. The property is a good property. The buyers, the owners are distressed. The debt is distressed. Let me just show you how big a market we're talking about here. Okay. New York.
That's actually a cute deal. I like
community.
that.
It's a very cute deal. Now, Grant, why don't you go buy it? I'm not buying these kind of deals. It's not my business plan. Okay, if you guys didn't see this week, massive. I've been talking about this. I don't know how many of you see me in the news recently on Fox News, Fox Business. I've been quoted by Forbes, CNBC, shit, all over the place, man. Crazy. I said there'll be 300 bank failures in America. There'll be pension funds that fail in this cycle. There'll be equity funds that fail, and there'll be hundreds of syndicators that go out of business. We've already seen a bunch of syndicators fail. Mm-hmm. Syndicators are people that raise money for real estate deals. It happened in Texas. How much did they lose? $4 billion?
At least.
What was that, Tides Group or whatever?
Oh, Tides, I mean, they had 30,000 units.
Yeah.
It's all being reworked right now.
Yeah, so this happened. This week, we borrowed money from these people for it. New York Community Bank, these are friends of mine.
We still do.
When are those loans due?
Let me look. It's
I've had banks fail.
5 years.
I've had banks fail underneath me. I had $52 million worth of debt in 2000.
Washington Mutual?
No, it was San Diego National Bank. A regional bank, San Diego National Bank. I owed them $52 million, all real estate loans. They were doing real estate loans all over the country. They got extremely aggressive. I never took their aggressiveness, meaning I never over-leveraged my real estate. The bank collapsed. When the bank collapsed, a new bank came in. That was the bailout. What was that called back in 2008? We thought that was a big bailout. It was a joke.
Yeah.
Too big to fail.
Yeah.
Okay, they bailed out all the banks, and everybody was like, "Oh my God, man, I can't believe we're doing this." It was nothing compared to what we spent on COVID.
What was that? What was it like?
The
10
next
billion or
event will
something
be
like that?
the next event will be bigger than the COVID event. So yeah, it was massive, but it was nothing compared to what we've done now, right? So that bank failed. New bank came in, and new bank said, "Grant, your loan's due."
Huh? 700 billion.
700 billion is what
Was
we
the TARP?
did.
TARP.
TARP. It was called TARP. TARP stood
Troubled
for
Asset Relief Program.
Troubled Asset Relief Program. So what they did was the bank failed. They gave money to another guy to come in and take the bank, and then told the bank any losses you have over the first 3 years will be absorbed by the federal government, which is you, the taxpayer. See, you guys are all invested in real estate right now. You just don't know it. Every time you leave money in a cash account at Wells Fargo or Bank of America, you understand most of this money ends up being invested in somebody's real estate transaction. You just don't get any of the benefits. For every one of you that pays State Farm, Allstate, Prudential, New York Life, MetLife, any of these insurance companies, do you know most of their, you guys that send your kids to Harvard and Pennsylvania State and all these big Ivy League schools, most of that money ends up in real estate, okay? Did you know that Harvard University is floating $1.6 billion worth of debt right now? High interest, 8 or 9% debt because they need funding right now. Why? Because their real estate's illiquid. They can't get rid of their real estate holdings. So this is happening to Blackstone. It's happening to companies like Starwood. Big, giant pension funds are having this problem. Here's an example. New York City Bank stock plummets after bank finds material weaknesses.
That material weaknesses is a heavy word.
Okay, it dumped the CEO. Wall Street is worried about look up what their how much have they put out in loans?
Their AUM.
Yeah. The stock's at a all-time low. Okay, they are heavy players in real estate. What's their loan asset size?
Okay.
They're $116
New York loan
billion
totaling
company.
loans nationwide 1.4 million accounts, 382 billion in unpaid principal balances.
Okay. Okay.
84 billion dollar.
This is one company at one moment. Now you guys are like, man, this stuff is
Well, the stock price from January is down almost 70%.
$382 billion in loans they have right now. Okay, you understand, guys? Most of these loans were done at 3 to 4%. They lent money to guys like me at 3 or 4%. These loans are now due, and these loans are now going to be 7 or 8%. These loans are due. Okay, now you can't assume that all of them are bad loans. They're not. But some of them, some of the operators, if they could lend out this much money, you understand, money is determined based on the rate. When the rate went up, and nobody knew this was going to happen, the Fed said in June of 2020, we're not raising interest rates, and then raised interest rates 11 times.
Faster than ever in history.
Ever in the history of planet Earth, okay? Now what happens? When these loans are due at 7 or 8%, these guys cannot pay back the 382. Okay, so let me just do some math here. 382 times 0.03. Let me see how I would do this. Is 1146. Divide that by 0.07. So let me see how that's going to.
So this said they tacked on $2.4 billion loss via goodwill non-cash impairment charge to the $260 million fourth quarter shortfall it reported in January.
Okay, hold on a second. You're messing me up.
Sorry.
What are you trying to do, Graham?
I'm trying to figure out what so this is due $1.6 billion a year.
Okay.
is due for principal and interest.
Okay.
So 1.6 billion is due on this at 3%.
Okay.
Okay, now that's what's due in principal and interest. Now I'm going to take the 1632 and divide by 0.0825. Yeah,
Half.
this new thing is 191 billion. Those loans now are only worth, that's exactly what happens, okay? So the principal and interest on 3 to 4% money, let's say 3% money, is $1.6 billion. Yeah, $1.6 billion. What's 4% of this, or 3% of this number?
Times
It'd be 382.
3%.
It'd be 16 billion. 16 billion. It's $16 billion. Okay.
It looks like 11.
11.
Yeah, 11.2 billion.
Yeah.
Okay. 11. So let's just round it to $12 billion. This is the principal and in dollars. Okay. If that loan supports 12 billion. Okay. Now when I go to 7 or 8%, that thing's going to explode to like $20 billion. Okay, so it can't support that. I got to get back to $12 billion worth of principal and interest, but the interest rate is 7 or 8%. So the loan proceeds, these are loan proceeds, this is what's outstanding, has to go down, and it's going to go down to somewhere under 200 billion. New York Community Bank is probably has $182 billion of loans on their books. Too much. And let me tell you the other problem here, okay, is when one loan value comes down and there's one failure, guess what happens to the rest of the dominoes at New York Community Bank?
They got to mark them all.
They got to call marking them all down. They're going to have to start
Mark to market.
Yep.
Now they are out technical default with the banking regulation because they don't have enough cash sitting in
balance
their
sheet.
accounts to support this problem. You're like, dude, too complicated. Good. There's an opportunity for you. For what though? These people didn't lend any money on a single family home, so quit looking for them. That's not what they lent money on, folks. They lent money on hotels, office buildings, apartment deals, properties like we buy. That's what you have to be looking at. The most important thing I'm trying to get through your head today is you have to start looking. It's like fishing, man, okay? Jared, you fish.
Yeah.
How do you find out what a fish are, Jared?
You follow the birds.
Do you?
Yeah.
What, do you follow the birds?
Yeah.
What else? What's another trick?
Put a bunch of lines in the water.
What's another trick?
Chum the water.
Chum the water. What's another trick?
You just know where to
Try
go.
different kinds of bait.
Try different kinds of bait. You guys ever follow the boats, the other boats?
Oh yeah, that is something that they do. Yes.
I'm like, goddamn. I'm not a fisherman, but I'm like, where are the other fishermen? We were out last year. We were on a yacht. And we're in the south of France, and we're looking for a nice place to park and spend the day. And the captain's like, oh, we're gonna go over here, and I'm like, bro, why don't you just go right there? And he's like, what's over there? I said, Jeff Bezos is right there, the king of Saudi Arabia is right there, and the Fertitta brothers are right there, bro. He's like, no, I got a better place. Ain't no fucking chance in your life you got a better goddamn place than the Fertitta brothers, the king of Saudi Arabia, and Jeff Bezos. Okay, stop what you're doing, turn around, and follow the money.
Right.
Follow the boats. Follow the birds. Okay. Follow the deal flow. Where are the deals? You guys got to start looking. Learn how to look. This is what they don't teach you in college. They teach you how to get a job, become a plumber. Dude, stop doing this. Follow the possibility. Follow the opportunity. And right now, the opportunity, this correction that's underway, is in. And the thing you should be focused on right now is multi-family real estate. 4 units, 10 units, 40 units, 404 units, like as big as you can go. And if you find a deal too big for you, I'll do the deal with you if I like it, okay? So, okay, this is what we're talking about. Let's go to page in your book. Do they have a book?
Yeah.
Okay, go to page 3 in your book. New Fannie Mae regulations. 2, 3, and 4 units. You can put 5% down. Mm-hmm. When are we doing questions? When do we go to an exercise here?
After we get through a few of these slides.
Owner occupied. You got to stay in the property within 60 days of close, and you got to stay there for 12 months. You have to stay in it 10 months. Okay, there are ways to get around that. Number 3, max loan. of $1.3 million, 396. 4, FHA rule, 75% of the rental income must exceed the mortgage has been eliminated. I don't even know why that's valuable anymore, okay? Now, why do I like real estate better than stocks, cash, IRAs, 401, gold and silver, crypto, or owning your own business? Why do I like it? Why do I believe real estate? By the way, if you don't believe this, the only one that you can challenge with me is number 7. And you'll never win that argument. You guys have to become convinced. If you're going to make the leap, if you're going to take the real estate thing, let me just find out in the chat, how many of you are really serious? On a scale from 1 to 10, 10 is you're a freaking maniac. You're me. You're all real estate, forever hold. You're 30, 40 years. You're thinking about passing this on to your kids. You're a 10. You're 8, you're very serious. 6, you're slightly serious. And below that, you're just like, you're curious. Put where you're rated right now. And I need everybody to rate. Number.
Oh.
Yeah, you guys are all 10s. Okay, no, you guys are 20. You guys ain't 20s. Stop it. I'm a 20. And I still got other business I got to operate. I've still got to be a husband. I still got to be a wife. I still got to be a father. I still got to be a friend. I still got to be, I still got to go to birthday parties. And Johnny, happy birthday. I still got to do stuff. So I still got to take care of my health. So even being a 10 is almost impossible. So y'all need to get more realistic with your thinking. Like, yeah, you can be 10X and all that shit, but come on, let's keep it real. You got other things that happen in life. You got a job, okay? Curious, but I'm sold on the framework. Okay, good, John. Hey, thank you, John, for that. Can y'all find John in room 1? That's interesting. He says, I'm curious, but I'm sold on the framework. Okay, so let's just talk about the framework that he's talking about. Why do I like real estate over stocks? Because it's real. 70% of all the companies in the S&P 500 today were not in it 20 years ago. Like these companies are ghost companies today. They don't even exist anymore. Eastman Kodak, most of you in this room don't even know that company existed. It was one of the greatest companies in the world for years. Cash. Is real estate better than cash? Gotta be. Okay, but most of you hold more cash than you hold real estate. IRAs. You don't even know what's in your IRA. $38 trillion is sitting in IRAs. You can't tell me what it's invested in. You guys are invested in Pfizer, Kellogg, war machinery. You're not even invested in stuff you actually believe in. So how are you going to ever win? I mean, if you believe in any law of attraction, and you're like, I don't want us to go to war. I don't want to kill people in other countries, but I'm funding McDonnell Douglas, okay, with my IRA. Or, hey, I want, my parents died of cancer, okay? You guys have been funding cancer for years, and we haven't made any benefits. You could own a piece of real estate. Let me ask, what's our friend's name? Hey, John, why do you say you're curious? You're curious. I appreciate that, by the way. That was thoughtful. Why do you say you're curious, but you're sold on the framework? You got to unmute. I can't hear you.
Can't hear you. We can't hear you, John. You hearing him on your side, Johnny?
It's his microphone.
Okay.
No.
Well, we tried, man. We'll bring you back when we figure it out, okay? I appreciate you coming up. I like you rocking the hat, by the way. Are you in Vegas today? Just nod your head. Okay, Vegas is a great rental market, by the way. It's going to be one of the protected states. Mm-hmm. Yeah. Okay, thanks for being here, brother. Appreciate it, okay? See, he says, hey, man, I'm curious. I trust the framework because he says it's real. The IRAs, $38 trillion is sitting in IRAs. You guys aren't getting rich in the IRAs. The people that own that IRA are getting rich, okay? 401k, same thing. Gold and silver, garbage dumps. I don't know why anybody would invest money in gold and silver other than Richard or Robert Kiyosaki trying to terrify people. Dude, what are you going to do with gold and silver? 65 years old, not one person's ever come to me and said, can I buy something with gold and silver from your company? Have we ever had that request, Sherry? Not one time. We have 160,000 transactions every year at this company. Not one time in the last 40 years has anybody said, I got a piece of gold I want to give you for something, son. How about some silver? In fact, look what I got right here. Huh? How about taking that? Will you, son?
It's real.
Okay? Y'all act like this is 1880 still collecting fucking gold. Oh my God, my US dollar's not backed by, the dollar's not backed by gold. It don't matter what, it's backed by nothing except the US military. The most powerful military on planet Earth, basically 12 big ships, is what backs this freaking piece of paper, okay? Nothing else. All this is just made up in your head that it's worth something. Crypto? Shit, I'd bet on the blockchain before I'd bet on the IRA.
Wow.
And number 7, your own business, okay? The average business in America lasts 7 years. The first deal I showed you today, this deal right here, okay? When was that built? Is this apartments.com?
Yeah.
Let me see what it says when it was built.
Didn't the guy you bought it from build it?
Yeah, that's right. This was built in I just want to see it though.
95 or 94?
Yeah, let me go. It's great that we tell people, Jared, but it's better if we show people. What was the address? Cedar.
It's 210 Cedar Road.
Two den.
1986.
Oh, really?
Yeah.
1986 it was built.
Cedar.
Would you go to Zillow?
No, 10x Deal Finder.
Oh, wow. Really?
Yeah.
Let me show them that. This is our 10x deal finder.
Okay, here you go. Right there. Just type in 210
210
Cedar Road.
Cedar Road,
RD.
RD,
Vista.
Vista, California.
There you go. Just click on that there. Then go search. And then scroll all the way down to the bottom here. Scroll all the way down. It's got all that.
Okay, let's see.
Keep going. This is all based on county records. So that's a loan activity. And then beneath that, there will be the transactions. And then if you go to the next page, there you go right there on the bottom.
That's cool, man. That's cool. We did a great job on this. 1986, okay? This property was built. 1986, so what is that? 96, 06, 16, 26. Almost 40 years old. 40 years. The average company in America lasts 7 years. The average company lasts 7 years or less. The average S&P 500 company lasts less than 84 months. These companies used to last 70 years. That property has been here 40 years producing cash flow. 40 years. Somebody's owned it producing cash flow. Twice, there's been an opportunity in the last 40 years to steal the asset. This will be the third chance to steal the asset. The first guy that built it lost money on it. Wow. Sam Zell used to say this. I studied Sam Zell, everything Sam did. Sam had built, he had $5 billion worth of net worth when he died, all of it in real estate. And he's like, I'll never be the first one to be in a property. I'm always the second guy, maybe the third guy. I shouldn't be the first guy. I'll let them build it, let a bad time hit them. That's what happens. It's not that you did something wrong. It's that, boom, something happened. Timing was off. Debt market collapsed. The guy can't sell it when he wanted to. We got a property across the street right now that's going to happen to it. So you guys don't need to build this, okay? You don't need to think about building. All you guys out there that want to build stuff and you love your hammer and you love your nails and you like your little belt that you put on the weekend and you like to go fucking build stuff and look at blueprints and shit, put it away, okay? Put it away. Knock it off, you and your little erotic hammer trick, okay? Okay? Just knock it off. You want to buy below replacement costs. Dude, you thought the reason Ryan laughed at that is because he actually had an image of himself.
Did you see it too?
Yeah, with his little belt on.
Did you see it?
With his little belt and his little,
got
toolbox. Okay, okay. You want to buy below replacement costs. Always be below replacement costs. Meaning the guy bought it, he built it. In this case, this guy paid. I think he was in at 5.1 million. I paid 1.9 million dollars for the property.
Wow.
I knew I made it. This is what's called making money on the purchase, okay? All right, page 6. By the way, if you guys can tell me, anybody that can tell me why these 7 things are better than real estate, including my own business, by the way. Okay, let's say I'm in my own business. I'm in my own business. I got my own business, and I make $100,000 on my business, and my expenses are $40,000. I make $60,000 on that business. That's a good business. I would take the 60 grand and invest in a piece of real estate. Now watch this. The 60,000 on the piece of real estate is going to make me about $4,800 a year. I would take this company to zero, invest this entire 60 grand over here, and buy a $240,000 piece of real estate. That's what that'll buy me. The 60 grand will buy a $250,000 piece of real estate. I'm just using these numbers as an example. And somebody asked me once, they said, well, why would you put 60 grand in here? If you reinvested in your company, you could make another 60 grand. I said, yeah. If I invested this 60 grand, I'd probably make another 60 grand. That's 100% return. I'm only going to make about 6 to 8% over here, and probably 15 to 20% each year when I sell the asset, 2 or 3x return. Well, why would you do that when you could have made 2x right here in the same next year? Because I just built 2 businesses. I got this one that's working, and I'm going to keep working it, and now I have a second business. The way you do it, you just keep investing in your own business, and you always only have one business. By the way, that your business might not even last 7 years. 90% of all businesses fail within the first 10 years. They don't even make it. So you won't even have that company. This thing, when done right, you'll have 30 years, 40 years, 50 years. Shit, you could have it 50 years. Your kids could have it 50 years after you're dead, all right? Okay, so why is real estate better than all other assets? Number 1, it protects your capital. Your business does not protect your capital. Okay, real estate protects your capital. In fact, many of you, if you're in the restaurant business right now, you're having to raise the price of everything right now, cheat your customer, put less food on the plate in order to make the same margin you used. Your leases are going up, your wages are going up, everything you're getting inflated against because you can't protect against your capital. Number 2, real estate provides cash flow. Most restaurants don't even cash flow. Number 3, long-term appreciation. Your restaurant does not appreciate if we're using a restaurant. You don't have long-term appreciation being a plumber. You're a doctor. Doctors have had long-term depreciation and will be replaced by AI, by the way. It's already happening, folks. Like insurance companies would rather pay a robot to do the surgery than to have a human being do the surgery. Wow. Number 4, tax write-offs. You don't get any tax write-offs because you did a massage, or you're in multi-level marketing, or you went and grew your business. There's no tax write-off because of that. There's a tax write-off by buying a piece of real estate. This piece of real estate that I just used in this example at $240,000, let's say the land's worth 20, and the rest of the property's worth 220. When you buy this piece of property with only $60,000 down that I used in this example, well, in a Fannie Mae example, by the way, I could buy this with $10,000. A $10,000 down payment, that's what I put down on the property. You know what my tax write-off on this would be? What do you think, Ron? 80,000, 90,000?
70, 80 grand.
$80,000 would be my tax write-off for spending $10,000. It's called a tax write-off due to depreciation. This is why so many people have so much money invested in real estate, because they're trying to avoid taxes on their other earned income, and they use real estate to write that down while they're getting paid cash flow positive to get what appears to be a negative, which is not a negative, it's a book negative, okay? Number 5, you're leveraging good debt right here, okay? I'm gonna get a loan on this. I'm gonna get a loan for $210,000. By the way, this kind of debt is good debt because other people are paying for it. You're leveraging good debt. That's why real estate is better than other assets. Number 6, and we're on page 6, by the way, protects against inflation. Okay? When it becomes more costly and more expensive to build, to hire people, to get concrete, to get windows, it makes real estate more and more costly to put together, okay? Number 7, it's proven and tested over time. I don't know how long, How long's America been here? You don't know, Ryan, how long we've been around?
I mean, that was when it was like the Declaration of Independence was adopted, and
Yeah.
But
Come on, Ryan.
Do you have all the dates memorized?
I mean, it's been.
I know it was 1776, Ryan. I mean, come on, man. How long have you lived freeloaded in this country?
40 years.
Did you do any studying about America? Like,
did.
Did you go to school?
I did. Part-time.
Okay.
Wondering like when it separated from like Pangea.
How many
and
states were
became-
there first, Ryan? Put a video on Ryan right now.
Oh, no.
How many states were there in the beginning, Ryan?
Let me phone a friend.
He's asking Sherry right now. How many states?
Sherry,
How many original states, Ryan? The first flag in America, Ryan. How many stars did it have on the flag?
I don't know.
What do you mean you don't know? Guess.
13.
Excellent, Ryan.
13.
What were they, Ryan?
Tell us, Grant.
No, you tell us.
No, tell us, Grant.
Jesus.
I'm pretty sure they were all in the Northeast.
You're Albanian, right?
The road.
You don't even deserve to live here, dude. Okay, number 8.
Wow, that just got aggressive quick.
Do you want to know? They were. It was the New England colonies. Yeah.
Yeah, New England, dude. Like people came in.
New Hampshire, Massachusetts, Rhode Island, Connecticut.
Number 8, easy to access. Do I look really pale over here? Or is it just my, okay. I'm hot. Number 8, yeah, I think these are a little bright maybe, Johnny. Number 8, we can take them down later. Easy access to debt. Easiest debt you will ever get in your life is these deals.
Why?
Because they already cash flow. In fact, you know, when I went and got a loan on this $1,950,000 deal, I think I put 300 grand down. And I financed 1.650. You'll see it in the records. When I went to the bank, when I went to the right bank, okay, and I said, hey man, I need to get a loan on this, and I brought in everything. I was so scared, I'm sweating. You remember your first loan?
I do.
Freaking, I was so scared, dude. So scared. You know, everybody, no matter where you're at in life, when you go to get a loan, you're like, oh, are they gonna give it to me? Am I qualified? You don't know. And I said, look, I brought in all this documentation. I brought in these folders. I had everything labeled. I spent hours putting this stuff together. I even dressed different. I was so scared, dude. Washed my car. I mean, did everything. Like I'll go into this office and I'm scared, and they're all dressed up, and they got this meeting, and they got a board table, and I'm like, I'm like, feel like the police are in my face. And,
Right.
And if you guys have ever related to that, like I was terrified. And I brought, and they're like, what's all this documentation you have? I said, this is my company. This is how much we make. This is my tax returns for the last 3 years. They're like, bro, we don't need all that. I said, you don't? I said, here's my credit score. He's like, we don't need your credit score. He said, all we need is the profit and loss statement on that property for trailing 12, trailing 24, and trailing 36. For the last 3 years, this trailing 12 rent roll, trailing 24, and trailing 36. If you can get those for us, this would be great, but what we have to have is this. We have to have the trailing 12. We'd like to have the 2 years before that. And then the guy said to me this, dude, we know this guy. We know what he paid to build it. We're gonna give you the loan. I'm like, excuse me? We know the guy that built it. We know what you're paying. We know what he paid. We're going to give you the loan. Okay, we've already done the math on the deal. I said, great, what about my credit score? We don't need your credit score. You're not gonna be on this deal. And then he said this, you're gonna create an LLC, and you're gonna have the LLC own this piece of real estate. You are not gonna own it. The LLC would. What do you wanna call the LLC, Grant? I said, we should call it Cedarwood LLC. I've been doing this for 40 years now. This is how we come up with the names. They'll search it. Cedarwood LLC is available. That'll be $30. Great, $30. Okay, we have the Cedarwood LLC now that now owns this piece of property. It was given a loan by the bank. I said, man, where do I need to sign? Well, you need to sign on behalf of the Cedarwood LLC as the principal of the Cedarwood LLC. Grant, this is a non-recourse loan. What does that mean? That means that if you don't pay the loan, Grant, we can't get the money from you. I say, excuse me? Can I do 10 of these? Now, right now? Okay. And then I discovered by doing. Okay, I discovered by doing, I fell into this deal. It was 48 units. My first deal was 1 unit. My second deal was 1 unit. My third deal was 48 units. This deal made me a multimillionaire. $3.5 million came out of that one deal. I'm not saying that because I'm telling you guys, oh, look at me, how great I am. Okay, that was $4 billion ago. You guys should be finding these deals. These deals are available for you and your family. You never have to do anything with me except one thing. Please, please do this one thing for me. The next time I see you in public and you went and bought 2 or 3 of these deals like this, just come grab me. Say, bro, can I buy you a cup of coffee, man? You helped me get my first deal. Me and my family made $1 million. Me and my family made $2 million. Please tell me that. Please, when you guys see me in public, don't come up to me. Oh, man, you helped me so much, man. You helped me so much, I read your book, man. Dude, I don't care if you read my book or not. I care if I help you and your family make some money and get out of this thing that most of us are in where we're just stuck working over and over and over again. We never get out of the loop. So either you got to figure out how to buy real estate yourself and invest in it. 2, put together a group of people that can invest in it. Or you got to find a partner, if you don't have the time, to figure out, I'm going to invest with this person and start getting this other passive income coming in. Okay, number 9, easy to scale. This business is easy to scale. The bank will not stop you from doing this. You can do 1 of them, 2 of them, 10 of them, 50 of them, 100 of them. And you can do it without ever building a thing, without ever learning how to build, without getting a blueprint, without going to the city for permission, nothing. All you got to do is go find deals that are ready to be sold. Number 10, real estate, particularly rental real estate, rental income, affordable housing is very, very, very difficult to disrupt. The only challenge that it may have in the future and many of these, at least 2 of these 3, will actually make real estate more expensive. The only thing that could challenge this real estate is regulations, through government overreach. The Trump decision a couple weeks ago on the $355 million fraud. That's not a good thing for real estate owners. Whether you like Donald Trump or not, if you own property, you do that ruling's not good. Okay.
Is that something you want to tell people a little bit like?
Well, because on every piece of real estate that you buy, the bank's going to ask you, Grant, what do you think that property's worth? When I bought that property for 1.9, I thought it was worth $5 million. So when they said, what is your assessment? $5 million? Well, you're paying 1.9. I know. I think it's worth $5 million. Well, why do you say it's worth $5 million? That's what that's what he spent on it. And I was right, by the way. Now, it was appraised for, I think at that time it was priced for like $2.3 million. So there was 2 things that come in. Your number, this is what Trump did, and then the bank always hires a third party to appraise the property. It's never yours. You can't pick them. So you're like, I got a guy I want to appraise the deal. No, bro, we can't use your appraiser. We have to pick it, okay? I've never had a property not appraised, by the way, ever. In $5 billion worth of real estate transactions that I bought and or sold, been involved in, I've never seen one not appraised. Have you?
I had 1 in 2009.
Yeah, that missed.
But it was a fourplex. It was $150,000. The appraisal came for $125, and they reduced the price to $125.
Yeah, and what's it worth today?
$400,000.
Yeah, the appraiser was wrong too.
That's right.
So this was appraised for 2.3. I said it was worth $5 million. They said, why do you think it's worth $5 million? Because that's what they spent on it, bro. It's worth $5 million. What's the rationale? You cannot build it for less than $5 million.
Right.
Which means what? Ain't nobody going to build nothing across from it for less than $5 million, which means I have no competition. So it's very, very difficult to disrupt. The other thing you're looking for is barriers, man. A lot of barriers around locations or traffic. San Francisco's got massive barriers to building. Oakland, California, massive barriers. Los Angeles. Bakersfield, less, right, as you go out. San Diego, massive barriers to entry. But you also have these regulation problems. San Diego, what does San Diego do? Hey, man, you don't pay your rent, no problem. Los Angeles County, you don't pay your rent. If it's raining outside, we can't evict you. Okay, if you're a single mom, it's harder to evict you. You hadn't paid your rent in 9 months, and the temperature went from 70 degrees down to 43, below like 44 degrees. Can't evict you that day. Like, it's some stupid shit going on, right? New York City, same problem. Now, that being said, when that happens, those cities, every one of those cities, typically when you look at those cities, the Bostons, New Yorks, the Chicagos, LAs, the San Franciscos, the Denvers, okay? Those cities typically go up in value faster than any city in America. So they're hard to disrupt, okay? You're looking for barriers, man, barriers. And some of this regulation that's going on right now, the cost to build is hard to disrupt. Amazon could be a threat. The one thing I do worry about is somebody figuring out how to build 1,000 square feet at scale with robots.
Have you seen the houses that they're doing with 3D printers?
Yeah.
Crazy.
That scares me.
Yeah.
But, you know,
But we're a long ways from the metaverse.
fuck it.
We're a long way.
Hey, Siri. Who is Grant Cardone?
What would you like to know about yourself?
I'm a long way away from the metaverse, okay? If they can't figure that out right there, just to give me an answer to that question, I didn't ask about Jesus, okay? If they can't give me an answer to that question, we're a long way from building 1,000 square foot. Show them some of the properties we buy, Johnny. Can you show them Cardone Capital right now?
Okay, I added it.
Oh,
Let me
yeah.
know if you'd like to add a time or location.
Yeah, I'm
You
not even
can say
talking to you
something
anymore.
like,
Johnny, what are you showing them right now?
Cardone Cap.
I don't see it. Okay, like, how you going to build that? How you going to build that? That's 88 acres right there. That's on the ocean. That's on the, yeah, they're going so fast. Like, by the way, once you build it, how are you going to drop it into Fort Lauderdale or into the Heights in Houston? Okay, or into Los Olas Boulevard? Okay, or, you know, how are you going to drop it into Aventura, the 10X Business Center into Aventura? And just because you built it, how do you fill it up? Why do people want to go there? So, like, you just can't do this. This is not going to happen overnight. They did it in China, by the way. Okay, they figured out how to make it affordable in China. Back to me, Johnny. There's 140,000 units. No, I'm sorry. 140 million units in China that are vacant.
Wow.
But they figured out how to do them affordable. Okay, look, if they're vacant, they're vacant. If they're vacant, they don't cash flow. So that is why, now you guys got to come to your own conclusion. You need to sit down with your spouse. You need to sit down with your family. You need to sit down with your investors and say, hey, why is real estate the best asset class? Why would I rather be in real estate than Bitcoin? Cash flows, I get tax write-offs. I can use leverage against it. The price will go up. By the way, if Bitcoin goes to $1 million, and I believe it could explode. In fact, Bitcoin could do something nobody's ever even thought about it doing. If Bitcoin does that, what's the price of all this real estate worth? You know how many Bitcoin billionaires will be made? How many planes will be bought? How many new houses? Those guys are going to go buy Malibu houses.
Right.
Everything will inflate as Bitcoin does, okay? So it's all connected. Let's do an exercise now, Jared. What do you say?
Let's do it.
Let's go to page 8. I'm going to give it to Jared to give you guys how to do this exercise, and let's see what you've taken away from the first 2 hours.
So basically what we're going to do is we're going to do a little review of what Grant's covered already. So exercise 1, there's a chart that talks about different asset classes, cash stocks, crypto, gold, and your house, and just put little check marks in the boxes. Check the boxes of the application of the value, you know, not the value of the asset, but if it qualifies for this. Does cash protect your capital? Okay. Exercise 2, how much have you invested in these assets? Cash, investment real estate, stocks, crypto, gold, and then how much equity do you have in your house? Number 3 is what was your biggest takeaway? Number 4, what decisions have you made? And then number 5, how many of your current assets are cash flowing per month? So 5 simple questions. We're going to take about 10 minutes to go through these exercises. And then what we're going to do all day today and tomorrow while we're going through the material is we're going to do these exercises, take about 10 minutes for them, and then we're going to put you guys into breakout groups. typically 3 or 4 people in a group, and we're going to have you guys discuss your biggest takeaway from the session. So we'll do that when we come back from the exercise. I'll give you guys more instructions on how to do that. For now, let's break for 10, and you guys get in your books and do the first exercise of the day.
That's a scuba lesson. Do whatever it takes, like season 2 especially. Mikey B gon' ring the bell and get the 2-stepping. I doubled up and Jay say, homie, quit your 2-Xing. Dominate, don't compete. Champion came to win. What you say, Uncle G? Can we ask him again? I say, who got my money? Who got it? Who got it? Who got my money? Who got it? Who got it? Who got my money? Who got it? 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 Yeah. So that money calling. So I got what you gonna do about it? Who got my money? Say who got my money? Who got my money? Say who got my money? So that money calling. So I gotta ask who got it. Okay, let's get to the paper. Talking millions on the phone. Okay, let's get some new haters. Ain't no feelings in the zone. Okay, you talking Premier. VIP all about business. I never hope for the money. Me, I go out and I get it. See, me, I go out on a Tuesday. You know, every day Tuesday. And you know, Sheriff stay groovy. It's a 10X move. You know, we stay on the move. Gotta get money, they do it. Get in the wins, never losing. We never talk, we just prove it. Who got it? 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 Yeah, sure that money's calling. Who's got my money? So I gotta ask who got it. Who got my money? Who got my money? You got my money? No. I got one question.
Who's got my money? And keep asking until you have answers. And once you have answers, then you go to who's got that money and you do whatever it takes. Once you commit to this concept fully, the money will follow like magic.
Who's got my money? Who's got my money? Who's got my money? 10X ladies, just say it if you a boss. Swiping visas, it's easy for Amex card. Turn the heat up, I need you to make it hot. Tell them haters I can't hear from the top. 10X ladies, just say it if you a boss. Swiping visas, it's easy for Amex card. Turn the heat up, I need you to make it hot. Tell them haters I can't hear from the top. Heels on, lock, strap, queen E on that. Billions in the bag, so I got a big bank. No fake, all facts, big check, no tax. Ain't a rich a milli, this 1,000 unit contract. Saying no to normal is my normal thing to do. Me, I'm building my empire, so you could build them too. What you on? I'm too strong, I'm 10X. My ladies rock it best, ladies rock it best. Building empires is in my DNA. Getting this money is in my DNA. This for the family is in my DNA. ELENA, ELENA. Ladies, just say it if you a boss. Swiping visas, it's easy for Amex card. Turn the heat up, I need you to make it hot. Tell them haters I can't hear from the top. Yeah, building empires is in my DNA. Getting this money is in my DNA. This for the family is in my DNA. ELENA, ELENA. Look who came through bustin' new choppers. Talking about the hammer and the helicopter. Tell me what's my manners, I was never proper. Be a gold digger, baby, want the best offer. She know how to hold on the fort. Babe, you gotta know your role. You know I be shooting for sport. Try not to get out of control. If you talking me and G, we going toe to toe. But if you get me in the ring, we going blow for blow. And trust me, you don't wanna box with me. Here to steal the show, it's called our robbery. Success is my duty, this is who I gotta be. Just know you can't spell Cardone without the E. Ladies, just say it if you a boss. Swiping visas, it's easy for Amex card. Turn the heat up, I need you to make it hot. Tell them haters I can't hear from
The
the
queen
top.
must be the strongest, toughest, smartest, and most disciplined person in the empire.
Ladies and gentlemen, please direct your attention to the center of the ring as we introduce the formidable boxer, Elena Cardone. Standing tall at an impressive 5'9" this powerhouse of strength and determination is about to grace us with her extraordinary 10X skill. 10X badass, yeah, I'm after what I want. Money that I'm getting for investing, not to float. 10X badass, I'ma give you what you need. Chopper in the air, on the ground, I got a team. 10X badass, yeah, I'm after what I want. Money that I'm getting for investing, not to float. 10X badass, I'ma give you what you need. Chopper in the air, on the ground, I got a team. 10X badass, after what I want. Investing, not to float. Give you what you need. On the ground, I got a team. Family, you know I got the team up. Got my soldiers with me, Scarlett and Sabrina. Real estate, so you know we in the deal up. Room full of women, room full of big thinkers. Clydesdales pulling all the way together. Family forever, getting bigger, getting better. Gulfstream got us in the air with no feathers. ELENA elevate with every letter. 10X everything, nothing's gonna stay the same. A boss and mama, wife, those the biggest roles to play. 10X women, and they here to change the game. Empower with my women, with my fiery flame.
All right, so I hope you got through your exercise. There was one question in there that I want you guys to take into the breakouts. It says, what was your biggest takeaway? So what was the biggest takeaway that you had from the first section of the training today? And then also, when you're in these groups, just the flow is very simple. Say, introduce yourself, city you're from. So, hey, my name's Jared Glant. I live in Miami, Florida. And the biggest takeaway I had from the first session was understanding that the bank is as much of an investor in a deal as I am. And so they'll only loan money on a deal that they think is going to work. So really short, really compact. If you guys finish up in your group early, feel free to have any other discussion on maybe decisions that you've made. Like, hey, I'm going to sell my house. I'm going to pull the equity out. I'm going to go buy a deal. The purpose of these groups is so you guys can meet people. Grant said a number of times already in the first session here that real estate is not a solo game. It's a team sport. You got to have banks. You got to have lenders. You got to have insurance. You got to have legal. You got to have property management. Like, there's a lot of people involved. The purpose of us bringing everybody together is so that you guys can start building that network. Because if you go home in your hometown, in your home city, you don't have these people knocking down your door. They're people you have to go find. We've curated these groups and these around these events so that you guys can start building out your network and connecting with other people. So in the breakouts, number one, what was your biggest takeaway? And then the way we're going to run these breakout groups is we like to keep them tight. And so somebody needs to be on the time. So we want to give each person about 60 seconds to introduce themselves, say where they're from, and then give their biggest takeaway. So what we'll do is the person with the shortest hair is going to keep time on 60 seconds. I need your support here. I need your participation. And then the person with the longest hair will go first. So we'll take 10 minutes. We'll break out into breakouts. And then when we come back, Grant's going to pick up in the next session. We'll see you right back.
Income and your taxes low. Spend it right and then invest some more. And if you don't believe me, ask my Dr. Cardone. What you mean? You mean Uncle Cheese? Planting seeds for these money trees. Who got my money, please? Everywhere you wanna be like Visa, MasterCard, American Express. I bought the bank and I bought the checks. I buy apartments, I send checks. Yo, billionaire went undercover, help y'all discover who did it best. Just bought 2 choppers, can't wait till they see the face and they see what I do next. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow.
Yeah, and only then do I buy something stupid. How stupid can you go? You can go as stupid as your cash flow.
You know what heals all ills? Deals. Look who went from meals to bills. It's eat what you kill when you're in the field. In the pipeline overflowing, I don't drip, I spill. We don't seek balance now, we want extraordinary. If you really knew my dreams, it'd be more than scary. We got more to spare, ain't no shortage, baby. Winning by the chopper and another for my lady. Talking about the bird and the strap, say the word and she handle that. Fully loaded, put it at the target and you know we let it off every man. Got my money, who got my back? You can never get it if you never ask. Big bags, legendary swag. Only one thing better than cash. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. When I walk through, no I won't do, no I won't do, no I'm talking to, not to, you don't about to do, what? Walk in that door.
Chapter 6, Step 4, Who's Got My Money?
Who got it? 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 Yeah, sure that money is calling. So I gotta ask who got it. Who got my money? Say who got my money? Who got my money? Say who got my money? I gotta get it. What you finna do about it? I'm like you got that for me. Yeah. Another deal right before the morning. Yeah. Talking credit or cash, every question they ask, we gon' get to the bag. But they don't believe it, they say, how he achieve it, they say getting rich is a fantasy, Uncle G, what they say, watch where you getting advice, get you a millionaire mind, do you some millionaire math and multiply like chapter 5, then I got one question, hold up 2 questions, can you keep it 100, do you want blue blessings, say we got all the answers, that's a scuba lesson, do whatever it takes, like season 2 especially, Mikey B gon' ring the bell and get the 2-stepping. I doubled up and Jay say, homie, quit your 2-Xing. Dominate, don't compete. Champion came to win. What you say, Uncle G? Can we ask him again? I say, who got my money? Who got it? Who got it? Who got my money? Who got it? Who got it? Who got my money? Who got it? 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 Yeah. Show that money calling. So I got what you gonna do about it? Who got my money? Say, who got my money? Who got my money? Say, who got my money? Swear that money's calling. So I gotta ask who got it. Okay, let's get to the paper. Talking millions on the phone. Okay, let's get some new haters. Ain't no feelings in the zone. Okay, you talking Premier. VIP all about business. I never hope for the money. Me, I go out and I get it. See, me, I go out on a Tuesday. You know, every day Tuesday. And you know, Sheriff stay groovy. It's a 10X move. You know, we stay on the move. Gotta get money, they do it. Getting the wins, never losing. We never talk, we just prove it. Who got it? 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 Yeah, sure that money's calling. Who's got my money? So I gotta ask who got it. Who got my money? Got my money. You got my money. No. I got one question. I got one question.
Who's got my money? And keep asking until you have answers. And once you have answers, then you go to who's got that money and you do whatever it takes. Once you commit to this concept fully, the money will follow like magic.
Okay, all right, real quick in the chat, welcome back from the exercise. What did you guys take from the exercise? What did you take away from the exercise? What decisions have you made?
Right.
What was your biggest takeaway?
Start now, and the asset profile is key.
Yes, the asset profile is key. What are you looking for?
I need more cash flow.
Okay.
I made the decision to start making money.
That if it comes to you easy, then it's not good for you. Yeah, look, if it's easy to get, it's going to be hard to get rid of at some point, folks. I can see the chat. Can you see this chat? Write your takeaways in the chat. Yes. Okay, good. Love hearing from others. I need to learn more about how to search for deals. Now, there's a number of ways, and I'll be talking about how to find deals in your market. That was one of the key things that we heard this morning in the first couple hours is like, deals in my market. Okay, those are so easy to find, folks. Why? Because all this is recorded data. You can literally go to your city, and you could go to the city. I remember I was in San Diego. I don't know, 6th largest city in America.
The county assessor, right?
I went to the county assessor and said, I want to see every deal you have below 32 units. And then I went and said, I want to see every deal between 30 units and 74 units. I was just making shit up. And I said, how many units between 74 and 100? When I got to 100, there was like, I don't know, 36 properties. I'm like, oh my God. I didn't know this, okay? 50%. Look, you don't know what you don't know. Jared, by the way, came up with that saying.
So brilliantly.
200 years ago.
Yeah.
Okay? I think 48%, like almost half of the entire stock in America is 4 units.
Stock of
all apartment rentals, because that's what we're talking about today. Apartment rentals, okay? I think there's some, I don't know, some like 36 million units or something. Half of them are 4 units, 3 units, 2 units. A different stat, almost 40% or a little more than that of all the single family homes now have been converted to rentals. Now, the reason people are doing the single family home thing is it's easier to do, but trust me, when you're dependent upon one tenant, you have a problem. I mean, you don't have a problem when they're paying you, but you do have a problem when they're psychos. And don't think that you're lucky, your luck won't run out. You will get a psycho at some point that's going to tear your place up. You Airbnb people, man, you Airbnb guys, man, y'all watch. Y'all think your Airbnb is good until you clean up puke after a weekend in Nashville because they came for the little wedding party.
Did you see that video where it says they didn't break nothing and all the glass like by the pool was broken and the
No, I haven't seen that.
It was on Instagram or something. It says when they report they didn't break nothing and the whole house is destroyed.
Yeah. And none of that's going to be covered, by the way. You're not going to get it covered. You're not going to get it out of the deposits. And then you're going to have to evict somebody if it's a long-term lease. So look, all that comes with problems. You do not want to be dependent upon one flow of income. The purpose of real estate is to have multiple flows of income. You're literally buying. Okay, remember that one example I gave you guys today. Remember that one deal I showed you? It was $600,000. I think it was 600, right? Yeah, it was 600 grand. Mm-hmm. But because it was 600 grand and it was 10 units, that made it a better deal, by the way. I'd rather buy 10 units for 600 grand than 4 units for 600 grand. Because this only requires 5% down, this requires 25% down. Okay, let's say I found a 4-unit deal, there's 4 units for 600 grand, and I found 10 units for 600 grand. This one requires 25% down, this one requires 4% down, 5% down. This one is legitimately can qualify for a Fannie Mae loan with only a 5% down payment. Many of you are going to be like, oh, I'm doing that 5% deal. You're doing the wrong deal. This is the better deal, even though it requires more money down. But I don't have the money down. Yeah, but you don't worry about the money down. Worry about the deal. This is why you guys get enticed. This is how Costco runs a program. Walmart has been freaking tricked effing you guys for years. Come over here because our stuff is cheaper. And then they sell you a Vitamix machine for $1,000. And a bunch of fruit to go with it. And none of that you planned on going there to get. You went there to get the freaking Ritz crackers for 99 cents. So come on, man. Okay, this is your best deal. Why is this the best deal? Because this deal has scale. 10 units, when I raise the rents $200, I make an extra $2,000. The 4-unit deal, when you raise the rents $200, you make $800 a month. Okay, what would you rather do? Would you rather make $800 more a month or $2,000 a month? This deal you did with no money, by the way, because you just went and borrowed the money from 3 other people and figured out. Remember the deal? The deal was this. I showed it to you. Where was that deal located? Y'all remember?
Louisiana? I think.
No.
Was it
Louisiana.
Mobile?
It was in
Or Pennsylvania?
Yeah, it was in Mobile. See, here's another deal. Here's 4 units right here in Frackville, Pennsylvania. Somebody asked me to put in Pennsylvania. I did it on the break. $122,000 a unit. Let me see what the rents are at this little beast. Annual income's $57,000, so the rents are what? $4,000, $5,000 a month. So they're only about $1,000 a month. The deal works. Makes 8% a year. What did I tell y'all I wanted for a return? 6 to 8%. This deal works. Already done. Nice. It's got brick. They put a little, looks like a cedar shake on the outside. I don't know where Frackville is. Anybody know where Frackville, Pennsylvania is? People are living in there already.
Next to some coal fracking?
Okay. You think Frackville is one of those fracking places? They redid the place. Looks nice, dude. Like, how are you guys going to be the $1,000 rents are ever going to go away? They're never going away. They're not going down either. No matter what. We could go into a massive depression. Those rents aren't going down.
It's north of Philadelphia.
Population 3,800.
Yeah.
Okay, so
Now, the problem with buying in a small town like that is what?
you don't have population growth, so you don't have rent growth. So if
You're
you-
buying, it's just a pure cash flow play.
You don't have any income. You don't have any jobs. You have no growth, right? Right. Miami's going to have massive growth. New York City rents are $5,700. San Francisco. There's places in San Francisco outside of Facebook headquarters. The rents are $9,000 for a 1-unit, 1976 build. They built it when I was getting out of high school. It's an old 8-foot ceilings, 800 square feet. It's literally 50 years old this year, and it's $9,000 a month. Somebody bought that when the rents were only $1,000 before Facebook got there. So, like, if you were in Austin, Texas, right now, the rents in Austin, you're going to have Facebook going in there, Apple's going in there, Tesla's going in there, but they started building a bunch of stuff in 2019, in 2020. Loans are due. Prices will come down. People will continue to come to that town. Okay, even through the correction, you'll buy in the correction at the bottom and then wait for all that to get filled up as more jobs come in. More jobs aren't going to Frackville. Okay? That's why I said nobody knows where Frackville is. And the people that live in Frackville, they're probably selling frack. Not to say that Frackville is a bad place. I don't know. I don't know anything about Frackville, okay? Let me just show you some other deals I put in my favorites. Here's the deal in Houston, Texas. This is 13 units, $99,000 a unit. Cute little deal. I'll bet you this is on the north side of Houston. Oh no, it's near Hobby Airport. Not a good location. You don't want to be down there. Look, I know this is tough. You don't want to be down there. So again, a deal can work on paper, and all of a sudden you can look at it and say, no, don't want to go there. Never, ever compromise this location. I'm going to go over a whole list tomorrow. Don't miss tomorrow, by the way. I'll go over a whole list tomorrow that if you can't check off 85% of this list, you do not want to touch that deal. 15% of this list can actually make a deal a bad deal. Okay, let's see here. What else did I come up with? Verona, Pennsylvania. Here's another deal. 14 units, $81,000 a unit. Those rents are going to be more than $850. Here's a cute deal in Williamsport, Pennsylvania. Cute deal, right? You like this deal, Jared? You know
Was that like Colonial?
Yeah, Colonial. Yeah, it is.
not
Victorian.
really.
It's Victorian.
Victorian, you know. I don't really like that. I like more boxy.
Yeah, but somebody's going to like this. Mm-hmm. Okay. All right. Let me just see what else I got in here. I got a deal in Birmingham, 3 units in Birmingham. Okay. Now, this deal, 3 units, you're like, oh man, this is going to be easy to buy. Yeah, it will be. It's going to be hard to get rid of, too. 3 units, and it's going to be hard to make money on this deal. Okay, watch. The higher the cap rate, see that thing called cap rate right there? The higher the cap rate, the less the appreciation. Typically, now these are just rules. They're not always rules. There are exceptions to every rule, right? There's a rule. Don't go faster than 75 miles an hour on this I-95. There's an exception to that rule. There's sometimes where you probably ought to exceed the speed limit. It would be worth the ticket. But this is typically the higher the cap rate, the less the appreciation. The lower the cap rate, typically over time, typically, not always, the appreciation is going to be higher. Okay? Here's somebody, Eugene says, Destin, Florida. Okay? Very, very tight market. Number one, it's a small market. Number two, it is a great market if you get it right. And 3, it's one of my favorite markets in the country. So I'm going to go ahead and check this one out. Let's check the Loopy Netty, go to multifamily, high-rise multifamily. Let's just go all multifamily. Let's see if there's anything in Destin, Florida. Okay, there's one deal on LoopNet.
2 units, 2.4 million? No?
This is a flex. Here's another deal. 30-unit building, 18,633,000 a door. Okay, now, y'all want to look at a bigger deal right now? Or is it too soon? Is it going to freak people out? Johnny, bring me up, Johnny, on this, because I'm at the bottom half or something. It's not, I don't know if you can, okay, there you go, there you go. Now, I'm just going to tell you guys right now, looking at this deal here.
How many units?
633 a door.
Whoa, 6.
So this must be short-term rentals, okay?
Whoa.
29 acres of pine trees. You can never, ever buy this again, just so you guys know. Like if I could earn 9% of my money on this deal and figure this deal out, this whole, let me just show you where we're at on a map. Why I get excited about some places and some places I don't get excited about. It's called barriers to entry, USA map. Just map, where's the map? Okay, the reason I get excited about a place like this, okay, is because of this. First of all, it's a blue state. That's good.
Blue?
It's blue. See, it's right here. This is Destin, okay? This is the whitest sand in America.
I think you mean red.
Red state.
I'm sorry,
Florida.
red state. There's a red state. See, this is Destin right here, okay? This is all very, very tight. Massive barriers to entry. Okay, there's no more. What's the massive barrier? The Gulf of Mexico is a barrier, okay? There's this highway coming across here is a barrier. Nobody wants to be south. Everybody wants to be south of this highway. You come out of Mobile up here. This is why all this is good. See all up here? Pensacola, Gulf Shores, Daphne, Fairhope. This entire space right here from Mobile east and down is gold, folks. Like, if I could do this every week, just spend time. Let's say you guys live in Pennsylvania or Wisconsin or Nebraska or New York, and you're like, and I'm like, bro, go to these markets, and you could come spend a weekend, buy a vacation, come down here, count it as part of your investment time in looking at real estate to qualify you for a professional real estate. What's it called? Investor with the IRS. And go down there, do a weekend in the Gulf Shores, in Destin, in Pensacola. Go down there and already know what products, what assets you're going to look for. How many units do we own down there?
1,200.
1,200. I got 1,200 units down here right now. Just pigs, man. Just pigs, like bang, just bang. I don't mean pigs bag. I mean oink oink, cash flow every single month.
Piggy bank.
Just piggy bank money. Okay. Rosemary Beach is great. Panama City's great. All right. The further you go back west here, the better. Okay. Niceville, Santa Rosa Beach. Stay away from the Air Force Base if you can. You don't want to be dependent upon military. Navarro's good. I remember that deal we looked at Navarro and passed on. It's probably available right now. Pensacola Beach, great. Pensacola, great. All this stuff up here. Why? Because there's barriers to entry. You just can't keep building forever. And everybody up here in Alabama, and a lot of jobs coming in Alabama. One thing you want to learn about is migration. Jared brought this up. Where are jobs going in America? If I back out on this map, I'm going to see that people are leaving blue states, New York, D.C., Chicago,
yeah.
Michigan. They're moving down into these red states. Why? For warm weather. Okay, they get tired of winters. This isn't even political. This has been happening for 40 years, by the way. Goddamn, I'm getting old, man. Okay, I lived in Michigan when I was 25 years old, and I worked at Ford Motor Company plant, and I had a job over there, and then even freaking Ford left. Like they left, shit, the people left. Okay, so where did they go? Oh, guess what? Ford started a plant where? In Alabama and South Carolina. Now, why is Toyota, BMW, Kia, Ford Motor Company, Mitsubishi moving into Toyota, leaves California and goes to Dallas? Follow the money, man. Oh, man, mama lives over here. Good. Get your mama, get her out of bed, and bring her over with you, man. Why? People want to go to warm states. Where are warm states? There's only so many states in America, despite the global warming phenomenon that seems to be happening. What's warm? Arizona, New Mexico, Texas, Oklahoma, nothing there, Mississippi, Georgia, South Carolina, North Carolina, bang, I'm avoiding cold weather. Number two, why would I want to go there? Because I can keep my guns down here, man. Goddamn, we rednecks, bro. We like shooting shit, okay? Well, guess what? There's a whole bunch of people in New York right now that they're like, I want to have a gun too. I want to hold my gun. I want to have my rights. Third, okay, these places are getting extremely expensive to live in. $5,700 rents in New York City for a little freaking place this big. My friend Rocco that got married last weekend, his daughter works in New York. She lives in 400 square feet and pays $3,000. Her brother lives in one of our properties, pays $3,000 for 1,000 square feet with a balcony overlooking the ocean. Okay, so people just want to come down and gravitate to this, young and old. The fourth reason is because, and this is a hot topic right now, where are the illegal migrants going? All these people coming across this border over here. First of all, they will benefit Tucson big time. Tucson should be a city you guys are looking at right now. Okay? Illegal immigrants or renters, always. Not for 2 or 3 years, for a lifetime. Number two, they always pay their rent. 3, they pay early. They don't pay late, ever. They never pay late. They never cause problems. You will never get them causing any problems at your properties. So that's a good thing, right? All this market. Now, some of these are moving into markets. They're being shipped out, as you've seen in the media, to these other what's called sanctuary cities. That is going to become problematic to the overload of these cities. Denver's having a problem with it. Chicago, New York. I'm not trying to be political. This is complete economics. I'm just looking at your money right now saying, where do you want to invest your money right now? Washington, D.C. will always be a great rental market. So I'm not picking on. Washington, D.C. will always be, it's the hub of freaking finance in America, okay? Like for New York to work, you have to have D.C. work. So that money's going to continue to roll through there. Philadelphia is a great city. New York's obviously always going to be a great city. If I could go buy real estate in New York right now, buy 1,000 units in New York City, I'd do it in a freaking heartbeat. And I would believe that if I could pick the right locations, I could collect my rents. That's the only challenge there, okay? So look, there's plenty of opportunities out there. You guys just got to decide, are you committed? Once you're committed, what kind of properties are you looking for, right? The 3 units, if I raise the 3 units $200 a month, I make $600 a year times 12 equals $7,200. What's the new value of the property? What's the value of the property? How do you determine the value of a property? The value of the property is determined by the rent. Okay, I told you this earlier. The value of the property is determined by what? The rent. The value of the property is determined by?
Rent.
The rent. It is not determined by your neighbor. Has nothing to do with your neighbor's house. Jared lives across the street from me. He's got a house. He had to sell it for $1.6 million. Okay, that's going to now. My house is worth $10 million, but he had to dump his house because he had some kind of problem. That affects the value of my house. Okay, 2 houses down, some other guy had a problem. Boom, he had to leave and he went bankrupt and he had lost his house. Boom, that drops the value of my house. But in multifamily real estate, the value of the property has nothing to do with my neighbor. It has something to do with the income of my property. If I can control the income of the property, the value of the property goes up and down in accordance to the control you have over the asset. That's why collecting rent is so important. So if I take the $600 rent bump, 3 units, $200, I collected $600. Everybody do this math with me. 7,200, I'm going to divide that by 3 units. I'm going to divide it by 7. I increased the property value by $1,000.
100,000.
100,000?
102.
Okay, 7,200 divided by 0.07. Yeah, $102,000. Now, what did I do right here? This is called leverage. I made $102,000. Many of you will be satisfied with that, by the way. Certainly paid for your day-to-day. Found 3 units. I raised the rents just $200. So you have to find what? You'd have to find the 3 units, and then you have to find 3 units where you could raise the rents $200. That's the only thing you have to do. If you could do that, you could buy this deal with 5% down because it qualifies for the Fannie Mae loan. And if you could raise these rents $200 and collect it, you would make $100,000. Now, what's the problem with this? If one person moves out, or you have problems with one person, you didn't lose $200 a month. You lost $1,000 a month 12 times. Okay, now, what did that do to the property? Divide that by 0.7, and you just lost $171,000. So watch, you raised the rents $200, cool, you made $100,000. If one person jacks you and games the system, and you cannot evict them and can't get them out, the value of your property went down $171,000. Now you're negative. You're still good. What? Because you're going to have to replace that tenant. So Giorgio moved out. Maybe he paid all his rents. He moved out in November. I need to replace him as quickly as possible. This is when it becomes work, okay? And at 3 units, the problem with 3 units is you do not have enough income. 3 units at $1,000. I'm not trying to talk you guys out of anything. Just understand, if you're collecting $3,000 in rent, you don't have any space for a manager. 4 units, you are managing yourself, okay? 8 units, you're managing yourself. 18 units, you're probably still managing yourself. But if you're in California, at 16 units, you have to have a manager on place. So even if you get to 16, one of them has to go to a manager, which means you only have income from 15 now because the manager's not going to pay anything. You're going to give them a unit and some money to manage the property. You have to, by law, have a manager on that property above 16. What is it here? Is there a number here?
Let me confirm.
We don't buy 16s. I mean, we're buying big, big properties, but this is where I started, right? At 48 units, just watch the scale, okay? At 4 units, let's go 12 units, let's go 24 and 48, okay? And let's say 2 people move out. If 2 people move out on any given date, on 4 units, I'm 50%. You guys need to know the upside and the downside. I think everybody should understand the upside and the downside to the game, okay? If 2 people move out right here, I'm at 10 units, so I'm still, 10 out of 12 is what, how many? Is that 80%? Something like that? Yeah, 80% occupied. I'm 80%. Okay, 2 people move out right here, I'm only 50% occupied. You're negative cash flow. You're feeding the deal now. Okay, 2 units move out here. 2 out of here, I'm 90%. You're cash flow positive. 2 units out of here, dude, you don't even know it happened. Like this is 1.5%, 98.5% occupied. Okay, so what am I telling you right here? The bigger you can go, the less exposure you have to a negative cash flow situation. And cash flow is one of the things you have to have in order to move through these cycles. Now, when you're buying at the bottom of a cycle like you're going to be able to buy here, as long as you're disciplined in your purchase. I mean, imagine if you had me either negotiating all of your deals or overlooking, like I'm paying a guy right now to oversee this legal thing. He charges, what, 20 grand a month? Yeah, that's what he wants. I'm banging this guy on the phone today. Like he hates dealing with me because I want to negotiate. I'm going to negotiate. I'm not going to overpay the fee. I'm going to fight for everything, dude. And you guys got to be willing to learn how to do this stuff. So you either have to learn it and have the courage to do it, or you got to have somebody with you saying, no, bro, go back and get this money. You deserve the money. You're not being mean. You're not being ugly. You're doing the right thing for you and your investors. Okay, let's go to page 12. The must-haves. These things you have to have for this to work. Number one, you have to find an asset. Okay, you have to find an asset. You do not go try to get a loan. Don't call a bank and say, what's my interest rate going to be right now if you don't have an asset? In fact, any rate quote that you get from a bank without a deal you have under contract is not really a rate quote. We see this happen in our club all the time. I got a rate quote of 6.5%. Bro, you didn't get a rate quote. You got somebody giving you an idea of what it would cost, okay? Until you have an asset under contract, okay, asking a bank to give you a rate quote is a waste of time. Number two, you need to acquire debt. Once I have the asset under contract, then I'm going to acquire debt. I'm going to pick a lender. I'll make this very, very simple for you, okay? We'll show you how to do this. Number three, third thing, the must-haves, okay? In the order that they happen, then you would raise capital, and typically you can have, 3 months to raise the capital. If it's a HUD loan, you could have 9 months to a year to raise the capital. The amount of time you need or require to raise the capital can be negotiated. Number four, build a network. You need to build a network of insurance agents, bankers, brokers, deal finders, partners, okay? We can help you expedite all that in our mentoring club and in our mentoring, real estate mentoring, and in our club. We actually have a network. How big is our mentor program? How many people do we have in our mentor program?
I think it's what was
there's
the number you sent me?
101 here right now.
1,800.
So we have a mentoring.
Over 1,000 for sure.
We have a mentoring network, over 1,000 people right now, where people join every week and come together and just talk deal flow, possibilities, hook up with construction workers. Like I discovered this guy that removes water, does water remediation from buildings from our network. Okay.
2,112.
We have 2,112 people in our mentoring. How many in our club?
700.
Okay, 700 in our club. Our club's more expensive. It's a much more elevated, serious group of people that are actually looking for deal flow and to fund deals. But that's a network, okay? Everybody that's watching today, you cannot do real estate by yourself. Nobody does. Nobody ever will. It has never happened. The biggest institutions in the world do not do this by themselves. The richest people on planet Earth, whether they're the MetLife's worth $890 billion, almost $1 trillion company. They do not do real estate deals by themselves. There's a network. You have to have a network. So if you're going around your neighborhood like my uncle did, buying Section 8 housing one at a time, okay, picking off this deal, picking off that deal, and over 40 years, one day he looks up and he's got 40 units, and he's collecting the rent from all 40, and he's collecting the money from the government. He needed a network, okay? Now, he wanted to be a one-man show, so he was. For 40 years, in his 30s, it was cool, because he could go collect the rent. He had one kid. But in your 70s, man, and you're still carrying a 38 with you to go collect the rent on the 5th, it's like, well, what are you doing, okay? You need to build a network. You need to have a team with you, okay? Number 5. You have to grow your confidence. You have to have confidence in real estate. Otherwise, you're going to be tempted. Meek Mill says it best. If you don't believe in something, you'll fall for anything. Okay? So you guys got to pick your thing. Now, I started in real estate. I had 2 businesses. I was working full-time. And I mean full-time, Grant Cardone full-time. Okay? I'm working 300 days of the year. Every day. I'm working Thanksgiving. I'm working the day before Christmas. shit, I didn't have anybody with me. I'm working all the time. Nobody wanted to be with me. You're like, you're a maniac, okay? I was probably sick 60 days of the year. I exhausted 60 days of the year, and I couldn't work, okay? This 60 days, plus any extra time I could get, I was shopping real estate. Putting all my time and energy on that real estate. If I wasn't working earning money, I was literally out looking at learning the game. I spent 3 years every single weekend of the year, 2 days a weekend, no matter where I was. I could have been in Calgary, staying over the weekend, Chicago over the weekend, Houston, Texas, where I lived at the time. I could have been visiting my mom in Lake Charles, Louisiana. I'd drive around the car and look at real estate. I'd call brokers. I'm sitting with my mom in the car. My mom had to listen to me talk to real estate. I'd hang up the phone. She's like, you ain't going to buy no real estate from him. I said, I know, but I'm going to get some information from him.
That's cool.
I did. I've made tens of thousands of phone calls. Ryan's seen probably 5,000 of them. Tens of thousands of phone calls that I have never, ever, ever, ever attended on buying anything from those people. 1, I didn't have any money. 2, I didn't have any credit. 3, I didn't know what I was doing. I made the phone calls to learn the game. Now that's what we're doing for you guys. We're going to expedite and accelerate you knowing the game and having some abs, some confidence. Okay? Abs to a guy that works out is the same as confidence is to a real estate guy. Boom, I can trust my core. Okay? So the rest of the time, dude, all I was doing was real estate. Okay? Now, one deal, I bought one deal, it made me $200 a month. I made another deal, made me $25,000. My third deal, deal number 3, made me $3.1 million in free dough, plus another $480,000 in cash flow. One deal. First deal was the wrong deal. It made me $200 a month. Wasn't a bad deal. I made 100% of my money, by the way. It was 100% return on my money, but it was only $3,000. I put in $3,000, I got $3,000 back. I was like, shit, I'm happy, dude. I did my first deal, okay? But she moved out. It freaked me out. One tenant moves out, bang. I got to pay the rent. This is not like a boyfriend or a girlfriend. She moves out, he moves out. Okay, my bed's empty, right? When they move out of your unit, the bed's empty and you got to make the payment. So this one right here, this house here, I bought this house right here. I had this house for 3 years. I bought it for $92,000 with no money. I sold it for $25,000 more than I paid for it. Super deal, by the way. The return was infinite. No money in, $25,000 out. How many of you would be happy with a $25,000 return on one house? How many of you'd be satisfied with, like, I put no money in and I got $25,000 out? Drop it in the chat. Yeah, you'd be happy. Yeah, but you'd be stupid to do this. Okay, this is very, very risky. This is all about luck. This was not a business. This is not a real business. This was pure luck. I bought it at the right time. Somebody came along and paid me more money for the house, and I got lucky. Okay? It didn't cash flow, and I got lucky. So it's not repeatable. You're not going to repeat it. You guys you're flippers. This is a flipper activity. Both of these, by the way, are basically flipper activities. The third deal, though, not only did it make me that much money, but it cash flowed while I was waiting. Now, notice this. Remember why I said this. I had 2 businesses up here. How many days of the year am I working these 2 businesses? 300 days of the year. And this was providing me with, let me do the math on this, 350 times 12%. What is that?
$45,000 per year?
Yeah. It was providing me with $42,000 in new income every year. Okay? Watch this. The third deal, I had no money when I bought this deal. I had no credit. I didn't have any real credit. I had no assets. I had 2 businesses that were cash flowing, but they all required my time and energy. When the lender gave me the loan on this third deal, their biggest concern was not my ability to pay because they believed the property would pay the note. Their biggest concern was, who's going to manage the property when you're working 300 days of the year? So I put a manager in place. Okay, the manager actually got a percentage of the upside when we sold the asset. Okay, I was being paid $42,000, by the way. $42,000, just so you guys know, at that time, was almost as much money as I was making from my companies. All I did was trade some cash for an asset. I got rid of my cash, which was scary for me. I'd accumulated this cash. I didn't have the whole $350 to put down. I had to borrow some from friends, family, mom, everybody, right? Put stuff on credit cards. It was very scary to transfer this money into this deal because the money was gone now and I can't get it. See, one thing I like about real estate that some of you guys don't like is I've learned to like being illiquid. Illiquid, not liquid. I don't want liquidity. And the reason I don't want liquidity, okay, when I put all my money, I put $350,000 plus some money into this one piece, the Cedarwood, the Vista 48 unit property, I don't have any money anymore, okay? So Jared comes to me, Jared's my friend, and said, I need to borrow some money. What's my answer?
Sorry, dude.
Sorry, bro, I ain't liquid right now. I'm illiquid. And Jared's like, okay, no problem. Thanks for listening to me. He's not going to be offended. I don't have any money, bro. Okay? I'm sorry, I can't help you. My mom comes to me. I need some money. I wish I could. It'd be cool if I could, but I can't. Go see my brother. He's liquid. Gary will help you. Okay? I'm illiquid. Okay? So real estate people are notorious for never being able to even buy lunch. Why? Because they're all invested. Now, why do you want to be illiquid? Because if you're illiquid, nobody can get money from you. Your money comes every month. Okay? That's the only thing anybody can ever get from you is your cash flow. So the only money anybody could ever get from me, what's up, Johnny? I can't hear you. The only money anybody could ever get from me was the little bit of drip, the $3,000, $3,500 extra money that was coming to me every month, the $42,000 a year. You certainly can't take my real estate from me. What are you going to do? Go steal 48 units? Okay, go to page 13. This is called the proper deal sequence. Number one, this is the order in which you need to think. Any order, any other things that you do is out of order, okay? You do not need to worry about anything except this sequence. Now, I can tell you guys, we see people all the time screw this sequence up. Their sequence is so important. Number one, first you find the asset. Do not worry about anything. I'm telling you, this is 90% of your transaction.
Most people think the first thing you got to do is set up an LLC.
It's stupid, man. You guys are running around, man. I see communities tricked, hoodwinked on this all the time. You need to worry about your credit score. You need to fix your credit score. You need to buy a house. You got to buy a house. You need to get a college degree. You don't need to do any of that shit. If you're a real estate investor, you do not need a college degree. You do not need an LLC. You do not need a credit score.
And you do not need a license.
You don't need a license either. You guys go out and study, spend 6 months failing a license 3 times. And you fail in a license questions that don't even matter about anything. To sell real estate, you ought to be buying. Okay, I do not have a license to sell real estate. I buy real estate. I need no license to do that, okay? The most important thing is, let's say I'm in El Paso, Texas. Let me go to CoStar. Okay, we're going to open this thing up. I've been showing you this junkyard called
LoopNet.
LoopNet, right? Now we're going to go to, where you want to go? I want to go to Sarasota because I love that market. There's the deal with Sarasota right there. Is this still available, Ryan, these 32 units?
Under contract, it says.
I told you guys this was a good deal. I told our club this 2 Wednesdays ago.
Hopefully somebody from the club got it.
Yeah. This is, we pay $150,000 a month to use this program right here.
A year.
A year. $150,000 every year, renewable every year. This was 32 units, 1978. I think I recommended this in the club. It was an old motel converted to apartments. This gives you everything you need to know about this property. Average unit size is 1,000 square feet. Built in 1978. It's been around for how many years is that? 50? 47 years. Let's see what the rents are. Look at all the data on this thing. Who owns it? Insula companies. Moderate to low risk area. from floods. So it's not in a flood zone, right, Ryan? Does that
X?
mean flood zone?
What is X?
Moderate to a flood hazard. It's a B and X area.
Doesn't sound like a no.
No, it says FEMA flood zone. Let me just see here. Like how confident you are, Ryan.
With limited data, it's hard.
Yeah.
Just trying to give you some quick feedback.
Okay, the rents. Average rent. Let me just show you a picture. Average rent on this, what do you think it is?
32 units? Average.
This one right here. Can you see a picture of it?
Cute deal. Average rents are probably $1,600.
1950.
Is it really?
Yeah.
Wow.
Ridiculous, dude. Cute deal, though.
Those red doors really pop, huh?
They pop hard. The gray pops hard. By the way, looking at deals gives you ideas about how to paint stuff.
Yeah, are those all 2 bedrooms?
They're 1,000 square feet. I
Oh, that's
think.
pretty big.
Yeah, yeah. One deal in Sarasota on CoStar. Now let me back out. I'm gonna go to Florida now.
You've also got 32 to 200 units as your criteria.
Oh, is that what I have?
You do, sir.
Man, you're really good at your job.
Over one more time.
You're really good at your job, man. You know, this is gonna be 5 units. 5 to 200. Let's go Sarasota again. Oh yeah, these people in the room like, oh yeah, I told you there was nothing for sale. See, you can only find one deal and it's already sold. Let's open it up, Jared. Okay, now we got 4 deals to look at. 13 units. We got 8 units. And we got 8 units built in 1964. Okay, now I'm going to open it up. I'm going to open it up to Florida. Let's see what happens. This whole market right here is going to explode. Let's go. Let's go Tampa. All these are available for sale right now. You guys, just the number of people on this call right now, maybe with my help we could buy all this, but there's probably more real estate than you can actually purchase here in this room. Look at this deal right here. 8 units in St. Pete. Look at this little beast. They want $500,000 a unit for this. I'm telling you where these prices are going, folks. They're going to go crazy. That'll be $1 million a unit one day. There's going to be so much money made. Now, the question is, why are these people selling this? Oh, this property, by the way, has only been here since 1945. 80 years somebody's been collecting rent on this. St. Pete's is going to be one of the tech hubs in Florida. 21 units right here, under contract in St. Pete. Gulfport, Florida. 12 units, $2.2 million.
$187,000 a unit.
Yeah, it's cool. Look at this. God, I'm going to get really rich. 11 units right here, $2 million, 108. Look at this, Ryan. You see this?
Which one? 10?
11 units. I'm showing it on the screen right now. Oops.
950 18th Ave?
I lost it.
You're not. This isn't your computer, right?
Mm-mm.
Oh, there it is. Okay. Midtown, St. Petersburg, 1925. This has been here 100 years. 11 units, $2 million. Question is, why are they selling this right now? Okay, this is the worst time to sell an asset. But look how cute this is. You see this, Ryan? The little yellow deal?
Little stone in the front.
Yeah. So this needs to be rehabbed and updated. Let's see what the rents are, though. Oh, wow. Typical floors, 3,300? That can't be right. Yeah. No, average unit's 600 square feet.
Yep, 598.
Yeah. Let's see what the rents are. Now, watch. If I don't have the data I need from this, I'm going to go over here because it's not showing me the rents. I'm going to go to this. I'm going to take this address. I don't have an address. Yeah, there it is. Watch what I'm going to do. I'm going to go here. What am I talking about right now? We're talking about the sequence of deals. Am I underwriting this deal right now? No, I'm not worried about that. Am I worried about a loan right now? No, I'm not worried about that. I'm worried about finding a deal. I'm trying to see if this is a deal. 958, apartment for rent. There it is, apartments.com. Now I'm gonna find out what the rents are. There's that deal. Unit number 4, $1,695.
Wow.
This property is 100 years old and getting $1,695 a month. Okay, I'm gonna go back to the deal now and I'm gonna underwrite the deal. Okay, you guys get your pencils ready, get your pens ready, get a piece of paper ready, and I'm gonna show you how to determine what this unit is worth. 11 units, $1,700 a month, times 12 times 0.95 times, Ryan, how much is St. Petersburg?
Expenses?
Yeah, 70%, 30%. I can do it for 30, okay? That's gonna be your math on this deal. Smaller deals cost less money to manage because there's less expectation. There's no pull, there's no parking, there's no extra income probably on the deal. So let's just do the math. 11 units times 1,700 times 12 times 0.95 times 0.70 times, he's $149,000 of NOI, okay? It's actually 226, 149, 226, but I'm gonna round it because I'm being lazy. All numbers that end in zeros suggest someone was lazy, okay? Divide that by 0.06. I want at least a 6% return. The number you pick now is the return you want if you paid cash. Equals $2,487,000. Is the price I could pay for a 6% return if this number is true. This is called the NOI. You're like, God dang, man. Same math. I will be doing the same math every single time, okay? Now, we have people work in our office that know nothing about real estate. How many times have you seen this math?
150.
Yeah, dude, you're just going to see it over and over. Oh, I know what he's going to do next. I'm not going to surprise you guys with anything. So for those of you who are like, I didn't understand it, I don't know what he did, don't worry about it. Just stay. Don't discount yourself, okay? Don't like pull out, okay? They want $2 million for this deal. Do we know who's selling this?
Franklin Street.
Who is Franklin Street?
It's a brokerage shop up in
Yeah, you got a number for him?
813.
Man, you know it's Saturday.
Call 813
559
599
2015.
2050.
559.
It's either Mark or Carrie.
559.
Call
813
813
559
599.
559.
Why don't y'all do it then? 813
559. It's all good. 2015.
2015.
Yeah. It's either going to be Carrie or Mark.
Can they hear this? Can they hear it?
Yes, they can.
Yes, sir.
Leanne says yes. Yes.
Number one, find a deal. Okay, hey, I just looked at my deal. Maybe there's a deal here. I know the location. I know where it's at. I kind of like it. I'm not going to buy this, but I'm just, let me call somebody. It doesn't cost me anything. That's 5 phone rings.
Carrie Brown is currently unavailable.
Second thing you're going to do, by the way, is what I'm doing right now, which is contacting a broker.
Please hang up or press the pound key for more options.
Hey, Carrie, can you call me back? I'm calling about your 18th Street or 18th Avenue deal. Can you give me a call back when you get a chance, please? Thanks. My name's Grant. Okay, now I got to wait for Carrie. Okay, so this is the proper deal sequence. Number one, find the asset. 2, contact the broker. 3, underwrite the deal. Underwrite the deal, okay? Now, I did some basic underwriting here already. But I'm not underwriting the deal yet. Like, I'm not going into heavy underwriting. I'm just doing a napkin to look at, okay, they want $2 million, why? Now, I already know what I'm going to ask this woman. And the question I'm going to ask this woman, first of all, you're going to hear the call go down like this. Man, I love this asset. It's fantastic. I'm trying to buy St. Petersburg. We've been there 3 or 4 or 5 or 6 times. Like, I'm going to literally like tell this story about, I'm trying to get down there. I'm trying to buy down there. I have friends down there. My friend Trish is in the art gallery down there. I got some other friends that live down there. My brother lives just south of there. I'm going to build this story about how I'm going there and I want to invest in there. I love this little 11 unit yellow asset. And then I'm going to say this. Once she's convinced of that, I'm going to say, why are they selling this asset at this time? Okay, why are you selling at this time? This is what I have to find out. What am I looking for right now? $100 to the first person that knows what I'm looking for right now. I'm looking for a word.
Distressed?
7, I'm looking for 7 letters. A 7-letter word. I'll give you a riddle. 7 letters.
Leanne said.
Okay, motivation. I'll take motivation. She, he. I'm looking for motivation. I'm looking for urgency. Urgency was the word I'm looking for. I'm looking for some like, hey man, something has to happen by a date. Okay, you know, there's a thing, if you guys have studied in my material on negotiating and closing, there's one thing that you have to have in a deal. Actually, 3 things. You have to have a decision maker. You have to, or they have to want the product. If they're buying from you, they got to want the product. If I'm buying from them, I have to want the product. I have to believe it's going to solve my problem, whatever my problem is. And the 4th thing I got to have is urgency. I have to have urgency from them, and I have to have urgency from me. Okay? Like, if I don't have any urgency, I'm not going to make a decision. So you got to have to figure out how to create urgency. So I'm trying to figure out, why are they selling? Well, because first answer will always be a lie. It's going to be a no answer. First answer is really just a no answer.
It's just their time to sell.
It's their time to sell. You'll get these very generic answers. Well, this was their business plan. Okay. And then the second time you're going to be like, yeah, but why right now? You're just going to ask the same question again, just a little longer. But why right now? I mean, it's kind of not a great time to sell. Well, because you're going to get a whole bunch of la la la. Okay, and the third time you're going to ask, yeah, but like now? Why now? And then you're going to be like, oh wow, they got a loan coming due. That's what you're looking for. Okay, now you may ask this question at this point. Hey, what if they don't get their number? What if they don't achieve their number? What you're trying to find out is, they sellers are what's called a market seller. Okay, are they really sellers at market prices today? Because I'm going to go out here and I'm going to show you something I'm going to look at. While I become interested, now I'm showing you guys the whole country right now. Typically, you're going to be shopping. If you're in Tampa and you're trying to buy St. Petersburg, you're just doing all your research on St. Petersburg. If you're up in Philadelphia, you're shopping Philadelphia. You're not looking at Philadelphia, Southern California, Sarasota, Florida, and Alabama. Like I'm looking at everything right now. So let's just go back here and say, I want to go to. I'm going to go back in here and put in. Was that Sarah? No, that was
St. Pete.
And let's see what this has to give me. Okay. Oh, look what LoopNet gave me. LoopNet gave me a bunch of stuff. Okay, here's the deal, 5 cap, $5 million. Here's a $2 million deal. That's not the same deal, is it?
No.
No. Here's the deal, $425,000. By the way, there's 6 or 7 or 8 of these different mechanisms I could be using right now. I'm just showing you a couple I'm using today. Here's the deal for $6 million, $650,000. Here's an 11 cap. What did I tell you guys about 11 caps earlier? Okay, the higher the cap rate, the less the appreciation is going to be. What's the problem with this deal? It's only 2 units. Is that good or bad? I could buy it for with $30,000 down. There's a 2-unit deal in St. Petersburg you could buy with 30 grand. I'm just saying, you guys want to get started with that deal, that's $30,000. Like, somebody will give you 30 grand to buy that deal. And that would be a Fannie Mae loan. Here's 5 units, $1 million. Here's an 11 cap in St. Petersburg. 7 cap, 4 units. There's a 4-unit deal in St. Petersburg. See, now that I'm in a market, you see what I'm doing right now? What am I doing? I'm not doing anything else because I hadn't contacted the broker. You don't even need to worry about the rest of the list right now. All you had to do is find a deal, contact the broker, okay? If you go back to the page, the third thing you're going to do is you're going to underwrite the deal. I'm going to underwrite the deal once I contact the broker. There is no reason to do number 3 if you don't talk to Carrie, who's clearly not working today. The buyers are working and the sellers don't. This is a phenomenon. The sellers and the brokers, what do you call brokers?
They're broker than the investor.
Broker than I am, okay? I'm underwriting deals, working deals, looking at deals, shopping deals, and what are they doing? They're taking the day off. Number 4, I'm making an offer. Once I underwrite the deal, once I talk to her, underwrite the deal, then I'm going to say, I want this deal. I'm going to make an offer and control the deal. I have not called a bank. I have not called my investors. I have not called the city. I have not got an insurance quote. Okay, number 5. And then I'm going to get debt quotes. At this point, I will call a bank. Once I have a deal under control. If I don't get to number 3, I'm not doing number 6. So you guys are wasting time on a whole bunch of bullshit that literally will never get you any deals. And then you're like, oh my God, I'm wasting all this time. Because right now what you should do is contact the broker and wait for her to call you back. Hit her again later today. Hit her again tomorrow if you want to. Call her on Sunday. Call her on Easter. Just keep banging her, okay?
Send an email, send her a text.
Yeah, exactly. And then the rest of your time, you should be shopping the rest of the market. Get in your car and go drive the product. That's what we do. I'll bet you I spend, to be a professional real estate investor under the IRS code. What code is that? You need to spend 750 hours and or, is it and or or?
And
50% of your professional time. Is that right?
yes.
Investing in learning about, studying, shopping, managing real estate. Go ahead, Jared.
IRS Section 469 C7C.
We got Jared? Okay.
IRS code 469.
Okay. You go in, you check a box. I am a professional real estate investor. I spend 750 hours. That is 60 hours. That is how many hours?
15 hours a week.
15 hours a week. And 50% of my time. 50% of my working time. So that would mean if I have a 40-hour job, I spend how many hours doing this?
40 hours or more.
So I work an 80-hour week.
Correct.
Yeah, that's easy for me to sell. I work 40 hours at my job, and I work 40 hours doing this. Okay? The first time I applied for this, I owned 1,600 units at the time, had 2 other businesses, and they denied me this. I had, $40 million worth of real estate. So you can't be a real estate investor. I said, excuse me, why? Because we know all the other activity you do. It's the IRS, dude. They know everything you do. I said, okay, why is that? 24 times 7 is 168 hours, okay? I only work half of the time I have available. I mean, I don't know why you guys have a problem with it. You have a problem with it because you guys only work 4 or 5 hours a day and rip the government off for the other 6, okay? I happen to work only half of my 168 hours a month. 40 hours is worked on my speaking business, my consulting company, and 40 hours is on real estate. And I'm trying to figure out how to find another 20 hours a week. So, like, you don't tell me I can't do it, and the next year they approved it. And by the way, they went backwards and gave me credit for the year that I actually assigned for it, because I was able to validate how I worked 40 hours on this job and 40 hours on that job. What does that mean to me? That means all earned income, if I earn $2 million a year on my main business, okay, when I was earning $2 million, and I could buy real estate and show a $2 million loss on my real estate, a loss, my tax bill would be 0. This, ladies and gentlemen, is worth everyone here taking extremely serious. Particularly those of you earning 100, $150,000, $200,000 a year or more, it will be very important for you to learn how to use this. This only requires that you invest in a piece of real estate where there's what's called depreciation. This is not actually a real loss. This is a paper loss, okay? In fact, this property, my earned income's $2 million. The property I bought could actually earn another $200,000. It could earn $2 million, okay? And I would still be allowed if the depreciation, let's say the depreciation was $10 million. I wouldn't have a zero. I would have a negative $8 million. I would have
7.8.
I would have a negative $7.8 million. Thank you, Ryan. That was great. You were really attentive. My loss for the year would be $7.8 million. Even though I earned $2 million from my main business, $200,000 from my investment, I had a $10 million loss on the thing that paid me $200,000. Okay? Right? I have a $7.8 million loss. Guess what happens to the loss? I pay no taxes that year. I get refunded everything I've already paid the IRS, which they rob me every month. I don't know, what do they take from me? 20% of my money? They're withholding from you guys at 20, 23, 24, 25% a year. They withhold from your checks. All the withholding they did through the year gets refunded back to me. And guess what? I get to carry that loss over to next year as well. So next year, same thing, bro. I got $2 million coming in. Okay? Let's say I don't even buy any real estate next year. My real estate now this year pays me $300,000 because the rents went up. So now I got $300,000 on my return for cash flow. That's $2.3 million. And I have a loss, $7.8 million. I take my loss right here. We didn't buy any real estate that year, and this is a loss. I still am negative, by the way. I'm still negative $4 million, whatever,
5.5 million.
Yeah, I think it's like that, right? Oh, it's 5.5 million? Yeah, I'm negative $5.5 million. This gets carried over to the next year. What do I owe in taxes that year? Nothing. Got something for you. Okay, hey, by the way, give me my damn withholdings back. And I get a refund in March and April.
So a couple people are just asking a little bit about how that depreciation would work.
Mm-hmm. So, depreciation works like this, okay? Let's say, I'm gonna take a house. Let's say you paid $2.7 million for a house. Single family home, okay? That house is allowed 27 years of depreciation. That means each year, let's say the entire house can be depreciated. It can't be because the land does not depreciate. But roofs do, appliances do, kitchens do, flooring does, walls do, blah, blah, blah. But let's just assume that the $2.7 million is the house itself that can be depreciated. Just for simple math, that means $100,000 a year you're allowed to depreciate on that house. But in commercial real estate, they took this rule and they said, no, we're going to accelerate this. We're going to encourage investors like Grant Cardone, great Americans, patriots, investors, risk takers, entrepreneurs. We want that money going back into the market and providing housing for America. And when he does that, we're going to reward him with an accelerated depreciation. And this year it's 100%. That means I can take 100% of that same purchase because it was a commercial asset, not a residential living place. I wonder how this is going to affect the Fannie Mae where you're living in one.
Yeah.
I bet it does. Okay. I can now take that full $2.7 million. In this example, if this was an 8-unit deal, okay, where it's not my primary residence, I think they're going to allow it because I'm not living there permanently. Okay, and I would be able to take this $2.7 million loss in the same year that I bought it, even if, by the way, I bought it on December the 31st and only had it for one day. I would be able to, right?
Yeah.
That year, I would be able to, let's say it's 24, December, I earned a bunch of money this year. I earned $2.7 million from my main job. I'm working at this job. Somebody gave me a big bonus, and I bought this thing for $2.7 million. Boom, I owned the whole thing. I didn't have any investors, because if you bring the investors in, you got to share the depreciation with them, unless you had an agreement with the investors. They can't use the depreciation, and you're like, hey, there's 10 of you buying it. You could do this, 10 people buying it, and you could be like, look, I'm going to keep all the depreciation because you guys can't use it or don't need it, and we split the place up 10 ways, and I manage it. And maybe your score is the depreciation, by the way. It'd be worth it to me just to have the depreciation off the deal. Okay, I'll manage it. You guys buy it with your money. I get the depreciation, because the depreciation is worth $2.7 million to me, because I'm not having to pay taxes. Okay, it's not really worth $2.7 million. It's worth about 40% of that or 45% of that, because that's what my tax bill would be. But in that case, I made $1 million score because I reduced my tax bill to zero. What's the number one expense for a household in America? Taxes. It's not your utilities. It's not your gas bill. This is what my mom didn't understand. My mom thought the way to control her finances was to reduce her expenses. I'm like, no, the way to reduce your tax bill is to have no income, and or better, have income and show no income. That is the best of both worlds. The best of both worlds is not to have no income and not pay taxes, because now you don't have any money. The best of both worlds is I have my cake, my bank, I have money coming in, and I don't pay it out because I'm collecting an asset. In fact, it's not the best of both worlds. It's the best of three worlds. I have income. I have no taxes. Okay. And most importantly, I have asset collection. Okay. It's the best of three worlds. I have the income. I keep making more money. 2, I have no taxes. Probably the best of 4 worlds. Plus I have cash flow from a new asset. Okay. And I have an asset. That is going to appreciate over long periods of time. I've shown that to you on almost every deal, including the St. Pete deal. 100 years that property has been here, and today somebody's going to make $1 million on it and be collecting rent from it for 100 years. Now, 100 years ago, the rent was probably $15 a month. And trust me, they were complaining about it.
But the most important thing still in any real estate transaction
is
the deal.
None of this matters. Like, if you don't have the deal to talk about, this is what's wrong with all the courses out there.
That's right.
You're spending all this time talking about learning about real estate when you should be like, why don't you just go look at a deal, bro? Give me any city, I can find you a deal. I'm going to go to Omaha. I've been to Omaha one time. I don't know why I'm thinking about it this morning, but I tend to do, like, just follow my instincts. Omaha, Nebraska. A lot of development happened there in the last 3 years. Tremendous amounts of development, okay? Look at all the deals over there. Let's see if I find something cute. This is all I'm doing. I'm just scanning. It takes very little time to do this. This is what Ryan's saying. Find a deal. I'm still waiting on Carrie to call me back. She's not going to call me back today.
It's a he.
Whatever. Let me see what this is.
No comment.
Listen.
No comment.
Listen.
Hey, good afternoon, Mr. Grant Cardone. This is Elvis Samore with Kingwell Banker Commercial Realty. I was reaching out. I know that I saw a few assets in Florida, which has your ownership, the Grant Cardone Capital or Cardone Capital. Just looking forward to connect with you and have a conversation. I'm not sure or what can we do to assist with your investment portfolio. We are here to assist.
Yeah. Delete. You can't do anything. Okay? But why is she calling me? Because I put the ET on my ass. I got the asset. Okay? What the attention's going to follow the asset. They want assets that I own. So who are they calling? They're doing the same thing I'm doing right now, calling the property record, the owner on record. Hey man, you got this thing, bro. Would you sell it?
Yep.
Nobody's calling you guys. Why? Because you don't have anything anybody wants, right? The way to get people to call you is you got water at the table, baby. You got what they want, man. Serve me some water. Serve me some coffee. Give me something. Wash my car. In this case, hey, I want your property, okay? And the better the property, the better the call is going to be, all right? So look at these deals. Here's one in Omaha, 11 units, $1.7 million. Okay, you could buy that deal right there with a couple $100,000 down. Need a couple investors, and you could do the deal. Here's a deal, 6.72 cap, 26 units. I like this deal. 1825 divided by 26. Okay, it's $70,000 a door. How's that not a good deal? I don't understand how this is not a good deal right here. Okay, here's a 6-unit deal right below it for $500,000. Omaha, Nebraska isn't going away, folks, ever. $455,000 for 7 units. Look at this cute little deal. I'm just showing you guys the sequence at how I do deals. I'm just looking at deals on a Saturday afternoon when I got nothing to do. I'm just banging through deals. If this is heavy work, what does Jay-Z call this? This is easy work.
Light work.
Light work. Okay, but it's work. Okay, what am I looking for though? Okay, I'm going to look at hundreds and hundreds and hundreds of deals before I write a deal. Today, we're going to probably look at 100 deals to buy one. Okay, so I'm going to.
Grant, one of the things I noticed about you, you're always looking at the number of units, though. Like
the most important number in real estate, depending on where you're started, you guys need a target. Okay, number of units is the number one most important thing you should be looking at today. Now, if your number of units is 4, confine your look to 4, maybe to 14. Okay. Be willing to look bigger than you are, okay? Like the 10X rule. The 10X rule suggests, hey, you're going to look at 4s and 40s. Now, in my case, I'm not doing those deals anymore. Doesn't mean you can't do those deals. When you're looking for 1 unit, you're going to find 1 unit. When you're looking for 4 units and open to looking at 40, guess what? You're going to see everything from 4 to 40. You have to find your place. You and your spouse need to figure out, hey, what's our little sweet spot? I would suggest to you, as I have many people, for a long time, it is easier to buy a big deal than it is to buy a small deal. Now, that's not going to be true for you until you do it. Okay, it's easier to buy a big deal. It's easier to ski on 1 ski than it is 2 skis, but you cannot convince a person that's never been on 1 ski that it's easier than 2 skis, but it is. So if you guys could trust me, okay, it's easier if you have a big network around you to buy deals. It's easier to buy deals if you've done deals. Like if you guys could rob my confidence, like if you could know when I look at a deal, I just know something about the deal that I can't teach anyone. All I can teach you right now is what I'm sharing with you, but there's some reason I like this 25th Street deal. I won't buy it. I'm not going to spend any time on it. Why? Because it's only 7 units. So what's my deal? My deal is 200 units plus. I'd prefer it to be 1,000 units in 4 locations in the same city. And then I would prefer it to be in Sarasota. If I could get all 1,000 units, 4 buildings in Sarasota that were built in 2020, I would buy all those. But I get my confinement down so I know what I'm looking at. Right now, you just need to start looking. And where do you start? Marketplace. Wherever you are, wherever you're standing right now, okay, the first thing you would do is look at the house you're in right now. And you should underwrite your house right now. What's it worth? Why is it valued? Does it have rental income? Is it a good deal? Oh, I love my house. It doesn't matter if you love it. Is it a good investment? Because it could be a terrible investment. You should underwrite your own house or wherever your apartment is. If you're in an apartment building right now and you're in 12 units, underwrite your 12 units. I'm in this unit, underwrite yours, and then 11 more, and then figure out if it's a good deal and talk to the owner and say, bro, why does this work? Why is this a good deal? This is exactly how I started. I literally started in this little tiny neighborhood I was in and then started getting wider and wider. I see some of you guys in Toronto shopping in Florida. Bro, you can't, why don't you figure out Hamilton, Ontario first? You're up in freaking Calgary. Figure out Calgary before you try to come down to Baltimore and buy real estate, okay? So what's the order? This is a logical path to you making your first purchase, and it should have a $1 million score. If we add the $1 million score phenomenon, some of these deals you're looking at aren't going to get home, okay? I'll show you why in a second. I'm going to show you a matrix. Is it today or tomorrow? I'm going to show you a matrix that I've created for you, a cheat sheet. I think it's tomorrow. Okay? I'm going to show you why the number of units that Ryan just referenced, this is the single most important thing in all of real estate. Because
It's later today.
Yeah, 7 units at $10 a month, if I raise the rents $10, is not the same as 270 units and the rents are raised $10. But I got to start somewhere, Grant. Yeah, what you need to do is start where you're at right now. which you're starting here. Okay? The reason you guys don't want to go to 270 units right now is because you're out of sequence. I can't do 270 units. No. You because you have been made to believe that you can only buy what you can afford. And that's not true at real estate, okay? This is not like going to the grocery store to buy groceries for your house. We're only going to buy what we can eat. That's not what you're doing here, okay? You are going to go buy what feeds a whole bunch of other people, including your partners. In this case, your investors, okay?
Because if you had the network, Grant.
You had the network.
If you had the network
and the equity,
showing you.
And the lender.
Hey, this is a good deal. Here's how to get the debt. Here's how to raise the money for it.
Yeah.
And then you had the network of people to give you the confidence. All those things would give you
the deal.
I'm gonna go play at 270 units.
Yeah, and it's easier to raise money on that 270 unit deal in a great location, a great state, and a great positive story than it is to raise money on 7 units, because the 7 unit investor is going to be like, bro, where's the score here?
Too small.
Oh, by the way, I can do this deal without you. See, this is why you'll find on the smaller deals, you got to sign a confidentiality agreement before I show you my deal. Yeah, because they don't need you to buy this deal. So you're all worried about sharing something with them. Dude, I share deals with people, they can't eat this deal. I'm like, let me show you this deal I'm looking at. They're like, God damn, that's big, okay? I can't do that deal. Here's the deal we're doing right now. Where's this?
Fort Myers.
Yeah, Fort Myers.
We close on your birthday.
On my birthday, I closed this deal at $60 million.
50, under.
A little under $60 million, $56 million. I'll show this deal to anybody. I showed this deal to people before I was buying the deal. Okay, why was I willing to show it without a confidentiality agreement? Because 1, most of the people didn't have the money. Number 2, you don't have the network. And 3, I already had the relationship with a broker. There was nobody going to go around me on the deal. We already had a contract on the deal. Why am I worried about it? Okay, so why am I telling you all this? Because the sequence, the order in which you think about an activity is going to determine whether or not you actually get an activity done. And in real estate, what most people do is they worry about their equity. This is what most people do. How much money do I have? Can I get a loan? Both of these are in question. You have limited amount of money and limited amount of credit. So you immediately say, I can't buy real estate. This is what Wall Street's made you to believe so they could sell you a shit piece of paper over here worth $1. And they can make money on this piece of paper. Every time they sell you this garbage, they make money on it. This is their game. They do not want you in the real game. They want you in the pretend game. They want you to save money. They want you to buy certificates. The worst thing that Americans have ever bought is a bond. The most ridiculous, dumbest fucking thing on planet Earth is to buy a goddamn bond backed by the U.S. government to do what? Fund your kids going off to a war typically, or to build a street, okay? This is funded by the taxpayers. And you put your money in it. Why? You don't own anything. You got a piece of paper that pays a percentage. All your parents and my parents were convinced to do this, and that it was safe. There's nothing safe about it. It's not even real. It's completely made up. This is all debt. Most of your investments, by the way, the IRAs, 401ks, the insurance premiums you buy, it's all debt related. For those of you who don't like debt, and this is the problem with Dave, Dave says don't take debt, and he don't understand this by itself is debt. You're being paid in debt. It's backed by nothing. This is the deal, okay? So most people do this. They take the cash as the most important thing, then I got to get a loan, and then I got to find a deal. Guess what happens? Your deal's shitty because it's based on your cash and your debt. So this is what we did with our club. Hey man, flip the model. Do the deal, then you get the debt. If it won't support debt, you don't have a good deal. Great deals will get debt even in bad markets. Great deals will. And then the cash or the equity, this is where your partners come in, okay? I have 14,000 partners. There's no problem with partners. I'm telling you right now. If anybody said partners are a problem, okay, they could be. Being by yourself is a problem too, okay? You going through troubled times, you do not want to be by yourself. You'd like to have 14,000 people rolling through the neighborhood with you. Could there be some people bad in there? Yeah, there could be. It'd be worse if you were by yourself. Because if you're by yourself and you're going through a bad time, you're going by yourself, you're not coming out by yourself. You're coming out without you, okay? Number six on page 13, raise the equity once you have the debt quotes. Do not start trying to raise money from friends and family and you don't even have a damn deal yet. This is why you guys get killed. You start telling, Jared, I got this deal. I'm working on this deal. Blah. Tell me about the deal. I don't want to really tell you about the deal because if I tell you about the deal, then you go do the deal without me. And then, no, man, do this. Get the deal, underwrite the deal, have the debt on the deal. Have a bank saying I'm going to give you a loan on a deal. And then you go say, hey, Jared, let me tell you about a deal. I already, by the way, have the debt. Meaning I already have a lender, 3 lenders giving me quotes that are interested in financing this deal. Number 7, now you close the deal. Now you're going to have, on number 7, make a note here, you probably have somewhere between 45 and 90 days between when you first underwrote this deal and when you can close this deal. Sometimes longer than that. If it's a HUD loan, you could have 9 months.
Or if you just asked.
Or you just asked the guy, hey man, I need 4 months to close the deal.
Is timing important to you?
And by the way, I need an extension of 30 days.
Right.
Okay, by the way, I'd like to have 2 extensions. Okay, well, look, if you give me $100,000 down and it's non-refundable, you can close in. Right now, we're in February, March, April, May, June, July. Well, let's just get it closed by August, okay? August 15th, and I'm good. But if you don't close, I'm keeping your whatever. Number 8, you close the deal. Now you got to manage the asset. Time to put your name on the asset. Cardone Capital, okay? Carlos Real Estate Company. Ashton McDonald Management Company. Now you're going to start managing and collecting rents, fixing the place, taking care of the place. Number 9, now it's the time to raise the rents. It's time. Okay, how do you raise rents? You make it up. We're going to raise the rents $50. Now if you have 11 units, how do you raise rents, right? If you have 11 units, and let's say 1 unit every month is renewing. You were smart about your renewals, so you staggered everything, January to January. Next guy came in February to February. March to March, there's 12 months rent. So every month someone's renewing. And next month in March, we got 1 renewal coming. In April, you got another one coming. Okay, these are long-term 12-month leases, not long-term. Okay, you're going to add $50 to this guy in March. Okay, he takes it. Next month, you might want to say, tell this guy it's going to be 75 and see if he takes it. And you start testing the market. Now, the more units you have, this 11 units over 12 months, right? The more units you have, the more testing you could do. So if I had 120 units, and let's say 10 are renewing every month, then I could trial 10 in March and say, guys, we're going up 50. If all 10 take it, what do you know for sure? You don't really know that right now. You just know 1 guy took it. But if 10 guys take it, say, oh yeah, I'll stay for $50, no problem. What do you know? Shit.
It's too low, Grant.
Dude, you might want to go to 100 and see how many of these take it. Mm-hmm. Oh my God. Oh my God.
No way.
Oh my God. I can't believe this. This is so awful. You know, you hadn't been picking up the trash lately. And my neighbor's so noisy and the dog barks. And you go, my air conditioning's a problem. Okay, but I'll do it. You know, now what do you know?
Yep.
In May, you're going to have another 10 people with their rent coming due. You might find out that there's another $10 or $12 there. Now, it's already rumbled through the rest of the building, by the way. 10, 20 people now have had their rent raised. Everybody in the whole building by May knows, hey, rents are going up. Because the McDonald management company's here, and they're terrible people. And they're going to call you terrible people, folks.
Can you move people up early? Like if you've got a lease in place and you say, hey guys, look, when you renew, your rent's going to go up $100, but if you sign now, I'll get you in for 50. And then just change your rent that month, and then add it onto the contract.
Guess what? You own the property. You get to do anything you want.
That's a good deal.
Nothing's illegal here unless you're in Hollywood, California. Okay? And then you have rent control. So what's the rent control limitations? You got to find out in your market. We don't have any rent control here. And I will tell you guys, in markets that there is rent control, sometimes the rent control actually helps you. So there's markets where there's a 10% cap on rent control. Dude, you can't even raise the rents 10%. 10% on a $1,700 rent means I would have gone $170 every month and I only did $50. So for you guys that are freaked out about rent control, sometimes rent control is actually your friend. Okay, guys, we were going to raise the rents 20%, but because of the old Newsom over here, we're only allowed to raise it $120. So you should vote for him again, and we're going to raise those rents $120 because he said we have to. Okay, I'll do it. Okay, why? Because they put rent controls in markets that are heavily saturated, very dense markets, and they can't build anymore. Okay, in fact, in California, what they're doing is they're offering Jared to say, Jared, you can build your garage into a unit and actually have a tenant there. That's how they're going to solve the housing problem in California, supposedly. Okay, we're going to turn garages into units. Okay, number 10, manage the asset for sale or refinance. Got to remember, guys, when you buy these deals, and you need to be thinking about number 10 while you're doing number 3. Okay, I see a lot of people do number 3, number 4, number 5, number 6, number 7, number 8, number 9, and they're like, oh shit, forgot about number 10.
And they're all excited about it too.
Yeah.
Who are you going to sell it to?
You're in a town of 3,500 people, bro. Okay? You have one event in that city, one event, one railroad problem, like we just had this year or last year. One little problem in a town. Now 3,500 people are out of work. 3,500 people are gone. 3,500 people can't drink the water in that town. You know? Number 11, sell or refinance or bundle. Sell, refinance, or bundle. We're going to sell the deal. We're going to refinance the deal. We're going to bundle a deal. I'll be talking more about that tomorrow. It's how you really create tremendous, tremendous generational wealth in real estate. And number 12, scale and build out your portfolio. How do I do it a second time and a third time and a fourth time and a fifth time and a sixth time? And I would just tell you guys, see if you can consolidate all your products in one marketplace. Don't be scared. Once you've determined a market is good, this is a mistake I made. Once you know you're in a good market, man, just go get it again. There's nothing wrong with owning one on this end of the block, one on that end of the block, one across the street, 2 blocks over. If I did anything different, there'd be 3 things I would do different. 1, I would have started buying real estate earlier. 2, I'd have bought it bigger. 3, I'd have bought more. 4, I'd have never sold anything. And 5, number 5 things I would have done differently. This would be a great clip, by the way. 5th thing I would have done is I'd have bought the whole freaking neighborhood. I'd have bought every little pocket around there. I'd have Cardone on this one, Cardone on that one. I would just literally become the apartment owner in that market over time. Okay, 5 biggest mistakes I made in buying real estate. 1, I'd have started earlier. I wouldn't even have gone to college. It was a waste of time. 2, I would have bought more. 3, I would have bought bigger. 4, I would have consolidated the assets, okay, and bought more in that location. And then 5th, before I went to another market, I would have just doubled down where I was.
Never sold anything.
Huh?
Never sold anything.
Oh, yeah. And I'd have never sold none of it. Not a piece. Okay. All right. The asset is senior to everything. All of those things, the asset is senior, but you have to put those other pieces together. The asset is most important because when you're looking at what's most important about the asset, when you look, what I want to know next is most important sequence in the asset being important is the location of that asset. Whether it's 1 unit, 2 unit, 4 units, or 44 units, where is it located, okay? Now, there's an old adage, by the oldest, what is the adage?
By the least expensive house in the most expensive neighborhood.
I wouldn't do that. I would buy the best location, regardless of the price. In fact, if I had to pay more money, and when I'm talking about a location, let me just show you this location, 6422, no, 64, let me see if this address is right. 6422 Camino
De La Costa.
De La Costa.
I thought you were talking
Okay,
about
you see this location, huh?
I thought you were talking about Boca Raton, Camino Royale.
No.
Is it a house?
Not everything's about you, Ryan.
About us.
Okay,
Us,
okay.
us, Grant.
You see this? This is some great real estate right here.
Oh, is that your house?
Yeah. This Camino de la Costa, La Jolla. La Jolla, everybody knows if you've ever been to La Jolla, you live in America, you ever been to San Diego, then went to La Jolla, you're like, oh, La Jolla, oh, God, La Jolla. Everybody has this reaction to La Jolla, okay? But watch. Then there's La Jolla, San Diego's a location. First of all, California's a location. Oh, my God. Then San Diego's a location. Oh, prettiest city in America. Then La Jolla is like, oh my God, dude, this thing is like, what's it called? La Jolla is like the pearl by the sea or something, jewel by the sea, okay? Okay, then those are all micros of the location. The location's getting better and better. Then there's the street. Camino de la Costa is the most expensive street in all of La Jolla, California, okay? It is the only street in all of La Jolla where the owner has sand in front of his house. Wow. If you've noticed any of the homes that I live in, they all typically have sand in front of them, okay? Sand is money, bro, like period. It's going to be money. I'm not talking about an ocean, I'm talking about ocean and sand, okay? Now on this street, I don't know how I can show you guys this. There you go. Okay? I bought this house right here on the corner.
Wow.
Okay? Now, this house next door to it was always a dump. This was a great house right here next to it. This was a dump. It was torn down. They put a $10 million house there. This house has been, I don't know, somewhere between $3 million. When I bought it, I paid $3 million, and it's never sold for above $10 million. Okay, they actually have houses across the street that sell for more money than this house.
Interesting.
This was the worst location on a great location street. I bought it because I could enter into the market there, but I bought it only because I wasn't thinking big enough. I didn't understand what I didn't understand, okay? This is the pocket in the neighborhood I should have bought. I should have bought right down here. This is where the money really is on this street, okay? But look, I got on the right street. Like if you're gonna make a mistake, be on the best street. And then what you wanna do is you for a couple more $1 million, man, I could have been into the heart of this, okay? Because real big money does not want to be on that street corner. Big, giant money does not want to be on that corner. Now, there comes a point where the money gets so giant, they're like, yeah, we're only going to use it once a week anyway.
Once a month, once a year, yeah.
A couple weeks of the year, we don't care. But anyway, you get my point, I think, okay? I mean, this location is stupid, but. Now, when you get further and further down here, okay, when you get down, come around this point right here, like a lot of people that couldn't afford that went and bought down here on Bird Rock. Our friend Kent, a lot of new money went down here because they couldn't afford to live in this heart. Okay, but folks, when these places appreciate, you want to be in the best, you want to be in the meatiest pocket possible. It is better for you to stretch your money. I'm not talking about single family here, but particularly apartments, okay? Now you're like, hey, you show me a single family home, but talk about apartments. Because, and I'll go back to this, I had a deal on La Jolla Shores Boulevard. La Jolla Boulevard right there. If I back up here, I'm gonna see it. This is 1996. And I could have bought, let me see, La Jolla apartments for rent. I know because this deal's been around 30 years and I could have bought this and I didn't and I should have. But I didn't buy it because the cash flow wasn't high enough. La Jolla Boulevard right here. Let's see. Look at the rents.
How much are they?
$8,500 a month. Okay? Now, I could have bought this thing for a 5 cap. This is on La Jolla Boulevard. I know it's a 40-year-old complex. It's full, it's 100% full for 40 years. Always had a tenant, okay? But it was only a 5 cap, okay? Meaning I could only get a 5% return. This is at a time back in the day where you could buy properties easily for 8 caps. And I'm like, nope. And I had the money to buy the deal, and I X'd it off because I'm like, I have to have an 8 cap. And I went and bought the 8 cap deal, okay? These rents explode. No, the rents explode on this deal, okay? And they just kind of do this on this deal. These explode. When things are good, the rents just spike because there's no way to buy that asset. This is when I bought that Mesa deal. Mesa Vista, California, in Chula Vista, California, and Oceanside, rather than buying La Jolla, California.
Yeah.
Okay. And when you say you own something in La Jolla in that pocket, I'm just saying, if you guys cannot compromise that location and have the courage, how do you get courage? Dude, get a mentor. Get somebody to look at your deals with you. You're going to have a bank look at the deal. You're going to have an appraiser look at the deal. You're going to have your tenants look at the deal. If the deal is on a high visibility street in a great location with no crime and great people and great tenants and people want to live there, guess what? The cost of managing that property is going to be less. Yes, Brian, what did you have?
You said back then it was in the 90s, right? You were buying for 8 caps?
Yeah.
When you started, you had mentioned cap rates, the biggest dependent is debt. Was debt higher back then? Is that what drove the cap rates?
Interest rate was probably 7 or 8. There was still a spread. It's probably 6 or 7. I don't know. Maybe we were buying 8s and 9s back then.
And what were the rents on that deal?
Oh, the rents probably back then were probably $1,100.
And they're $8,500.
$1,200. Yeah, we thought they were outrageous. I'm like, who's going to ever pay $1,200 a month in rent? They're $8,500. This is another big mistake. I have always underestimated how much rents would go up. And I'll bet you most people watching right now have too. I'm not the only one that made that mistake. There's an old saying in real estate, all real estate sellers have been wrong. Think about that one. Okay? Real estate sellers have been more wrong than the buyers. Now, that won't hold true in this cycle that we're going into right now. There's going to be a whole bunch of wrongness. Yeah, look at that. That's the property. $8,500 rents.
Wow.
So imagine this, okay? The rents on this deal, there was 200 units there. And the rents were $1,100 a month, and now they're $8,500. Let's just look at it's called the increased value formula. We talked about this in the webinar that I did, okay? But this is called the increased value formula to figure out how much money was made for whoever bought this.
Rates were about 6%.
Yeah, okay. That makes sense, okay? Where they're at today, by the way.
So
same place.
So cap rates have to go up to get that positive.
Yeah.
Yeah.
So we're at the same place today. Interest rates.
Cap rate needs to be higher than the interest rate.
The difference is today between then is we have much more of a renter nation than we did 30 years ago. This is 30 years ago. People didn't rent 30 years ago. Renting has become a popular thing to do now. Leasing a car 30 years ago was taboo, man. Nobody leased a car.
Right.
How many people here lease a car today?
Oh, everybody.
Okay. Like, if you don't lease a car, you're wasting money. Leasing a car is the cheapest way to own a car. How many of you don't even have a car anymore? That will become popular in the future. Everyone will Uber, okay? So what's going to happen to the parking spaces in apartment buildings? It's going to be a solution to apartment housing and housing in America. We're going to convert parking spots to actually residential ownership. Miami will be a perfect city for this to happen to. Get rid of the 200 parking spots. We'll have Uber-only living, okay? You will not have a car at the spot, or you'll pay premium to have your car. You will not have two parking spots for every tenant, or what is it, 1.5? So let's say I got a 200-unit deal, and I had to have 1.5 parking spots. I had to have 300 parking spots. You know how many freaking units I could put on 300 garages? Or 300 parking spots. What am I using it for? To store a car that nobody pays for. You drive it 40 minutes a day. It's a complete waste of money. Okay? So in California, it would be a perfect place to say, convert all parking spots to housing. Give me a freaking exemption or some kind of tax rebate to do that. Help me build it. But the people that live there have to Uber. Reduce the amount of vehicles on the road. I'm running for president.
Right. You've got my vote.
I just came up with a great solution, man.
GC.
Okay, all right, let's see where was
it. So 85.
Yeah, so the rents have gone up $7,400.
Yep.
So we're going to take 200. Everybody's going to do this. You guys at home right now, take your calculator, 200 units.
Wow.
Times $7,400. Guy told me to buy the deal too, bro.
Dude, it's $1.48 million per month.
Times the income every month now from the increased rent is $1.4 million a month. Times 12 is $17 million in new income a year. By the way, this property's been there for 30 years. I didn't buy a new business, start a new business, no new product coming out of the business, no technology breakthroughs, same air conditioning, same heaters, same floors, probably a different roof. Different paint job, probably been 3 paint jobs on the place. Okay? And let's say I don't collect all the 17 million. Let's say half of it goes to expenses of operations, which would be an exaggeration.
8.8 million.
It's $8 million every year of new income divided by, that's a 4 cap all day long.
Oh my
And that's
God.
what the property's worth now. $222 million. More than it was.
How much was it for sale for when you were looking at it?
$34 million.
So it's $1 million per unit, thereabout?
Yeah, I just couldn't make sense of it, dude. It was like $150,000 a door. I was like, man, there's no way. But you know what? It's because I was rolling by myself, folks. You're rolling by yourself, man. Look, I'd rather roll with an enemy than by myself. You know, when you got the enemy with you, at least you know, hey, shit, man, I'm good. I'm a good guy. He's a bad guy. When you're rolling by yourself, you don't know. You're just rolling by yourself. You're rolling by yourself. You're not sure. You can't check yourself against anybody. And I didn't know. And then the other thing is you start asking other people around you, hey, what do you think? Dale, fuck, it's expensive, dude. I don't see how you make sense of it. It was like a 4 cap. It was like 4. It just didn't work, right? And he's like, you can go buy this other deal and get an 8 cap. I'm like, I got to go for the cash flow. It's my upbringing. My upbringing kept me from my upbringing. Mm-hmm. Okay, I don't want that to happen to you guys. That's why we're doing this. Remember why I'm doing this with you today. I'm trying to educate you, help you, support you, be a network for you, be confidence for you, so that you have things in the right order and you don't miss, by the way, that is $250 million on one deal because Grant Cardone didn't have a mentor. 30 years ago, you didn't have this.
You didn't let that happen to you again, though, with the Harbor portfolio.
I kept looking, man. I kept looking. I knew I was doing something wrong. Look, at some point, you guys have to be committed to this. 5-letter word. With an H. Okay. Okay. Wealth. Okay. 5-letter word with an H. Okay. Wealth, by the way, comes from wealth, man. I was always committed to wealth. That's why this one deal that I didn't get, I'm not sick about it today, because I found another deal, because I kept educating in my wealth. Now, so you guys know what I've spent on my little 40 years of going from Grant Cardone broke to Grant Cardone where I'm at today. Dude, I have spent so much hustle, so much time, so much energy, so much dedication. I was at a place last week. I spent 5 days. All I did all day was on course learning. Okay, I asked him, I said, how many days have I spent here, coming here to learn? In the last 10 years, 174 days was spent at that one location doing courses. So you guys, if you're not going to invest in your wealth, okay, and you think the government or a job or your boss is going to give it to you, trust me, you're never getting that unless you're going to dedicate your time, your energy. It's not your job. It's not your boss. Your company's not keeping you away from this. You're keeping you away from this. And it's not just the 2 hours you're going to spend with me today or the 2 hours tomorrow, dude. This is a lifetime commitment to wealth creation, to creating generational wealth that can change the trajectory of your family forever and literally break the curse of poverty that has been, put on so many people unnecessarily. But you guys can crack the code on this, okay? Let's go to 15. The asset, what is most important about the asset? When you're looking at the asset, what am I looking at? Location. Number 2, the type of real estate. You cannot leave here and just start looking at grocery centers and shopping centers and apartments and malls and vacant lots and storage and luxury homes. And like, you guys are looking at everything like the same thing. I don't look at all that stuff, okay? Number 3. Or number 4, or number 3, what size deal? Figure out your target size. 4 units, 40 units, 400 units. Number 4, you should know your potential profit. Personally, there was a time when I made a decision, I am not doing a deal again that won't make me $1 million. When I made that decision, guess what I found? $3.1 million. Okay, first deal, I didn't have a potential profit. I just bought a deal because it was a deal. And I'm glad I bought the deal, but it could never make me a big score. It could never change my life. Actually, what it did was just give me another job and a distraction to the life that I had. Okay, all I had to do was, okay, ink, just twist it a little bit, add this. Okay, location senior, I want to be at least 16 units, and I need a potential profit of $1 million. How do I do that with those parameters? Oh, well, you know what? Maybe you need to stretch to 30 units, figure out how to have a partner, raise the rents a couple hundred, boom, and you hit your potential target. Number 5, how much monthly cash flow do you want? I see a lot of people buying deals that look like they're going to be good in the future, but there's no cash flow today. In fact, some of you have convinced yourself to have negative cash flow, believing you're going to be able to hang on to the deal. Okay, trust me, you're not going to be able to hang on to the deal. When it gets bad longer than you think. Like when you're getting beat up, in the moment, it lasts a long time. Okay, even if it was only 3 or 4 minutes. Once it's over, you're like, yeah, that was nothing, man. Shit. Look, you ought to see him. You know, but when shit was happening, bro, it hurt. Like if you've ever been through troubled, hard times, like I went through 10 years of my life that felt like 50. So if you've ever been through tough times in your life, man, it feels like it's never, ever going to end. And when things go bad in a real estate deal and you're paying out $200 a month, $400 a month, $800 a month, boom, problem comes up. You're like, when's this going to end? Okay, number 6, who's going to manage the thing? How are they going to manage it? Okay, well, the deal makes $1,000 of cash flow. And you have to drive 2 hours to go fix the plumbing. You're like, dude, I don't want to drive 2 hours for $200. Okay, basically what you have is another job. Okay, how will you exit the deal? There should be multiple exits. You want to make a note here, A, B, and C. Sell it. The worst choice you will ever make if you bought a good piece of real estate. Now, if you bought garbage, you're going to be happy when you sold it. Mm-hmm. Okay, but this shouldn't be like buying a boat. You know, when you buy a boat, there's an old saying. There's 2 best days. The day you buy it, Sherry, and what?
The day you sell it.
And the day you sell it.
Because it's cheap.
There was that one 4th of July weekend, though. Whew, that was a pretty good day.
Yeah.
It's cheaper to rent if it flies.
Yeah, when do I get my jet ski? Didn't Brandon get me a jet ski? Is it coming?
Yes,
Yeah.
it is coming soon.
Yeah.
Oh, the wrap, the 10X.
Yeah. And B, refinance.
It's the fastest. It's a fast one too.
I don't need fast.
I was like, make sure he gets the one that goes like 80 miles an hour.
Dude, I don't need
Supercharged. It's badass.
Yeah. B, a better solution is to refinance a real estate deal, okay? You remember that deal that's worth $222 million? It was like $34 million. I wish I could find the address on that deal. Okay.
Remember the name of it?
Well, let me just tell you about a real deal. I don't. La Jolla Shores.
It was 200 units.
Yeah, La Jolla Shores. Now I'm going to get called out for misinformation.
I got it. I'll find it.
Okay. No, I'm interested in this deal. La Jolla Shores Apartments. I think it was La Jolla Shores Apartments. 5726, I swear that was the address, man. Specialty housing. I don't want special. Student, senior, corporate, low income. No, clear all that. Let's see here. Home type, apartments. Let's see. Shores Apartments. Oh, God, it looks like they changed the name of it. Sick. Why am I even looking at this, making myself sick, dude?
It's torture.
It is so torturous.
Here, let me go through Deal Finder and look at it. Look for it.
Yeah, dude, they might have converted it to condos, which that would make sense too.
It would.
Totally makes sense.
Sell them off for $1 million per unit.
Anyway, I'm not doing that right now.
How many? It was at least 200 units?
I'm not doing it. I'm bailing on that because it's going to make me sick. How do you exit the deal? You sell it, you refinance it. I'll tell you about a deal. Can you pull up Harbor Shores, the Harbor Shores, any of the Harbor Shore deals? What's one of the names of them?
Harbor Palms.
What's the nicest one? This 2012. I bought 1,012 units. It was the largest purchase in Florida at the time. It was $58 million. And I did not have the money to buy this. I did not have the $58 million. I did not have the credit to buy a $58 million property. This is 12 years ago. Okay.
Harbor Palms.
Pull up Harbor Palms. Harbor Palms in...
Yep, Harbor Palms in Port St. Lucie.
Harbor Palms Apartments. Oh, there it is. We got it. It's now named 10X Harbor Palms.
Good name.
Yeah, really good name. 10X
See what you
Images.
did there?
Okay, so this property, okay. I get a phone call. Hey, dude, this portfolio is going for sale. No, wrong one, Johnny. Is that? Yeah, let me show this picture, Johnny, on my computer. It's better. This shot's better. This guy died. Urgency. His will says you have to sell the property when I die. Literally, he dies. Bang. The board meets. This has to sell. It was given to Robert Givens. Robert Givens, the big broker here in Miami. They posted the product. 2012 market was starting to slightly recover from 2008. It was still terrible everywhere. I find this deal because I'm on all these lists. I'm paying money to be on all these lists to find out about deals. This comes across my house. I'm living in Los Angeles. This is a true story. I don't have $58 million. I don't have the down payment from it. We're just coming out of 2008. I was like down to like, I was in trouble. I was like, we had a house in Los Angeles. All my equity was in that house. This house comes up, this deal comes up, 1,000 units. I tell Elena, let's sell the house in LA. We had, at that time we had about $12 million. No, I had, what was I had? I sold that house for 17. I owed 6 or 4. 17, yeah, I owed.
Yeah, I think you had 11 million in equity is what you had.
Yeah, I had 11 or 12 million in equity. No, I had 11 million in equity. I had $1 million in cash. And I had to borrow $3 million from friends. Did you put some money in this deal, Jared?
Yep.
Okay.
You're welcome.
Okay, I found the deal.
I mean, thank you, actually.
Yeah, thank you. Okay, found the deal, put the deal under contract, sold my house, took the 11 million, transferred it to the deal. All my 11 million. Now, everything I have, my $1 million in cash, I am now broke. I have no money, and I went and got $3 million from partners, and I got a loan for $45 million. Now, that's how you do a real estate deal, folks. You guys want to grow up? First, you got to show up. Then you got to decide to grow up, okay? And you're like, okay, I'm showing up, and I'm looking big. We were starting to look. Me and my wife had made a decision. This is 2008. Will never happen to us again. And I'm like, what am I doing owning a house that owns us? When we could take that money and convert it to something that we would always own and would give us freedom to move, okay? We sold the house where we lived, the barbecue pit that we had, all the friends that came over, We sold it to our neighbor. It was a Walton. I said, look, I want to sell my house. I'm either going to market it to somebody that's going to tear it down or you can buy it. She's like, I'll buy it, okay? We did a deal, came to a fair agreement. I got my dough, and I said, Elena, we're not going to live in a house now. We're going to go rent where we live, and we're going to own rentals that allow us to live. This is a great story, folks. I mean, this is a game changer right here. So I go buy the deal, right? Now, the deal cash flows, this is $15 million. Every penny I have, Jared, Sherry, everybody that saw this happen, I'm like, I literally have no money, okay? Which is cool because now I'm just working on my business, okay? This deal was doing like 12% a year. So what is that? That's what I lived off of. What's 12% of 15 million? Is that 1.8 million?
Close enough.
Is that what it is?
15 million?
Yeah. Yeah, $1.8 million. God damn.
Right on the button.
Okay, yeah. So $1.8 million. That's what I'm living off of. So every month we're getting a check for like 120 grand. I'm like, okay, that's cool. You guys understand what happened here? I went from having equity in a house. Would you rather equity in a house that pays you nothing or $120,000 a month coming in? Now I had to distribute this to me and these other people that helped me put this deal together. These are my partners that helped me put a deal together. Okay, fast forward the story. Okay, 1,012 units. What are the rents over there now, Ryan?
It ranges between $1,400 and $1,800.
On all of them?
Yeah. You want the, what do you want? You want the exact or you want a range? The one bedrooms, $1,500, $1,600.
1,012 units. We're going to do the increased value calculation. Okay? Help me out, Ryan. What are the rents? 1,012 units at what? How much a month?
Do $1,700.
$1,700.
Okay.
Cheap rents, by the way. When y'all hear 1,700, y'all think those are expensive?
No.
I think they're like, why can't we raise the rents? Okay. Times 12 times 0.95. Okay, that's the occupancy.
19.6.
That's the total?
That's 19.6 right there, yeah.
Yep.
$19,600,000 a year times 0.70, Ryan, right?
You want other income in there?
Nah, I don't want other income.
Okay.
I don't want to complicate it.
13.7.
What do you use?
70
or
70.
I use 70%.
You think that's real?
I think it's close. I think I think it's probably 65%.
Okay, do 65.
12.748.
12,478 is the NOI. Okay, and then if you guys all should have gotten, by the way, my annualized NOI is actually, we did this math. We did a bullshit napkin underwriting. Ryan made up a number, I made up a number, bang. My NOI on this product is $11,991,000.
600 grand out.
Within $600,000, okay? So just by doing the napkin, we're close enough to figure out, okay, what's the value of the deal? Now, I would not sell this. This is your NOI number. Now you're going to figure out what the value is. What is the value of this asset? If I wanted to sell it today, I'm going to go back to that conversation earlier. If I wanted to sell it today, and Jared wants to come in here and buy some company, and I want to buy, yeah, dude, you want to pay a 5 cap? I'll sell it. I wouldn't even sell it for a 5 cap. Why? Because I can't buy it for a 5 cap. I cannot buy this asset. I cannot buy 1,000 units anywhere in Florida all at one time. Impossible. Nobody has it. Am I exaggerating, Ryan?
You're not.
No one has 1,000 units in Florida for sale today. So I'm like, bro, fuck, I got something nobody wants. Scarcity. Okay? But let's say I did sell it. If I divide that by 5, what is it?
254.
254 what?
Million
dollars. Now, the next thing to see if that number is possibly legitimate, you guys have to learn how to do this math. You got to know going in, and you got to know how you're going to get out. Okay? What am I showing you now? When you look at a deal, how do you exit this deal? 1, you sell it. 2, you refinance it. That's what we're doing right now. This is the best exit. Okay? So, 254 million divided by 1,012 units is $247 a unit. 247,000 units. Probably too much for that product.
Doesn't seem super high though.
But it ain't terrible compared to some of the bullshit we've been looking at today. $670,000 a unit, $230,000, $130,000 in Mobile, Alabama. I ain't in Mobile, Alabama, man.
Yeah.
I'm in freaking Florida. I got the Space Coast. I got good weather. I got people coming down here. Not unbelievable. By the way, I'm not a seller today, so it don't matter to me. So yeah, if somebody wanted to buy it from me, hey, bruh, here's my number. Give me a quarter of a brick, and I might consider leaving it. And I'll tell you right now, if somebody offered me that right now, I'd be like, pass. Why? Because this is what I would do instead. I would take the $250 million, and I would go to the bank and say, hey, my deal's worth $250 million. And the bank's going to say, nah, your deal's worth $200 million. Because they're going to get it appraised and they're going to chop me. They're going to get much more conservative.
Goes back to the
now, did I commit fraud?
Yeah.
No. I said, look, it's worth $250 million to me. Oh, by the way, probably worth $280 million just because I changed my mind as I sat down and thought about it.
And if you were selling it, the new buyer, it'd probably be worth $280 to the bank if somebody else was buying it.
If a new buyer was coming in, they would say, yes, it appraises for $250. This is a good point Ryan's making. If I'm trying to refinance and pull money out, they're going to suppress the valuation a bit, okay? This is just what happens in real estate. But even if I come up with this lower number, okay, and then I go to the bank and I say to the bank, hey, I need a 70% loan to value on this asset. This bank would give me a loan for $140 million. Now, I'm giving you a made-up situation right now, but I know for sure 100% without any reservation, I could get this loan today, okay? I get a loan for $140 million. You're like, what are you even telling me about right now? What do I owe on the asset?
108.
No, what do I owe in this example? In this example, I owe.
Well, you didn't say. You bought it.
Yeah, I did.
You bought it for $56 million.
Yeah, I said I owe $45 million. I owe $45 million. New loan, $140 million. New loan. Old loan has to be paid off. Okay? Old loan has to be paid off. This loan gets paid off by the current lender. Boom, they get made clear. Okay, I gave you the reverse situation earlier this morning where I said a guy bought something for 14, has 10 million of debt, but the loan will only support 7. Mm-hmm. See, mine's had time. I had time, 12 years of rent increases. I never put new debt on. The value went up, but the debt didn't go up. This is the beauty and leverage of real estate. This doesn't happen at your house. Your house's value, your mortgage goes to 0, your value goes up, and you guys call that equity. Okay, yeah, but the problem is you can't get the equity. You can't get to it, you can't touch it, you can't use it, you can't spend it. Okay? So I go back to the bank, they pay off this loan, and we have
95.
No, we have $95 million left over. Now, what happens with the $95 million?
Well, Grant Cardone, where would you like us to send it?
Okay, Mr. Cardone, we have $95 million at close. Where should we send the money? Well, first of all, you owe me $12 million for my equity for my house. $1 million in cash. I want my damn $1 million back. And I got my brother, my sister, and this freeloader over here that I owe $3 million to. Pay their asses back. That's $15 million. Okay, sir, but there's $80 million left over, sir. What do you want to do with this? I'm like, well, don't send any to Ryan. Fuck. Don't give him any shit, okay? Let me see what we're going to do with the rest.
No. We're on the same team.
Okay, let's see what we're going to do with the 80 mil. What we're going to do with 80 mil. But, hey, man, how much? Well, first of all, what are my taxes going to be on that 80 mil? 0. There is no tax on this 80 million.
Crazy.
This is insanity.
It's crazy.
Okay, what we going to do now? Shit, man, 80 million? I'm going to go buy some real estate. What the hell was I thinking about? Just do it again, okay? Folks, this has actually happened, okay? Now, this exact example hadn't happened. Actually, what I did was I got $108 million, not the full 140, but I did this about 6 years ago. This would happen today. So that's what I'm telling you.
On this deal, I put in as just an investor in the deal. I put in 150 grand, and this was 2012 or 13, 2012. I've been paid back since then an additional 440,000. Plus, I'm getting $2,000 a month in cash flow, and we still own the deal. So I've got literally all my money back, plus.
And $24,000 a year. And the rents will continue to go up over time. Okay, so what have we been here? 3 hours, 4 hours now? Mm-hmm. What am I telling you guys? Like, this is not about me. This is about you. This is about your real estate. This is about your future. This is about your investment. This is about what you're going to do. And I'm educating you how to get there and showing you examples of how this happens. I am not the only person this has happened to. I can show you hundreds of people in our club alone that have done similar activity to this. Maybe not to this scale and not this big yet, but I've been doing this 40 years. You guys got to decide are you going to get started on this great investment? Okay, and where do you start? The types of real estate. What are you going to look at? I'm going to show you some pretty pictures right now. This is pornography for real estate people. Okay, Ryan? This is your pornography, right?
That's what I do.
Look, single family residences. You could drive down the little neighborhood. You're coming up. You were poor, and you're driving through a neighborhood. Oh my God, Lee! Boy, all we got to do is add a golf cart or two to the front of these. Add a little boat in front, and everybody gets all seduced. Oh my God, I'm going to go there. This neighborhood looks like what? Give me some examples of this neighborhood, Ryan. As you turn around, and look at that. What do you think right there? You get a happy moment right there.
I do.
Yeah, Sherry. What do you see right there in that neighborhood?
Man, I see a lot of great family stuff.
Oh
See
my-
a place I'd like to live.
Oh my God, I'm going to be happy there.
Oh, dude, I think I saw Jake riding a bike, man.
Yeah, I'm going to be. Oh, we're going to.
Little Jake's riding a bike.
Oh my God, I'm gonna grow up. I'm gonna have great memories. Okay, anything else? Anybody? Johnny, what do you see? Johnny, you're over there on camera. What do you see over there, Johnny?
Dude, I see white picket fence puppy running down the
See, Johnny,
block.
there's not even a white picket fence in there, and Johnny sees white picket fences.
Johnny sees his
Folks,
drone flying in the
all
air.
this is programming, folks. This is programming, okay? This is programming to believe you're gonna be happy because you did that. Let me tell you what's missing in this picture. There's no potholes in the street, okay? But they exist, right? All the yards are perfectly done, but that's bullshit. Somebody's got to mow that grass, okay? Every one of these little houses right here has fresh paint jobs. Guess what? Somebody had to pay for that. All these neighborhoods, by the way, 10 years from now will be dated and unwanted. In fact, there's 40 million single-family homes in America right now. No one ever wants to buy. At the very most, they want to maybe use it for the next 10 months, 14 months, maybe 3 years, and after that, they want to bail out, okay? Also, in all these cities, you have all kinds of crime, you got problems. People are fixating on one location only to find out the job market moves out. You got crime coming into the neighborhood, politics going awry. That's also the other things in these neighborhoods. Not to mention property taxes, fixing a roof every 10 or 15 years, okay? Changing the windows, the air conditions, the plumbing, la, la, la. Okay, second thing you look at. This is what I used to do. When I was coming up, man, on the come up, I'd look at mansions everywhere I went. This was very inspirational to me, dude. Like I remember watching Beverly Hills. The first thing you know, oh, Jed's a millionaire. They say, oh, Jed, you ought to move away from there. So what?
After for the family, and he moved to Beverly
Hills, that is. Swimming pools and movie stars. I'm like, shit, I want to own a damn. I watch that show every weekend. It was programming, man. I'm going to have a mansion. But who's going to be in it? I had the mansion. Okay, I had the big house. Guess what? They take more cash flow. Now, that place is empty right there. Doesn't mean the people are happy. Most of these mansions, what you see is a lot of prescription drugs, kids going to treatment centers, marriages breaking up. Like that's just a stagnant stick, done. Yeah, Real Housewives, okay. Okay, then there's these apartment complexes. Man, I always thought there's no way I'm ever gonna be able to buy that stuff. I just want to tell everybody, switch back, Johnny, am I in the shot? Got every one of you watching this right now, you could be the owner of that asset. I just want that to sink in, man. Let it breathe. You could own that asset.
It's 500 units right there.
500 units, Sawgrass, Florida.
10 staff members working on the site all the time.
What did we pay for that?
We actually bought that from EQR. That was Sam Zell's. That was $140, $139.
Now, I'm buying something from Sam Zell. Sam Zell, rest in peace, is one of the greatest real estate investors of all time. They're going to put my name next to his one day. What's the name of it again?
It's called...
Sawgrass, 10X Sawgrass. So we paid $139 million. I'm showing you guys my sheet right now. This is my secret sheet. Okay. We have $93 million worth of debt on it. And there's 501 units there. What are they trying to sell next door for? How much a door?
360.
360 times 500.
It's like 175.
180.
Yeah, 180, and we paid 139. So we're $40 million in the we're 30 or 40 million dollars positive, and it cash flows. What's the cash flow over there, Ron?
8%.
8%.
So just so people are tracking here, how much equity was put into that deal?
This deal, there was $43 million.
So there's
raised.
100% basically return.
By the way,
on
you know who the
equity.
bank is?
I know.
New York Community Bank.
Yep.
That I brought up earlier. See this NYBCB right here?
Fixed.
And that loan is due, watch this. That loan is going to be due.
26.
No, 31.
Oh, I was 20.
No, 26, you're
20
right.
26.
But what does 31 mean?
It's
Maturity's 31. The IO burns off in 26.
their loans are. It was a 7-year. The first piece.
Okay, well,
was 26.
Well, let's get the 31 off there. It says 31 right now. I'm looking at it right now. You looking at it?
Yeah.
Should that be, who is that, Jim or Mark?
No, it's.
You?
What do you want to? You want to send it to somebody?
I just want to fix it.
So it rolls. After 7 years, that one rolls to something different. I think it actually does last until 31.
Well, when did we
but
buy it?
7 was
When did we
fixed.
buy it?
It was that was in 19.
It was 10 years or 7 years? Yeah, no, it was a 7-year loan. So it's due in 26. It's just misinformation. Okay? So we got to fix it.
So, but the point is you're sitting on $40 million of added value based on the deal that traded next door.
Yeah.
And there was $40 million of equity that went into the deal.
Yeah. And 40 million. Yeah.
You've
good
doubled
point.
your money.
Good point.
You've doubled your
$40
money.
million worth of equity if we sold today. We wouldn't. Why wouldn't we? Because nobody's going to pay me a premium right now. Why? Because the market sucks. There's a glut of inventory. You got distressed sellers. I don't want to be a distressed seller. Now, in 26, what did I tell you guys interest rates would be in 26 now? Rewind the tape back to like, exactly. I said in 2026, the interest rates will be 3% again. At which point, what's the NOI on this deal? See, you need to know how to exit these deals is your point, right? But you guys can own these deals. Now imagine if you have to sell in 2026, go back, Johnny, you got to sell the single family house. You have one buyer. Do they love the kitchen? Do they love the location? Do they love the schools? Do they love your little tree you put up front? Do they love your colors? Maybe, maybe not, dude. Do not sell to emotional people. You never get all the money from the emotional people. Why? Because they're emotional. And when people are emotional, if you get them on the uptick of emotional, ooh. But what if they're not? I don't like the kitchen. Okay, then they're going to shop 40 different kitchens. Okay, the mansion, dude, you only got a handful of people to sell this to. Otherwise, it's going to suck life out of you. This place, people are living in it every day. This is what you guys should be doing. Office buildings, I've been telling you guys, leave these office buildings alone. They're heavy, heavy lifts. They're very, very much trouble. And now we're seeing office buildings around the country. At some point, by the way, this office building becomes a steal. It will become a steal, but they're still complicated. Retail. In COVID, during COVID, when COVID was saying, everybody was saying retail is going to never go out at work again. It's going to be terrible. Retail is going to die and fail. No, I said, no, it's not. Retail is going to do great in great locations. In fact, I said, if I could buy every retail center in Sunny Isles, Johnny was here, I sat here Monday after Monday. If I could buy all that Sunny Isles, just down the street, Hallandale, all that retail in Hallandale, dude, if I could buy all that stuff, it's always going to be there and it's always going to work, okay? Self-storage, always been a good thing, but it's hard to scale it, okay? Number 7, mobile homes. I got a buddy who owns 2,000 pads. He's paid $50 a month on 2,000.
Like 12,000.
$500 a month.
Isn't it like 12,000 pads or something? Is it
No,
3,000?
40,000.
Oh,
No.
It's 40,000 pads.
Zimmerman.
I'm sure it's 40.
it was a big number.
It was a huge
Text
number.
Zimmerman.
And he's getting like, what, $800 a pad?
How many pads do you own?
Done.
I think you texted in the same question last time.
Yeah, I probably have it in here actually. Yeah, probably is. Okay, let me see. Okay, but he had a business plan. Let me see. Right now we charge $500 a pad. My average purchase cost from 2099 to 2012, he paid $190 a pad. Is his average cost? Okay. Let me ask him. Where did he tell me how many he had though?
Maybe it was
Just do the math. You know the number. Just times it by 40,000.
Yeah, is that what it is?
I'm pretty sure it's
It was
40,000.
a big number.
Anyway, the guy earns like $20 million a month. Okay. Number 8, land farm, oil leases, empty lots. Yeah, you could, but you ain't a farmer. When's the last time you guys had a wrench?
A
Okay, so
wrench?
your rednecks, wrench.
Yeah. No.
I didn't say winch.
No, I thought you were saying ranch.
Exercise.
Wrench?
Okay, I want you guys to do this exercise on page 19. Okay? I want you to go through and check off which one of these assets you should be investing in, not what you want to invest in. Which one, go across the line, protects your capital. Okay, the way to answer this is single family, yes. Mansions, yes. Apartments, yes. Office, maybe, maybe not. Okay? Retail, yes. Self-storage, yes. Mobile, check them off. Land and farms, yes. Every one of these could be checked off, yes. Now, next one. Provides cash flow. Single family, no. Mansions, no. Apartments, yes. Office, question mark. Retail, yes. Self-storage, yes. Strong yes. Mobile homes, strong yes. Land, no. Empty land, no. Long-term appreciation. You can just go across here and probably give every one of them a yes.
Yep.
Tax write-offs. Go to the next one. Go to the next question. Exercise.
I know. Go through them here.
Okay. Well, I just want to do the exercise.
Okay.
I want to do them right now.
Okay.
I don't want to take a break.
Okay.
I want to do the exercise. You guys want to do the exercise with me? I want to do the exercise with you guys. Okay. You just go through this, open the page, turn it to 19. Yeah. Okay. Good debt. Single family home, that is not good debt. Do not check that one off. Mansions, terrible debt. Apartments, excellent debt. Office, could be. Could be. Yeah. Good. Let's do that. I'm going to do the exercise first.
Yeah, okay.
And then we're going to do Q&A.
Okay. For the VIPs.
Yeah, for the VIPs.
Yeah.
Okay? I don't know what you're thinking about. Let me see. Where's my exercise? Oh, there's
Right
the
here,
exercise.
right here.
Okay.
Page 19. We're on page 19 in the book.
We're on page 19, okay? Let's go to, what are we doing? Good debt? Self-storage, excellent for self-storage. Mobile homes, excellent, okay? Farmland, no. It's not good debt. I had a guy try to tell me that debt on a ranch was good. I'm like, what are you talking about, bro? Oh, there's some income from the cattle. I don't know nothing about cattle. I know they're going to need a vaccine.
You know how to eat a steak?
Sure do, Jared. I need
New York strip.
And I did some ribs last night, man. We forgot to
Were they
keep
good?
adding pellets.
Dang.
Man.
Oh,
They-
yeah. You got to keep adding them.
Yeah, man.
So it
shit.
runs out.
Land, empty lots. Empty lots are stupid. No depreciation, no cash flow. Then somebody else has got to figure out what to do with them. Now, if you guys got long periods of time, man, you want to make a bet, good. But most people need income, okay? I'm not saying stupid. It doesn't have to be stupid. It might be the best thing you ever did. Okay, protects against inflation. You could literally check off everything except office at this time. But even then, okay, I'm telling you, there's going to be hundreds of billions of dollars made because people buy office. But you got to buy it, you got to steal it. Proven and tested. Single family, yes. Mansions, yes. Apartments, big yes. Office, yes. Retail, yes. Self-storage, yes. Mobile homes, yes. Land and farm, yes. Okay? Easy to finance. Single family? No, not really. Mansions? No, not really. Apartments? Yes. Office? No, definitely not. Retail? Yes. Self-storage? Yes. Mobile home? Yes. Land? No. Empty land? No. Easy to scale. Single family? Absolutely X. Mansions? X. Apartments? Check mark. Office? X. Retail? Yes. Check mark. Self-storage, big check mark. Mobile homes, check mark. Land and farmland, X. Empty lots, X. Hard to disrupt, single family, X. I mean, it is hard to, it's easy to disrupt. Why? I can Airbnb, short-term rentals. You're seeing everything come in. Apartments, rental. By the way, 75 million people in this country do not want to ever own a home. By survey, 75 million. A fourth of America is like, I have zero interest in buying one location. Mansions, hard to disrupt. Okay, I'll buy it. You know, in the right location. Some mansion, yeah, I guess it's hard to disrupt if you want a mansion. Problem is you can't scale it. So,
Doesn't feel like it, though.
it's stupid. It feels like it's easy to disrupt.
Very easy to
Here's the
disrupt.
problem with the $40 million mansion, okay? When you try to sell somebody for $40 million, I keep trying to explain this to these knuckleheads here in Miami. They're like, oh, we're just gonna keep raising prices. Dude, you're gonna get your price so high that I'm gonna be like, okay, you know what? I'm gonna go live in Portugal. Or you know what? I'm gonna buy a place in Portugal and one in Malibu. I'm gonna have two places rather than one place. Or you know what? I'm gonna go to New York City and buy a damn penthouse and downgrade in Miami. So I'll have a New York place, a Malibu place, and a Miami place. So you keep jacking this price up, and at some point people are like, they try to sell Jay-Z that 355 Ocean Boulevard.
Oh, did they?
Yeah, they thought it was Jay-Z, so they're going to crack him for 100.
Oh.
He offered 80 and they didn't take it.
Oh, my God.
what
They passed.
Yeah.
Boom. And he didn't buy anything here. Why? He went and bought Malibu and paid 200 million.
Yeah.
Rather than this thing that they were trying to overprice. So when you start dealing with people with mansion money, they're like, I got other choices, bro. You know what? I ain't buying a house. I'm going to buy a damn $75 million Gulfstream. I don't need any of this junk. Or I'm going to go buy a yacht for $200 million. There's so many different, I'm going to buy an island for $40 million. Like you start moving these people into other options. So yes, it is difficult to disrupt, but they have so many choices. Like you don't never have control over them. Okay, apartments, very, very difficult. Almost like it's one of the lowest, most conservative. What's it called? It's called there's a certain kind of investing score. It has the safest.
Not the VIC, right? It's not.
No, it's not the VIX. It's the opposite of the VIX. It's a safe, conservative investment, some kind of score. There's a term for it. Somebody maybe knows what it is.
What's it called?
It's a safety investment score or metric. It's not. It's a.
CP, volatility.
Yeah, just keep checking on that. Okay, apartments, hard to disrupt. Office, no, not hard to disrupt. COVID proved that. Remote
VIX.
work, no, not a VIX. Opposite of VIX. A smart score, retail, hard to disrupt? Not really. Amazon proved that. I would put an X there. Self-storage, yeah, it's kind of hard to
Short.
Yeah.
Short-term volatility future.
Yeah, but the opposite of that. Mobile homes. Okay, kind of hard to disrupt mobile homes because it's affordable living, dude. It's like RVs, man. RVs could become a big thing in the future. What do you think about me being in an RV for about a month, traveling around the country?
Living in it?
No possible
Would y'all want to
way,
be with
bro.
me though?
Yeah.
No.
I would. I'd do it.
Let's roll.
No, dude. You know how hard it was for me to get you.
Dude, we were to take the video
go-
cameras, Johnny, and do like 14 days on the road.
Oh my gosh, dude.
And video everything.
Let's do it.
Let's roll.
Let's do it.
Every morning,
Let go.
every fire we start.
Couple school buses.
Dude, when I told Grant
Get a
that
couple
he-
Humvee in the
Drag
back,
the
Tesla,
Humvee.
the truck on the front,
Dude, just
and the RV.
Oh my God.
I told
Wrap 'em.
Grant I got him a deal in the UAE to go to the palace, the royal palace in the UAE, and go like meet one of the, His Royal Highness royalty folks. But he was in Dubai, and so it was like a 50-minute car ride from Dubai to UAE, and he almost blew the whole thing off. He's like, there ain't no way I'm driving 50 minutes
One of the best
deserts.
experiences of my life. Yeah, I did it. Okay, all right, on liquidity, okay, the last one is liquid, okay? What's liquid? Single family? No. Mansions? No. Apartments? No. Office? No. Retail? No. Self-storage? No. Mobile homes? No. Land? No. And empty land, okay? So now you guys got to look at this and see which one has the most check marks. That's the one I invest in. The basics and the rules, okay? Exercise on the next page, 20 and 21. What are the 5 must-haves of real estate investing? Do you remember what I said you have to have to do a deal? Okay? Well, the answer was what? You got to have a deal. Debt's gonna follow. Equity's gonna follow that. You have to have a network. What's the network? Insurance quote, lending quote, investors, tenants, marketing, okay? And number 5, dude, do you have the confidence to do a deal? Rank in these must-haves in the order of most important. Which one is the most important? Second most important, important, somewhat important, and least important. By the way, you could double up on those. Like I would answer this. Deal and confidence are the most important things. The things that start and end are the most important. Okay? Very important in the must-haves is certainly, well, a part of that is location. But I'm going to have debt at some point. Now, you really don't need debt.
That would fall under
Very important is a network. I would add the network because the network is really your debt and your equity, okay? Like we're not using debt right now. We're not using lenders, so what do? I just go to partners. And I tell partners, hey, I want to raise $60 million for this deal, and I raise all the money. And you're like, yeah, but you're Grant Cardone. I'm Grant Cardone because I actually go get deals that actually attract people to want to invest in them. People are not investing with me because I'm Grant Cardone. They're investing with me because, what's something I can show right now?
Boca?
It's stupid.
As far as what? A current deal?
Yeah.
Las Solas Walk, 10X Boca.
Just one at a time. People are not investing. I know a lot of people say, oh, people invest in Grant Cardone because Grant Cardone's people invest in me because I buy great real estate, folks. I mean, I'm doing something at Cardone Capital. This has never been done before at scale ever before in the United States of America. We're going to build the largest real estate portfolio in the world and do it with regular people. I'm going to continue to buy great real estate like this, that piece of real estate right there. I'll buy it with my money, and then I'll go to the marketplace and say, guys, I'm raising the money for this. The more money I raise, the less partners I have from the partners that put money in. So that's what gets people interested, okay? Let me just ask in the chat, if you had a chance to invest in that deal right there you're looking at, how many units is this?
450.
456 units in Las Olas, 1 block from Las Olas Walk Boulevard. You cannot drive in Fort Lauderdale and not see this asset. It is cash flow positive from day one. It is irreplaceable real estate. I would give it a
Park
triple.
Place. Yeah, Park Place.
It's a AAA rating, AAA building, AAA tenants, cash flow positive. I already have a loan on it. Would you be interested in having more information on it? Let me see. Yes. Call me with details. Yes, definitely. For sure. Yes. Okay, now put how much money you would have that you would be confident. Give me a number. I don't care what the number is. Any number that's real to you, by the way, that you would be with no more information than you have right now. I'm doing the deal either way. That's what you know. How much would you be interested in? 10,000, 50,000, 300,000, 100,000? Just on the information you have right now. 50 grand, 5 grand, 50 grand, 26,000, 50 grand. Don't worry about accredited or non-accredited. How much would you be willing to do? It could be a $500, whatever, $500, 1 million, 50,000, as much as I could, 10,000, 200,000, 40,000, 10,000, 10,000, 10,000, 100,000, okay? I got bad news for you. You can't. It's already partnered up. The deal's already done. It's already closed. We already have all the partners. The point I'm trying to make to you here is you're not investing in me because it's me, dude. It's because I showed you a deal. Mm-hmm. I showed you a deal. I described it. Cash flow positive, 456 units, the great location, AAA. Now you're listening to me because I'm me. But you're listening to me. Your uncle is going to listen to you because you're you. The problem is you don't have anything to talk about. So what's the point of this? The exercise here was to get you guys asset, debt, equity, network, and confidence. And I'm going to tell you on page 20, asset and confidence and network are more important than debt and equity. Okay? It goes like this. Asset, debt, equity. Debt and equity are not the most important, number 2 and number 3. It is asset, network, confidence. And confidence is probably senior to everything, because if you don't have the confidence, even if you found a great asset and had other people willing to invest with you, you're probably still not going to do it, even if you already have a loan. And you've done all your underwriting. The confidence will undo you. So you got to figure all these out. Page 21, okay? Rank those as most important. You did that. And then page 22, oh my God, we got a lot of exercise to do here. See,
That's what I was going to say. Give him a minute to do them.
Okay, go ahead and do number 22. Rate your confidence in each of the following. You can only do those by yourself. I know where to find great deals. I know how to underwrite great deals. I know how to get debt on deals. I know how to raise equity. Go ahead and finish page 22, 23, and 24.
We're gonna give you guys
5 minutes.
5 minutes right now. So take 5 minutes and finish the exercise. When we come back, Grant's gonna come right back in and get right back into it. So.
And by the way, the mobile home guy just wrote me back 40,000 units at $500 a month.
Yeah. All right.
Tell me, do you got it? Step inside the office, and you see us ballin', cause the every day, you know that we bossin'. Yeah, said I gotta get that dough. Gotta get it. Said I gotta get that dough. Hold up. Talking meals, here I'm talking hungry. Talking meals, now I'm talking money. Yeah. And I just feel like you got that for me. Yeah. Another deal right before the morning. Yeah. Talking credit or cash, every question they ask, we gon' get to the bag. But they don't believe it, they say, how he achieve it, they say getting rich is a fantasy, Uncle G, what they say, watch where you getting advice, get you a millionaire mind, do you some millionaire math and multiply like chapter 5, then I got one question, hold up 2 questions, can you keep it 100, do you want blue blessings, say we got all the answers, that's a scuba lesson, do whatever it takes, like season 2 especially. Mikey B gon' ring the bell and get the 2-stepping. I doubled up and Jay say, homie, quit your 2-Xing. Dominate, don't compete. Champion came to win. What you say, Uncle G? Can we ask him again? I say, who got my money? Who got it? Who got it? Who got my money? Who got it? Who got it? Who got my money? Who got it? 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 Yeah. So I got you gonna do about it. Who got my money? Say, who got my money? Who got my money? Say, who got my money? So that money's calling. So I gotta ask who got it. Okay, let's get to the paper. Talking millions on the phone. Okay, let's get some new haters. Ain't no feelings in the zone. Okay, you talking premiere. VIP all about business. I never hope for the money. Me, I go out and I get it. See, me, I go out on a Tuesday. You know, every day Tuesday. And you know, Sheriff stay groovy. It's a 10X movie. You know, we stay on the move. Gotta get money, they do it. Get in the wins, never losing. We never talk, we just prove it. Who got it? 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 Yeah, sure that money's calling. Who's got my money? So I gotta ask who got it. Who got my money? Got my money. You got my money. No. I got one question.
Who's got my money? And keep asking until you have answers. And once you have answers, then you go to who's got that money and you do whatever it takes. Once you commit to this concept fully, the money will follow like magic.
10X ladies, just say it if you a boss. Swiping visas, it's easy with Amex card. Turn the heat up, I need you to make it hot. Tell them haters I can't hear from the top. 10X ladies, just say it if you a boss. Swiping visas, it's easy with Amex card. Turn the heat up, I need you to make it hot. Tell them haters I can't hear from the top. Heels on, lock strap, Queen E on that. Billions in the bag, so I got a big bank. No fake, all facts, big check, no tax. Ain't a rich and Millie, this 1,000 unit contract. Saying no to normal is my normal thing to do. Me, I'm building my empire, so you could build them too. What you own, I'm too strong, I'm 10X. My ladies rock it best, ladies rock it best. Building empires is in my DNA. Getting this money is in my DNA. This for the family is in my DNA. E-L-E-N-A, E-L-E-N-A. 10X ladies, just say it if you a boss. Swiping visas, it's easy for Amex card. Turn the heat up, I need you to make it hot. Tell them haters I can't hear from the top. Yeah, building empires is in my DNA. Getting this money is in my DNA. This for the family is in my DNA. E-L-E-N-A, E-L-E-N-A. Look who came through bustin' new choppers. Talking about the hammer and the helicopter. Tell me what's my manners, I was never proper. Be a gold digger, babe, we want the best offer. She know how to hold on the fort. Babe, you gotta know your role. You know I be shooting for sport. Try not to get out of control. The formidable boxer, Cardone. Standing tall at an impressive 5'9". This powerhouse of strength and determination is about to grace us.
I want to start skipping the 3, man. Let's go 5, 4, 2, 1.
5, 4,
How many
2,
fingers do I have,
1.
Jared? 1, 2, 3, 4, 5, 6. You see that?
Yeah.
Okay. All right, guys. So look, hopefully you guys are learning a lot, man. If you guys have not shared on X or Facebook that you're watching this today, by the way, we typically give away money and prizes for people that screen share their notes. Where do we want people to put notes to? Throw it on X. Throw it on X. If you guys don't follow me on X, at Grant Cardone on X or the old Twitter, maybe just a shot of your screenshots. If we get 50 or more of those, I'm going to pick a couple people and send them $100 in cash. Okay? So we'll do that today. And I appreciate you guys letting people know that you're here, that you're learning, that you're getting value. By the way, you should be proud of what you're doing today. The fact that you guys are sitting here learning today. Don't discount that you're learning something, like you're getting your mind open to new information. It's very valuable. I was doing a course this morning at my house, and I'm like, okay, I'm not learning anything, and it's taking time, and da-da-da. I'm like, wait a minute, dude, what are you talking about? Right. Any investment in me is a good investment. And the same thing should be said to you guys. You're investing in yourself. Just keep investing, and it will pay off. Mm-hmm. I don't know when, but I know if you don't quit, it will pay off, okay? Now, I want to share with you on page 20.
I love how you have the ability to do that. Like you think something, and then like you snap yourself out of it.
I do this
you like
all the time.
immediately.
I am like extremely negative person.
Critical.
Critically,
critical, but not
negative.
Critical,
like,
but
what am
not
I doing?
Yeah.
Like, I have some injuries that I'm trying to recover right now. I know for sure I can recover them. I don't need to go get a surgery. I don't need to. And I'm like, I go in there and I'm like, it's not getting better. And then I'm like, just keep showing up, bro. Just keep showing up. Just keep showing up. And I think about the time I spent with Tom Brady, and I know Tom extended his career because he invested time every day. I just wish I had his discipline on sugar, because I know that's costing me. Okay. All right. Discipline is the most valuable asset you'll ever have in your lifetime.
So let's get
discipline. By the way, discipline is the thing that creates confidence.
You want to talk about the discipline that you used
in the Ten Commandments
year and a half ago?
Regarding what?
You had $1.2 billion in deals under contract, and you walked away from all of them.
$1.2 billion of real estate deals, and I saw it. It didn't match my 10 Commandments on page 28, 26, and I'm like, dude, there's not enough of these that want. And I was in love, folks. I'm telling you, I was ready to date these babies.
Did you?
I was ready to bring them all to the wedding chapel. I was ready to have babies with them all.
Did you walk away from non-refundable money?
I walked away from $2 million in non-refundable money. Got to know when to hold them, know when to fold them, know when to walk away, know when to run.
You better count your money
while
you're sitting at the table. When the dealing's done.
What would have happened if
Shot
What would have happened if you would have bought those deals?
If I'd have bought those deals, we'd have lost $300 million. You want to lose $2 million, or you want to lose $300 million? And guess what? I didn't lose $2 million either, because I went Attila the Hun on them. Okay, 10 Commandments.
Let's just get through this.
Do you know the 10 Commandments?
Let's get through this
by heart.
Let's do this.
I need to memorize these, Ryan.
Because we were going to do. We were going to.
What's the first of the 10 Commandments, Ryan? Thou shalt not kill.
Oh. Are you asking me the real? Do you have 10 Commandments that you have right now?
Yes.
Or
Number 1, superior location.
Okay.
That is, thou shalt not kill. I shall not buy a bad location. We should do these in shall nots, by the way. I shall not buy a bad location.
We were going to do Q&A. Let's just do this one section first.
No, I'm going to do this.
No, I know. Let's do this
I'm going to
first.
do the Q&A, and then we're going to go into exercise.
Yeah.
That's not what we agreed on. Sherry, tell him what we agreed on.
Sherry.
Do this section.
I'm going to do this section,
and
then we're
we're
going to do
do
Q&A.
That's what I said.
Wow. Why you got to bring it up then?
I'm just saying. I just want to make sure everybody.
Okay. Thou shalt not buy
benefit of
an
the people.
inferior location. Repeat after me. Thou shalt not, page 26, buy an inferior location.
At least we have a good time.
Okay? Number 2, I shall not invest if there's not $2,000 in cash flow. Now, this is going to kill a bunch of deals that you guys are thinking about.
Mm-hmm.
Now, why do I not want you to do a deal with less than $2,000 in cash flow? Because if you need $1,000, bro, just go get another job. If you're gonna do a deal for $200, I mean, Johnny, how many different ways can you earn $200, Johnny?
Right now, like say when I leave here, I can probably earn $200 in like 5 different ways. That could be one of them.
Okay, number 3.
It could be, but it's not going
Thou
to be.
shalt not do deals that are not financeable. These need to be in. Let's change it. Thou shalt not buy a deal that is not financeable. Does not mean that I'll use finance. It just means I shall not do a deal that is not financeable. Number 4, thou shalt not do a deal that will not support management, other than me being the manager. Number 5, thou shalt not.
Thou shalt know.
Not know my exits.
No. Thou shalt know.
No.
That could be a commandment.
Thou shalt know my exits. Mm-hmm. No, it should be thou shalt not know my exits.
No, you can't double negative.
Number 6.
Thou shalt know thy exits.
Thou shalt know thy exits.
Know thy exits.
Okay? Or thou shalt not invest in only one exit. Thou shalt not invest in deals that are not refinanceable. Number 7. Thou shalt not plan an exit at a lower cap rate, but a higher cap rate. Thou shalt not
Can you-
invest
can
in
you-
markets.
Can you just say one thing about this real quick?
Yeah.
Because
so look,
like
when you buy a deal
higher
at a
cap
5
rate-
cap, when you buy a deal at a 5 cap, you cannot expect to exit at a 3 or 4 cap. Which means you would have normal appreciation.
So just make sure people understand what that means for price.
I mean, it's going to be a little
higher cap rate, lower price,
Yeah,
lower
yeah.
cap rate, higher price.
Okay, so
that's simple.
So lower cap rate is the return if you paid cash. Okay. Lower cap rate means a higher price. They're inverse.
So if you had a $10 million deal,
Yeah.
and you sold it, you bought it at a 5 cap.
10 million. Let's just do a $10 million deal. Not a big deal. You guys can do that deal. You don't trust you. Trust me. Just rob some of my confidence, right? If I'm working with a trainer and I'm trying to build abs or legs, and he's like, bro, just get this first set in, bro. You can do it. You can do it. I need to trust him. Right? I need to trust him. When the first time I learned how to swim underwater and somebody says, look, Mom, I'm just going to hold you underwater for 30 seconds and it's going to be fine. I have to trust the trainer because I don't have the experience to trust myself. So at some point, you guys have to find somebody that you trust. Now, here's the deal about the trust. If you trust one person, don't go to 3 other people and say, what do you think? That's not trust. That's confusion. Okay? And confusion is not confidence. Okay, so the lower the cap rate, okay, if this was a 4 cap, when I go to exit, okay, I cannot expect cap rates to stay where they are. As they go up, the price comes down. As cap rate goes up, price comes down. And as cap rates go down, price goes up. So if this cap rate goes down, actually does go down, guess what? I'm going to be able to pay an even higher price. But you shouldn't exit like that. You should exit. Thou shalt not be aggressive on your exit, basically. Okay? Thou shalt assume a higher cap rate. Because if this cap rate goes up, okay, if this cap rate goes up, the price is going to come down. So this is the value. The cap rate is based on the NOI. So what you have to do is you have to drive your NOI up. You have control over the NOI. You do not have control over the cap rate. Number 8, thou shalt not invest in negative job growth markets. Now this is extremely hard to do when you're getting started because maybe you're in Tulsa, Oklahoma, and you're like, dude, I like Tulsa. I know the neighborhood. I'm not telling you guys not to do it. I'm just telling you, you need a story about why people are moving to your town. Now, these are 10 commandments. I asked Ryan, said, Ryan, what's the first commandment? He says he didn't know. I said, thou shalt not kill. Trust me. Come to my house and threaten my kids, and I will break the first commandment. Willingly, happily unload my entire magazine to make sure I protect my family. And I will say to God, bro, before we covered the bad shit I did, I killed those 3 people that were trying to kill my kids. And I do it again right now. And if that keeps me from coming in, I would do it again, okay?
Right.
So there are markets, okay, that I would invest in that have negative migration right now. I just want you guys to know that. San Francisco has negative migration. It's still going to be a great city. Not everybody's going to leave. Would I do that in Flint, Michigan? No. No, I'm not investing in Flint, Michigan under any conditions. There's nothing that would encourage me to. In Detroit, Michigan, I would not invest in Detroit, Michigan. There's almost no situation where you could convince me, despite the fact that a couple of rich guys went there, you couldn't convince me to rich there because there's just not enough activity moving back into that market. Dubai, okay? You're like, Dubai's had all this appreciation. Yeah, because they sanction Russians. And Russia, rather than freaking not being able to move around the world, Dubai became a sanctuary for rich people to bring their boats and their money. So money just started freaking dumping into Dubai. It wasn't a planned event. Nobody knew it was going to happen. And it was a freak event that happened that caused a bunch of appreciation that will not last and will not be scalable. Okay, I wouldn't invest in there because of that. There was no positive job growth. There was just basically money moving to a safer marketplace. Number 9, by the way, America will always be a safer market for the rest of the world. No, as things get worse in the world, America still looks better and better, even though we have all these problems in this country. Number 9, I will not invest if I don't have a competitive advantage. What is a competitive advantage? Okay, A competitive advantage could be my cost basis, could be my location. It could be the name of the brand on the company, 10X. When we put 10X, we get a little bit of a competitive advantage.
Could be you're buying all cash.
Could be I'm paid cash. Could be a competitive advantage. But really what I'm talking about is the asset itself right now, right? Number 10, I will not invest in deals that don't make me at least $1 million. Okay, I'm gonna show you the math on this in a second. So here's how the $1 million potential works on page 27. This is a $1 million. If you found 32 units, so I'm setting you up this morning, and tomorrow we'll put some meat on the bone, some more meat on the bone. You guys all see why I wanted to do this in a more extended manner than we did 90 minutes a couple weeks ago. If you could find 32 units where you could increase the rent $200, this is purely math. It will always work for you. And you could keep them occupied at only 90%, which is easy to do in almost any market in the country except for flat markets. Flat geographies, okay? The flatter the geography, the higher the vacancy is going to be. The lower the occupancy is going to be because you can build out units easily, okay? Where there's flat markets, like when I say flat, a flat city, Tulsa, Oklahoma City, flat cities. Houston, Texas, flat. Dallas, flat. They go like this, okay? They go wide. If it's flat, it goes wide. Nothing stops it. No hills, no rivers. San Antonio, flat until it hits, San Antonio River, and then all of a sudden there's a restriction. Austin, Texas, can't really move. It's not flat, even though it's in Texas, right? If you go to Nebraska, flat forever.
Arizona.
Yeah, flat, but boom, south I go to Mexico. I got a big barrier right there. So it is flat, but it can't go too far south. Now, if you're scared of Tucson, then you go to Phoenix. So people that are moving in, insurance companies are not moving to Tucson. Why? They had a choice. We could move to Tucson, it'd be cheaper, or we could move to Phoenix. Why did they? All these insurance companies, Nationwide is on your side, Allstate, State Farm, okay? All these companies came in, all these tech companies came in. Why didn't they choose Tucson?
Workers.
Headline risk, wasn't sexy, not cool. I don't know. Maybe it's just I don't know. Oh, Phoenix is cooler. It's sitting right on the 10, okay? It's like, boom, we got a lot of commerce moving through this town. They could have moved to Pueblo, but they didn't move to Pueblo. Why? It's not that far away because nobody's in Pueblo, man. Nobody's been in Pueblo since 1910. Rockefellers went into Pueblo, freaking raped and pillaged. Boom, nobody's been there in 100 years. Why? Okay, so they go to Colorado Springs. Lots of barriers, not flat, so you're going to have rent growth, okay? Denver, you're going to have tremendous rent growth, but you have other problems, right? When you go to Houston, lots of flatness. Atlanta, a lot of flatness. Until you get to the little pockets, and then you have all these hills, and you start having these barriers, okay? Anyway, if it had 90% occupancy times 12 months, I would have $69,120 of new income on the property, okay? Now, because it's 32 units, and I'm going to divide the entire total. This is a little bit of a me thinking with the concept here. If this was 300 units, I would not get credit for all the money. If this is 32 units, I'm like, okay, my expenses are not going to change that much because I changed the rent by $200. If I change the rents by thousands of dollars over long periods of time, you're not going to keep it all. But I'm going to assume I'm going to keep it all in this example. You might want to write it down on this page. Assuming your expenses didn't go up, you would have increased the value of this property by $1.1 million, $1.152 million. Well, Grant, how can you know what the comps in the neighborhood are? Has nothing to do with it. What's the economy like? Has nothing to do with it. What are banks doing today? Nothing to do with it. Okay, zero. Okay. Well, what's the marketplace like? I just said the marketplace is a 6 cap. If the 6 cap is there, you made $1 million. Now let me reduce this. Let me increase the cap rate, which would reduce the price that Jared was talking about earlier. I knew Milken was going to have an issue. I picked it up yesterday. 69,120 divided by 0.07. I still made $987,000. Well, within my target of the $1 million. So my $1 million target potential is what I want you guys to look at. 32 units. Here's the math. This is a simple combination, by the way. 32 units rather than 4 units. It's only 8 times bigger than the deal you were going to look at anyway. 32 units, and I can raise the rents $200. So when you leave today, what are you looking for? You're in your car, you're driving home, you're going back to work, wherever you're going to Whole Foods, or you're going to Target, or you're hanging out with your kids. Start looking, dude. 32 units. Where's 32 units? Where are they? Oh, there's 32 units. I wonder how many units are over there. Okay. What are the rents over there? Oh, the rents are $812 a month right now. Oh, wow. I wonder if I could take the rents to $1,012. Maybe you can, maybe you can't. I don't know. Is there any place in Miami where the rents are $812? Let me just look right now. Now, when I look for rents and what rents are in a market, apartments, let's go to Fort Lauderdale.
I doubt you're going to find anything below $1,200.
Apartment.com. I'm going to go to apartment.com, completely free website, and I'm going to look for, there's Fairfield. All these companies are advertising, by the way. All this is competition for your rentals. And let's see, how do I put in filters, right? Can I just do minimum rent? I'm going to put 800 to 900. See, I'm going to see 7,000 results. Brian just said there's none here.
There's 7,000 results?
That's what it said.
No, I think after you searched,
There's one.
there's 1,
Yeah.
2.
No, there's 2.
Okay, there's a 1-bedroom studio, $850 on Wilton Manors. That's a sign, bro. Because we're looking at a deal right now called
Wilton Manors.
Yeah. There's another deal on 2229 Hollywood Hope Street, house for rent, $875 a month.
That's a room in the house.
I'm
That ain't-
learning
that
the
ain't a house.
market.
That
I'm
ain't a
learning
house
the
for
market.
rent.
I'm learning
Yeah.
the market.
Yeah.
I'm learning the market. Okay. Now let me go to. Man, I love doing this. I love doing this for you guys. Apartments.com, and let's go to Tulsa. I brought it up earlier.
850.
I had a breakthrough in Tulsa, by the way.
Did you really?
Yep, sure did.
I think 850 in Tulsa. I think that's going to be a lot more widespread.
How many you think we're going to find, Ryan?
I think you'll find 2,500 results.
You do. I'll go lower than that for $500.
You got yourself a deal, Grant.
We got a deal. We got a deal.
You got
Y'all heard the
yourself
deal. Y'all
a
heard the
deal.
bet? Okay. All rentals. Okay. Minimum rent,
Max rent 800, you said.
800?
850.
No, he said 800. I'm going to go 750. Max rent?
Just go 0 to max rent 800.
Zero.
That'll get everything but beneath
800.
800.
But below. But
No, go
30.
back.
There's
Go-
30.
Go back. Go back to all.
I love how he
You're-
changed.
you're short
I know. I wanted
There
to.
you go. There you go.
No, I want studios.
No,
I'm doing apartments
no,
too.
just do
I'm not
any.
doing specialty
Just
housing.
do anything. I mean, we're counting the bedrooms too, Grant.
No, we're not counting bedrooms.
I'm just
We're
doing
counting
more- I'm
apartments.
just doing-
I
I'm
counted
just-
apartments. Okay, Jared, there you
I'm
go.
just searching the market.
Right there. There's
You're
30.
only searching
There's-
that one criteria. Go
Yeah.
back.
Yeah.
Go
not
back to
do-
studio baths. Go back to studio baths.
Feels like this one's
Over
a little
one.
rigged.
Click that.
We're just doing apartments though.
But I'm just saying.
484. You owe me $500. Making some money on a weekend. Okay.
Hey, yeah.
Okay. Okay. So there you go, guys. Now, what do you know about the Tulsa market, dude? There's 484 rentals. Let's see what they look like now. Now let's see. Does anybody know Tulsa? What's the best neighborhood in Tulsa? I'll take it today.
In cash.
Let's go. Ryan, do you know anything about Tulsa?
Not really, no.
I don't know the market either. Let's get near the water, though. I like water. Water's always a good thing. So this is what you can rent in Tulsa. A 1 to 2 bed, $719 a month. Here's a 6. Look at this rental. What am I doing? All I'm doing is telling you guys, this is what you should be doing in your free time. You're looking at deals, you're getting data, you're collecting information. I'll do this hundreds, 500, thousands of these deals, just wandering through them. If I'm in Tulsa, I will know the entire market in literally a period of 2 or 3 weeks. Mm-hmm. Everything. Okay, now let's go to another deal. We're going to go to another deal, and I'm going to show you another $1 million target just to show you guys it's possible. Remember, I showed you a deal where I made $200 million. I want to bring you back to $1 million at a time. Let's get everybody to do 10 mil. How many of you'd like to do 10 deals that makes you $1 million each?
I
do.
Let's say it takes you 5 or 6 or 7 years to do that. You're worth 10 million bucks. Okay, let's go. $1 million, page 28. I'm gonna show you another way to do the deal. Let's say you had $1 million deal. That was your target. And you were in a 6 cap market. You'd multiply it times 6, divide that by 12 months, and it's gonna tell you, divide that by 32 units, divide that by 90%, and it's gonna tell you that you need a rent increase, exactly what your rent increase is. So in this situation, I'm showing you, you found 32 units, and you're like, dude, I wanna make $1 million on these 32 units, okay? I'm in a 6 cap market. What do I need to raise my rents to get that number? And that's your target, so that you can tell your manager what? Hey, bro, your job, let's say I brought a manager on, you're gonna manage my asset. I'm gonna be like, your job, bro, is to get the rents as quickly as possible up $173.61. And when you do that, I'm gonna give you 10% of the $1 million, 100,000 bucks. You still made 900 grand, okay? Or maybe you give him 5% or 2%. Or maybe you say, look, I'm gonna make you an owner in the property, and when we sell it, you're gonna get 10% above what I got once I bought it. Whatever. This is the way I would use this math though, okay? Now there's $1 million cheat sheet on page 29 that's gonna help you see how much easier it is to do bigger deals, okay? To make $1 million, on a 4-unit deal, you need a rent increase of $1,250. Easier to buy, harder to do. Fannie Mae is going to give you a 5% down payment on this thing. Easier to do, to buy, a little harder to do. But those deals exist out there where you could, well, if the guy had a deal and the rents could be $1,250, let's say the rents right now are $1,000. And let's say you went into one of these freak markets like a St. Petersburg, Florida. The rents are $1,000. Okay? And you're like, why would the guy not have the rents be $2,250? If they could be $2,250, why didn't this guy make them $2,250? I'll tell you why. It's all over the country, by the way. Mm-hmm. He bought this 30 years ago. Okay? He's got 16 units that pay him right now. He paid, let's say he paid $320,000 for this property 30 years ago. Okay? He doesn't have a loan on this deal. Do you understand what he makes on this deal right now? 16 times 1,000
180,000
times 12. He makes $192,000 a year. Every 2 years, he's paid back for what he paid for it 30 years ago, times 30 years. He's made $5 million on something he paid he's already made $5.7 million on the asset. He does not need to raise the rents. In fact, he doesn't want to raise the rents. He told his manager, don't raise the rents. In fact, you can tell it from your rental roll because 16 people have been there for 16 years. They won't even leave. They never complain. The place is run down. The paint's old. The roof's old. It's leaking. The air conditions haven't been changed. It's old freaking plumbing in the place. Nobody gives a shit. Why? Because they're like, dude, if I say anything, they're going to raise these rents. So they don't. Well, when you found that deal, you're like, dude, these rents should be $2,250. Ryan, you want to tell them about the deal we found up? We literally bought a deal from a guy that bought a deal. In fact, he bought a bunch of deals. I called him up and said, congratulations on the deal, bro. Would you sell any of that you bought? Would you sell any of it? He's like, yeah, I got this one deal in Boca. I was thinking about you. I would sell that deal. How much did we raise the rents in the first 12 months?
The first 12 months was $500 without doing anything.
We didn't spend any money. How many units were there?
235 units.
235 units. We changed the rents on most of the units.
We just changed the name and we changed the rents by $500 per unit.
Yeah. So watch what we increased the value of the property. This guy bought it. He had it for 60 days. Why would he sell it? It wasn't his asset type. Just like you guys are going to go buy 16 units, that's not my asset type. Or maybe you're going to buy in Tulsa. That's not one of my locations right now. Okay, Grant, why don't you come buy this deal in Toronto? Okay, but it's not what I'm doing. It's not my business plan, so I'm not interested in that market right now. Grant, why don't you invest in industrial? It's not my business plan right now. It doesn't mean your industrial is not a good deal. Why don't you invest in a mobile park? If I could buy that guy's whole portfolio, I would. Otherwise, I don't need one mobile park to learn around. If I could buy 10,000 pads, maybe I would. You understand? It doesn't mean the asset's bad. I'm not investing in Amazon stock or NVIDIA. Doesn't mean it's a bad investment. It's just not my program. Okay? So let me see. Let's see what we increase the value of this property. This is called the increased value calculation. Okay? It's called 235 times 500 times 12 times 0.95. Are we 95 there?
90.
Okay. Times, we're going to use 95.
But we're 90 because we're still renovating units. But
yeah, we're renovating. Okay. Times, is that it? So how much did I increase? How much did I increase this? Times 12 times 95. What is that number? Is that $14 million? $13,400,000. We keep all that, don't we, Ryan?
1.4 million?
Oh, is it 1.4 million?
Oh, the other income, yeah. So
yeah, you're right. 1.4 million. Okay, 1.4.
235 times 500.
500 times 12.
95%.
0.95 times
1.3.
Yeah, 1,339,000. Everybody should have got the same number. Okay, this is one of the things we do in our club. Okay, well, not our club, but 3 times a year we do a live event. Twice a year we do a big live event. We're going to do one in what, a couple weeks? Right here in Miami. Okay, you're in a room and you're actually working deals with me. How many of you would find that valuable? To come to a room and spend 2 days in a laboratory, like you're literally in a classroom with me working deals over and over and over again. No distractions, no people jacking with you. You're not dealing with the kids and the dogs and the Netflix and somebody calling in, I need this. This is what we do for 2 days. Twice a year we do that, okay, in a big hotel room. Twice a year we also come to our classroom right here in Miami in our
classroom,
headquarters, thank you, and do the same thing. And we're working through deals and actually looking at deals and pitching deals and seeing why they made sense, okay? So we increased the value of this property by $1.3 million of new revenue. That's the revenue. Now, if you took that money, this will be the increased value, and divided that number by, what's this cap rate?
I mean, if we would sell it for more than a 4, but I mean, what do you want to put on it? 4, 4.5?
I'll do a 5.
Do a 5.
We wouldn't sell it for a 5.
No.
Divided by 0.05.
$27 million, 26.7.
We increased the value of the property by $27 million because we power washed it and raised the rents $500. We did that in 1 year, 18 months.
How much equity was used to buy that deal?
We used
20 million was
20 million
original, and then we refinanced, pulled 5 out, so 15 sitting there.
$15 million is sitting in that deal. We would get our $15 million back plus $27 million in a period of less than 2 years. God, I wish I could do that. You can. You can do that if you're looking for the right deals. Okay, let me go through this matrix because it's going to show you how things get easier. 8 units only have to raise the rent $625. 16 units only have to raise the rent $313. 32 units is only $157. 64 units only $79. And notice when I get to 122, it's only $41. And there is no deal, no piece of real estate in America where you can't raise the rents the last 2. People don't even know it's happening. 41 and 79, it's like, bang, no problem, bro. That's a Whole Foods bag costs $125 today. Okay.
And I think where you're going with that too is the management at the site, they weren't paying attention. So like when you found this deal, by you now going in there and paying attention, like these deals are to be found.
Yeah. What's the name of that deal? 10X what?
It's called 10X Meisner. Not only did we power wash it, we also painted it too.
10xmeisner.com. Why didn't that show up?
Maybe it's 10X Living. 10X Living or
10X.
10xmeisnerpark.com.
I'll just give you guys a look at it. Or Johnny, you want to show it to them? Can you got it over there, Johnny? Wow, we're doing 1 month free right now, right?
on select units.
Which means none.
Which means none, and we're also increasing
right,
the rent.
it is up.
Those rents have grown $1,000.
Yeah. Okay, look at this deal right here. That's the deal we made. $27 million in new equity on a $20 million investment, of which the $20 million, by the way, was raised by partners. So you're like, man, how am I going to do a deal like this? The same way I did. Find a deal, get a debt quote, find a great deal, get a debt quote, and then go to your network and say, look what I have. Now, you're like, how do I do that? Okay, you got to learn how to call that broker. But most importantly, you got to have confidence this is a great deal, so you know, hey, I'm going to move mountains to make sure this deal happens, okay? Because this deal, one deal, is a game changer. If we had 27 investors, you guys understand, 27 investors, each of the 27 investors have now made $1 million each. Rather than one deal making $1 million, one deal made 27 families $1 million, okay? Do I have your full attention now? Mm-hmm. Have you seen enough to make a decision? Mm-hmm. Okay, I either need mentoring or I need the full network. Okay, I need the investors, I need the pool, I need the connections, I need the deal flow. All right? Okay, on page 30, number of units, this is the increased value formula that I just did. You should be able to do this formula to estimate, predict, Nostradamus, the future value of the property. Okay, number of units times the rent increase times the occupancy times 12 months divided by the cap rate is the formula for the increased value of the property, not the purchase price of the property. It has nothing to do with the price. I'm assuming the price you paid could be supported by the rent roll. Oh, you're figuring right here. When I do any deal, every deal I do, whether it's 1,000 units, 10,000 units, how I'm going to get to the next place. I'm like, if I could buy this many units, increase the value, the value by the rents this much, I'm going to increase the value. And it's always going to be that. Singapore to Cincinnati, Dubai to Detroit, Los Angeles to Laos. I don't care where you go on planet Earth. If there's rent and rent increases, okay, and occupancy, there's always going to be a cap rate, then there's an increased value, okay? Exercise. 3 exercises I want you to do, or you want to give it to them?
No. Just go through them and then give them the time to go do the work.
Page 32, 33, and 34 are really simple exercises. Okay? You found a 13-unit deal. You were able to raise the rents by $60. The cap rate's a 6, and the property has a 96% occupancy. Do the math. You're on page 33. Let's get that music going in the background. Na, 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 na.
We'll just give them 10 minutes to do it?
I don't think so.
Let them do the math. I mean, they got to do the math, and then they got to answer some questions.
Oh, okay. Yeah. Just do the exercises on page 31, 32.
33, 34, 35.
Yeah, 34 and 35.
You want to put 10 minutes on the clock there, Johnny?
Put 7 minutes.
Who got my money, please? Everywhere you wanna be like Visa, MasterCard, American Express. I bought the bank and I bought the jets. I buy apartments, I send checks. Yo, billionaire went undercover, help y'all discover who did it best. Just bought 2 choppers, can't wait till they see the face and they see what I do next. When I walk through the door, I'm talking cash flow. And if you know like I know, you're getting cash flow.
How stupid can you go? You can go as stupid as your cash flow.
You know what heals all ills? Deals. Look who went from meals to bills. It's eat what you kill when you're in the field. In the pipeline overflowing, I don't drip or spill.
We don't seek balance, nah, we want extraordinary. If you really knew my dreams, it'd be more than scary. We got more to spare, ain't no shortage, baby. Winning by the chopper and another for my lady.
Talking about the bird and the strap. Say the word and she handle that.
Fully loaded, put it at the target, and you know we letting off every man. Got my money, who got my back? You can never get it if you never ask.
Big bags, legendary swag. Only one thing better than cash.
When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow.
Like I know. When I walk through, no I walk through, no I walk through, no I'm talking to, not to, you know about to do what? Walk in that door.
When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. Rule one, getting money, never losing no. But I'm broke, but now I'm living adding digits, comma zeros and some decimals.
And I wish you would try to test me, yo. You should listen to the lesson, no. Masterminds out of Mexico, I invested dough when I let it grow.
Regiments I got a pocket full. Rich the income and your taxes low. Spend it right and then invest some more. And if you don't believe me, it's my Cardone.
What you mean? You mean Uncle Cheese? Planting seeds for these money trees. Who got my money, please? Everywhere you wanna be like Visa, MasterCard, American Express. I bought the bank and I bought the jets.
I buy apartments, I send checks.
Yo, billionaire went undercover, help y'all discover who did it best.
Just bought 2 choppers, can't wait till they see the face and they see what I do next. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow.
Yeah, and only then do I buy something stupid. How stupid can you go? You can go as stupid as your cash flow.
You know what heals all ills? Deals. Look who went from meals to bills. It's eat what you kill when you're in the field. In the pipeline overflowing, I don't drip or spill.
We don't seek balance, nah, we want extraordinary. If you really knew my dreams, it'd be more than scary. We got more to spare, ain't no shortage, baby. Winning by the chopper and another for my lady.
Talking about the bird and the strap. Say the word and she handle that.
Fully loaded, put it at the target, and you know we letting off every man. Got my money, who got my back? You can never get it if you never ask.
Big bags, legendary swag. Only one thing better than cash.
When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow.
When I walk through, no I walk through, no I walk through, no I'm talking to, not to, you know about to do what? Walk in that door.
When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. Rule one, Getting money, never losing, no. But I'm broke, but now I'm living at it. Digits, comma zeros, and some decimals.
And I wish you would try to test me, yo. You should listen to the lesson, no. Masterminds out of Mexico. I invested though when I let it grow.
Regiments I got a pocket full. Raise your income and your taxes low. Spend it right and then invest some more. And if you don't believe me, ask my Dr. Cardone.
What you mean? You mean Uncle G? Planting seeds for these money trees. Who got my money, please? Everywhere you wanna be like Visa, MasterCard, American Express. I bought the bank and I bought the jet.
I buy apartments, I send checks.
Young billionaire went undercover, help y'all discover who did it best.
Just bought 2 choppers, can't wait till you see the face and they see what I do next.
When I walk through the door, I'm talking cash flow. And if you know like I know, you're getting cash flow. When I walk through the door, I'm talking cash flow. And if you know like I know, you're getting cash flow.
Yeah, and only then do I buy something stupid. How stupid can you go? You can go as stupid as your cash flow.
You know what heels on?
and only then do I buy something stupid. How stupid can you go? You can go as stupid as your cash flow.
You know what heals all ills? Deals. Look who went from meals to bills. It's eat what you kill when you're in the field. In the pipeline overflowing, I don't drip, I spill. We don't seek balance, nah, we want extraordinary. If you really knew my dreams, it'd be more than scary. We got more to spare, ain't no shortage, baby. Winning by the chopper and another for my lady. Talking about the bird and the strap, say the word and she handle that. Fully loaded, put it at the target, and you know we let it off every man. Got my money, who got my back? You can never get it if you never ask. Big bags, legendary swag. Only one thing better than cash. When I walk through the door, I'm talking cash flow. And if you know like I know, you're getting cash flow. When I walk through the door, I'm talking cash flow. And if you know like I know, you're getting cash flow. When I walk through, no I won't do, no I won't do, no I'm talking to, not to, you know about to do, what? Walk in that door. When I walk through the door, I'm talking cash flow. And if you know like I know, you're getting cash flow. Prove what? Getting money, never losing hope. But I'm broke, but now I'm living adding digits, comma zeros and some decimals. And I wish you would try to test me, yo. You should listen to the lesson, no. Masterminds out of Mexico, I invested dough and I let it grow. Benjamins, I got a pocket full. Rich income and your taxes low. Spend it right and then invest some more. And if you don't believe me, ask my doctor, though. What you mean? You mean Uncle G? Planting seeds for these money trees. Who got my money, please? Everywhere you wanna be like Visa, MasterCard, American Express. I bought the bank and I bought the checks. I buy apartments, I send checks. Yo, billionaire went undercover, help y'all discover who did it best. Just bought 2 choppers, can't wait till they see the face and they see what I do next. When I walk through the door, I'm talking cash flow. And if you know like I know, you're getting cash flow. When I walk through the door, I'm talking cash flow. And if you know like I know, you're getting cash flow.
And only then do I buy something stupid. How stupid can you go? You can go as stupid as your cash flow.
You know what heals all ills? Deals. Look who went from meals to bills. It's eat what you kill when you're in the field. In the pipeline overflowing, I don't drip, I spill. We don't seek balance, nah, we want extraordinary. If you really knew my dreams, it'd be more than scary. We got more to spare, ain't no shortage, baby. Winning by
All right, Grant Cardone back here. Thanks so much for being a part of my real estate training today. I ain't Grant Cardone. So my name's Jared Glenn. If you guys hadn't seen me, I'm the handsome fella sitting over here on the right side of Grant. What I want to do right now is get everybody set up for VIP Q&A. So this is going to be an opportunity for you right now to ask questions directly to Grant about something that you've heard today, maybe a question that came up that didn't get answered. I saw the chat blowing up with questions today about cap rate, about depreciation, about markets to go into, about what to do with an amount of money that you've had. They've gone across the whole spectrum here. And so we're going to give you guys an opportunity to ask Grant those questions personally. And so what we're going to do, I want you guys to get your questions ready. We're going to try to popcorn through this. We're going to try to get to as many questions as we can, as fast as we can, so that you guys all get your questions answered. And so what that means is, number one, you've got to have your video on in order to ask a question. And then number two, you have to have your question ready. All right? So we're going to have...
Devin lobbying first.
What's that?
Devin
Okay, we're gonna go to Devin. You're gonna be up first for Grant when he comes back into the studio here. So, what were the big takeaways that you guys have had from today so far? Before we get into the Q&A, what are some takeaways that you've had? Just go ahead and drop them in the chat right now. What was a big takeaway that you had so far today? I've been investing with Grant I've been with him for 13 years. I've been investing with him for 10 years now. And I put all my extra money into Cardone Capital because the thing I'm great at is sales and marketing and the business side of things. But I still, every time I come into these workshops, I'm like, man, I need to make more money because I need to invest more money. Like, I'm not going to go be a full-time guy that goes out and raises money and buys his own deals and manages his own deals and does all that. But I still, like, when I see this, I'm like, it's validation that I'm in the right vein and I'm doing the right thing. And we've worked with tens of thousands of people, not just through our business programs, hundreds of thousands, but also in the real estate programs. And I'll tell you, there's three main things that you need to have. The people that are successful with this have three main things. Number one, they have access to strategies, like how do I do it, when do I do it, why do I do it, where do I do it? Like, they have access to the information. The second thing that they have access to, as you see on the board, is they have access to accountability. So they have the ability to bounce ideas off people, to ask questions, to ask if a piece of information they have is actually valid. You know, like one thing that Grant didn't talk about a whole lot today was, because he talked a lot about finding great deals, but he didn't spend a whole lot of time talking about staying away from bad deals. And oftentimes, if you've ever heard people talk negatively about real estate, it's because they bought one bad deal, they made a bad decision, and then they're like, real estate doesn't work. I'm telling you, it works if you follow all the rules. So you have to have the accountability. When you get the strategies and you have the accountability, what's going to start happening is your confidence is going to start increasing. Just like before you started today, your confidence was probably at a 2 or a 3 or a 4. It's probably higher than that now. You got some excitement, you got some energy, you're like, man, I can do this, I know how to go into markets, I'm getting the ideas of the 10 commandments and the things that I need to follow. And so that gives you the ability to start generating more confidence in your ability to actually pull this off. And then the last thing that you need to have is you need to have community, because community is the thing that gets you the network. You know, Grant talked a little bit about all of the different people that are required to do a real estate deal. You're not in it by yourself. The biggest investor in your real estate deal will be the bank that lends you the money. Like like Grant said, they typically will loan up to 75% of the value. That means they are the majority investor in your deal. And so they're not going to give you money on a deal that they don't think is going to work. So you need yourself, you need bankers, you need people that you're raising money from, you need legal, you need tax, you need management company. If you buy a big enough deal, you're going to need a title. Like, there's all these different folks that you need. And so you have to start building that deal team out, that network out, so that when you find the deal and you go out and you get the deal, you get debt on the deal, you get the deal under control, you get debt on the deal, you go out, you have investors that you actually can pull the trigger and make the deal happen. Sarah said that the increased value formula was the most valuable thing to her today. Incredible way to find out how much your future profit on the deal could be. Scroll up a little bit in the comments here, just so I can see the chat. Margaret's got $70K to invest. It's her first time investing. She lives in Scottsdale, which is an awesome market. She's 64 years old, and she's like, it's time. And the good thing is the best time to started investing in real estate was yesterday. The second best time is today. Time to switch from single family to a 32-unit minimum. Awesome, Aisha. Let's see here. Scroll up. Okay, there you go. Kurt says small changes can lead to big income. That's correct. Jennifer says you just got to go for it with smart decision making. Aisha again says multifamily is key. Scott says go big or go bigger when it comes to units. Dino says need to go for 200 units. Buy more units than less, says Cynthia. Rich C said the bigger the property, the less you need to increase the rents to add a lot of value. And likely, if the deal is big enough, you're going to have a management team in there that's going to do all the day-to-day work, so you actually can be a more passive investor instead of having a job. Aisha said finding the deal. Vale said $1 million profit minimum. Scroll up here. Let's see. Scott says I don't have a question, but would like to see finding more deals in napkin underwriting. Tomorrow, what we're going to be doing is we're going to spend the first, hour and a half just going through finding deals and going into markets and looking at deals. So we're going to be handling all that for you as well. So strategy, accountability, confidence, community, you've got to have those things if you want to be successful in this game. Otherwise, you're just going to go out and try to figure it out on your own, like some people do. You're going to end up making mistakes, going into a bad market. Even Grant talked about something small and seemingly insignificant like this. Like LoopNet is a free access point for people. And when you go and you search multifamily deals, LoopNet is going to be one of the first things that come up. But what Grant always says is he's like, LoopNet typically is where deals go to die. Like the brokers, the big brokers, there's 20 top brokerage firms in the country, and none of them market on LoopNet. So typically12 is subpar deals. They're deals that oftentimes maybe like you have a 12 unit deal and your brother's a real estate agent. And you're going to have him list the property. He's not really a multifamily broker. You just know him because you have a relationship.
So on that deal, by the way, wrong guy. You're going to get a discount on the deal. You're not going to, he's the wrong guy to be marketing that deal. That's the other thing, that when you see the wrong guy marketing a deal, you know you're going to get a better deal. It's unbelievable how many times this is done, by the way. I probably bought, 4 or 5 different pieces of real estate that I knew immediately, wrong guy on the deal, wrong person on the deal. It was an out-of-town broker representing a local deal, shouldn't have been, and it's always going to be mismarketed. But these are little telltale signs, okay? So there's a lot of places where you guys can find deals. We're going to go to a Q&A right now, right?
Yeah.
Devin's ready.
And I want to answer a bunch of questions. We've gone over a lot of material here in the last little bit. What I want to do is give you guys a chance now to popcorn round. I'm in this market. Introduce yourself. I'm in this market. My name's Grant Cardone. I'm in Miami. Here's my question. As many of these as we can get through is our goal here, okay? All right, first question.
First is from Devin. I'll just say Laub. All right, Devin, you're up, brother.
Hello.
What's your question?
Hi. Well, my name's Devin. I'm in Illinois, and I have $150,000 in home equity currently. And I was thinking of investing in condos in Orlando and doing like Airbnb rentals. But would you guys suggest starting out with the apartments or like Airbnb? What do you feel about that?
Great question. Thank you. Number one, I would not do what you're about to do. I would not buy a condo. I would not invest in condos. I would not do the Airbnb. You're going to violate, okay? You're going to violate many of the principles that I'm talking about here today. What I would do, you're just going to end up with a headache, bro. You're going to end up with somebody coming in, tearing up your condo, and you'll end up with a $150,000 lawsuit and lose your $150,000 down payment. So trust me, for personal experience, I'm telling you. Now, what I would do is I would find a deal that fits the criteria. It could be in Illinois, by the way. It doesn't have to be in Florida. And I would put money together. If you have $150,000, I would go get 10 other people that have $150,000, and I would run point on $1.3 million and buy yourself a $5 million piece of real estate in Schaumburg, Oakville, west side of Chicago. Dude, Chicago's on sale right now. Chicago is a bloodbath and it's going to continue to be a bloodbath.
I think he's in Orlando.
No, he said Illinois. Didn't he say Illinois?
Okay.
Yeah, I'm in Illinois. I was looking to invest in Florida.
You got that Orlando hat on.
Where do you live? Where do you live in Illinois?
Right by Naperville.
Yeah, Naperville. I was going to say Naperville. I dated this chick in Naperville. Great market. It's always going to be a great market. And I just know places by, different associations. So, no, it was Chris.
Yeah, we were planning to invest in Florida, just maybe here, but wherever would be the best advice you have would be where I'd want to start.
Dude.
I definitely want to go right into
it. Everybody here, this is a great question he's asking. We'll go to the next one, but everybody here, start in your market. You guys do not need to cross state lines right now. You can find something in your backyard. I don't care where your backyard is. Every city has a score. Let's go to.
I'm sorry, this is
I
Jose.
can't see the names, guys.
This is Jose Muniz.
Jose, how you doing, my friend?
Hey, how's it going? I typed my question partly in the chat.
You ever had one?
But I have 2 properties that I have paid in full. I made that mistake a long time ago before I met you. But I'd be willing to get rid of both of them to get into multifamily. My question is should I hold on to them until I find a property? Or should I go ahead and get rid of them and then hold on to the cash and then find something?
Yeah. Well, how much other cash do you have?
I probably have like 50K.
Okay, and then the 2 properties, what do you think the 2 properties are worth if we go fire sell them?
About combined 500,000.
Okay, so what you're going to do is you're going to put both deals. This is the kind of stuff we do in our mentoring, guys, by the way. Like these kind of questions we do every week. So you're going to put both deals on one financial statement. You're not going to show them as individual properties. You're going to fill both up. Do they have renters right now?
The vacant, so the one of them is my house that I live in. It's my residence. And the other is a vacant lot that I rent to a U-Haul and a place that still sells storage sheds.
Okay, good.
And at the end of all the month, I get about $1,000 cash flow.
Okay, and then your house
After
is going to rent
expenses.
for how much?
It would rent for about $1,800 a month.
Good. So you're going to
If
put a
I-
lease together with yourself for $1,800 a month. You're going to keep your U-Haul lease on the other. You're going to have it as a small portfolio in your market and say, I'm selling these 2 as an asset together. One has a renter. By the way, your lease is going to end whenever the sale happens, and then you're going to have the other portfolio, and you're going to basically sell this to a local investor. Grab your 500K and do what's called a 1031 into another asset. That next deal, that 500 grand, could buy you as much as $2 million worth of new assets, maybe $2.5 million. Where do you want to invest in? What market?
So I live in Montana. I wouldn't mind going out of state.
Okay.
You know, Texas, Arizona.
Good. So let's say you go to Arizona, you could buy $2.5 million worth of real estate down in Phoenix, probably get yourself 25 units, bang, day one. You could go from owning empty lot with U-Haul and a house to owning 25 units in one of the hottest markets in the next decade. Scottsdale, Arizona will be one of the hottest markets in the country. I don't mean hot like it's hot. I mean hot like you're making money. That's what I would do. Thank you. And thanks for being here. Next call.
Next is Carlos Urdaneta.
What's your question, Carlos?
I don't. Oh yeah. Okay. Hey, hey, Grant. Nice meeting you. Yeah, my name is Carlos Urdaneta. I'm located in Loganville, Georgia, 45 minutes out of Atlanta area. My question is like going back is in the proper deal sequence shatter. You mentioned that many folks get hung up on setting up LLCs as the first step instead of finding the deal and the confidence to commit, of course. As a new investor aiming to purchase a multifamily home through an LLC for personal asset protections, what are your thoughts to manage the higher costs and risks associated with commercial loans, which often require a personal guarantee? Any specific strategies avoiding personal exposure here?
Yes, 100%, and a fantastic question. Again, for all of you in here right now, you're like, oh, I didn't think about asking that question. Well, his question is your future, okay? Because sooner or later, everybody's question in here is going to be somebody's situation. Even if you're not thinking about it today, you're going to be thinking about it in the future. When I borrow money, let's say I borrowed $2 billion worth of debt. $2.2 billion. I am responsible for none of that, by the way. If all that went bad, I'd be like, sorry. But that is the agreement the lender made. Also, let me just say this. Not only am I not exposed to bankruptcy because of that, when I asked the bank, could I sign on the loan and be recourse, they're like, no, we don't want you recourse. We want the properties to support the debt. Dude, they don't even want your name on it, okay? Recourse debt used to be a thing years ago. It still is with single-family homes. If you buy one house and you can't make that house payment, they are going to foreclose on you, and they are going to send you to BK. And you are going to be damaged for 7 years. Why? This was a personal loan. The kind of loans that we're doing, the 4 units, you're probably going to still be a personal loan.
Yeah.
When you get to 40 units, 104 units, 200 units, when you guys start scaling out, like the gentleman I said 25 deals, the question before you, dude, you are non-recourse. Why? Because they want the entity, the loan, the LLC, Brownsville Apartments LLC, is the entity that is borrowing the money from the bank. Okay? That bank will then see that you have investors down here. Your investors, by the way, as a partnership, is actually another level of protection against FBI. Like, you cannot break up these partnerships. IRS, FBI, all these acronym groups that want to seize people's property, you're putting a shell, a structure. I don't know, Ryan, if you want to add anything to this, but basically when you find the deal, let's say you found a 200-unit deal called the Georgia 200 units called, I'm gonna make up a name, Georgia LLC 1222, okay, whatever. Okay, that thing is gonna hold these 200 units. This piece of paper is gonna hold these 200 units, and inside of that is gonna be your property, the property, right, Ryan?
That's right.
Okay, so if there's a lawsuit, it's going to that, not to you. You're over here. You're over here running control on this asset as a, what's that called? His position's called a G.
A manager or GP?
GP. You're the GP, and then you have LPs that are invested here. These LPs, by the way, are another protection, a condom, if you will, so that somebody can't come in and say, hey, you need to, let's say the FBI had a problem with you, okay? Or one of these groups. And they're like, hey, we want you to break this up. Dude, there's 200 investors in this group. You can't just break this up. Now, if you owned it all by yourself, they could come break you up. So there's a lot of benefits. I know people talk about, oh my God, I don't want to be a partner. Go to Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America, Merrill Lynch, Fidelity, BlackRock, Blackstone. Dude, they have thousands of partners. Ain't nobody breaking them up, ever, okay?
As long as you're doing the right thing, they can't break it up.
They can, as long as you're doing the right thing. Now, if there's fraud going on here,
they'll break anything up.
So you guys that are like, I don't know if I want this much responsibility, that's a different issue.
Right.
Okay? That's a different issue if you guys don't want responsibility. I don't mind the responsibility. Why? Because my hands are clean. Okay? My hands are clean. Like, I'll show you guys everything. I'll show it to the SEC, the FBI, the IRS. I'm like, bro, here it is. You want access to my books? Look at them, okay? So we show everything we have to have. The only thing we won't show to our investors is when it overburdens our operations to the point to where I'm like, I have a business to run. I can't stop every time you ask me for a rent roll and say, here it is. My job is to distribute cash to my limited partners. The more the better, by the way. You guys want investors. You need more people investing with you, Carlos, so that you can support more deal activity. And if you're living in a small community, let's say you had 20 or 30 investors, it's like owning a restaurant, dude. If you're the only owner, you get no referrals. If you have 20 other partners in your restaurant, they're bringing all their families to eat at your restaurant. Okay? Thank you for the question.
All right. Next is Paul Longoria.
We do this every week. That's what we should do.
Paul Longoria.
Paul, how you doing, sir?
Good, Grant. How about yourself, my man?
Good, brother. Are you married to that famous actress, Eva?
I wish, bro. I wish. Hey, Grant, I got a.
She ain't all that,
one
bro.
of the things as a new, I've been doing some. I'm in a flip right now, and I got 2 other properties that I was looking to do rentals. But I told myself after those deals, I was going to go in and get into units.
Yeah. Why are you after this deal? You're done with flipping.
Yes.
Just say I'm tired of being a hoe.
tired of being.
That's what
Yeah.
flippers
So
are.
so after I got with the deal, I already told myself I'm not going to do the flipping anymore. But the thing is that what is a good tool or what questions, and I'm as a new investor to go to other investors to ask for capital to help raise capital.
Well, there's only one answer to the deal, dude. Look what I have. You shouldn't be asking them questions. Look what I have, bro.
Okay.
Bro, you need the hot chick. When a hot chick walks in a room, everybody does this. I don't care who they are. The guy married, I watched a married man, he's been married 30 years. Hot chick walks in the room, this guy will never ever cheat on his wife. Wham! Freaking neck came right out of his shoulder, okay? Okay, right after that, 10 minutes after that, this hot guy walks in, okay? Freaking guy's all built, kind of look like you, bam, again. He's like, dang, okay? Look, admiration goes to beauty, bro. People want to see stuff that looks good. Like I show you guys a big deal, a good deal, a juicy deal, great location, next to Whole Foods, Starbucks is down the street, Amazon's going in. People are like, what you got? That's what you need, bro. It's not about asking questions. It's about getting a deal under contract. And this question right here, these questions are great, by the way. Wish we could do these every week. We should. It's a great idea, man. Okay, this is what you need, a deal, okay? And then the deal actually attracts the network. Now, that being said, you need to be focused. This is where we help hold you accountable with a community. You need to hold yourself accountable to be spending time where you can talk to people about deals, and these aren't just broken people that can't contribute. We got to build our network around you, bro. So you shouldn't have to go out and talk about it. What if I could drop you tomorrow into my network? Not your network. And this is for everybody in the room. What if I could drop you into the Grant Cardone network? I just got off the phone with a guy worth $8 billion. What did he mention the entire time we were on the call? The network you've created, Grant. The brand that you've created. The trust that you have amongst these people. Okay? And if I told you guys this guy's name, everybody on the call would know his name. I want to talk to you about, Grant, how we can expand this.
This is massive, Grant.
This is massive what you're doing for the everyday person. And by the way, the chiropractors and the doctors, we know they're all getting screwed. Okay, and that's the audience that I'm going after, okay? Your audience is going to be doctors, chiropractors, professionals, people that are in my network. But have you ever gone to one of our growth conferences?
I have not, no.
How about our business boot camps?
I have not.
How about our 10x 360 scaling workshops?
I have not.
Sales workshop, marketing workshop.
No.
Bro, come in the room. Right now, there's 140 people 400 feet from where I'm at right now in a room talking about organization, how to organize a business and scale it. So you got to get in networks, bro. You don't need your own network. You know what you need to tell your network? Boom, I'm done with you. Move into the next level of your life, okay? For everybody watching this right now, everything you have, everything you want is in the hands of someone you have yet to meet. Everything. Your future will be designed and made based on who you go to meet if you're willing to let go of who you already know. Okay? Will you get a couple of people that are, you might have a couple of people that, but they know you, so they don't trust you, bro. Jesus had to leave Bethlehem. Did he leave Bethlehem or Nazareth? Nazareth. Yeah, he left Nazareth to go to Bethlehem. I had that backwards, okay?
But you said it
Brian,
with conviction.
do you know anything? What are the 10 Commandments, right? Go look them up.
But you said it with conviction.
Yeah, okay. Let's go to the next call. Next question.
This is going to be from Wendy.
Wendy, what's up, Wendy?
Hey. Yeah, I'm a newbie too. So the first deal.
You don't tell anybody that anymore. Everybody here, no more. You don't introduce yourself as newbies no more. Nobody's. You guys just got. You got a lot of information there. You're committed. You're a committed real estate person.
I like that. Okay. So the first deal you can do with no money. I've heard you say that a few times. And okay, so I don't have to sell my house or anything like that, or my condo.
No, you don't have to. I mean, you could do a deal with 5% down.
Okay. All right. And then how many bad searches on average? I'm in Nashville, Tennessee, by the way. I was supposed to say that.
Great
how many
market.
bad searches? Yeah. How many, like, if I start, like, on an average, like, is it going to be 1 out of 10 or 1 out of 100 or 1 out of 500?
Yeah, probably probably more like 1 out of 100. I would tell you guys, all of you, not to write a deal until really go hard on a deal until you've underwritten 25 deals. If you get to 25 deals, you'll find a couple in there that I would buy. But your first deal is not gonna be something that be like, if you're that lucky, good for you, but that doesn't happen to most people. I think it's gonna be 25 deals before you can be like, I'm certain. Because that's the other thing. Even if you found the first deal was unbelievable, you guys are still not gonna have this confidence. Doesn't mean that you have a newbie. I know people that have been looking at real estate for 30 years. They haven't done what I've done. Now, if they go to Las Vegas and they bet on a blackjack, they could they could have more confidence about a blackjack table than I have. But they're not going to have more confidence about a real estate deal than I have. So what does confidence look like? I'll sell my condo, sell my house, sell my jewelry, sell my car, and I'm putting all the money in this deal. That's confidence. Ultimate confidence is I'm selling everything to go big on this one deal. And that's the situation I want to get you in. I want to get you into a situation where you're like, oh, wow. Would I sell my condo for this one deal? How much money would you have to make on one deal? What's her name again?
Wendy.
Wendy, how much money would you have to make on one deal to say, I'll sell everything?
I like your 1 million, but I'd probably 500,000.
Good. So if I could show you one deal and say, hey, look, Wendy, I promise you, there's $1 million to be made right here. At that point, you're going to rethink everything. Hey, man, I might even get rid of my job.
Yeah.
Okay?
And do it.
Good. So thank you for being here, okay? And that's what everybody should be thinking about, guys. You're looking for one deal. One deal. You don't need 10 deals. Look for one deal. I don't know if this resonates with anybody. Look for one deal to change your life. You cannot change your life with a flip. No one has ever changed their life because they flipped a deal. Okay, let's say this gentleman that's coming in right now, his name?
This is going to be Terrell.
Terrell. Let's say Terrell finds a deal, and Terrell found a deal for $10 million, and he can flip it for $1 million right now. I'm gonna flip this for $1 million. Okay. But dude, if somebody else is going to come pay 11, why are you selling it? Why are you picking up $1 million? There must be something else going on that somebody's willing to pay you this premium. Wouldn't you rather just own it? Because the moment he flips it for $1 million, what happens? He's paying $500,000 in taxes, which means tomorrow he doesn't own anything. Okay, go ahead, Terrell.
Hey, Grant. Thanks for taking my question.
Yeah, you got it.
My first question is, I'm from New Jersey. I like the market. What do you think about the market?
New Jersey, bro, it's always going to benefit from freaking New York. Okay, those people are crazy up there.
Sounds good. Thanks. And then,
by the way, let me just say this: I don't care what happens in New York and New Jersey, no matter how insane it gets. 95% of those people will never leave New York and New Jersey. Right. And the people in New Jersey aren't going to New York, and the people in New York aren't going to New Jersey. It'd be like people in New York are like, I ain't going over there, bro. That's like Ukraine. Mm-hmm. Okay. The people in New Jersey, I ain't going over there. I'll go visit. We'll go have dinner, but I want the hell out of that place. So there's people in Miami will never go to Fort Lauderdale. Fort Lauderdale won't go to Palm Beach. Palm Beach wouldn't go to Tallahassee ever. Like, it's just weird. Like there's some people. There's going to be people in south Chicago. I don't care how bad it gets. They lost a cousin, a niece, an uncle, and they're like, I ain't leaving.
My second question is, what 2 or 3 things can I do to start getting deals like sent to me either email or through brokers that I can start underwriting like consistently?
Get on every list. When you go look at a deal, do you have a deal right now? Do you have an address of a deal or anything?
Not right at this point.
Where in New Jersey are you?
I'm in Princeton.
Okay, so I'm going to put in Princeton in here. Now, the reason I like, the one reason I do like Princeton, New Jersey, The reason I do like LoopNet is because I get a lot of names off of it. But when I go to Princeton right now, it doesn't have any assets available. So I got to open this up. You're going to have to open up your looker. Because in the beginning, you're trying to build your network. Remember, it goes like this: deal, debt, equity, network. You got to have a network. Now, I'm giving these things value, but the truth is they're all on one hand. It's like saying my thumb's more important than my index finger or my middle finger. Like, it just depends on what I'm trying to do with it, right? My little finger is very important if I'm drinking a cup of coffee, okay? it just depends on what I'm trying to do with my fingers, but I can't really move any of my fingers without moving my whole hand. I need them all, okay? They're all valuable. So I don't want you guys to think about one thing as the deal without the network is like this. You're running around with a deal. Basically a thumb up your ass, okay? You're not going to do anything. You're hitchhiking. Like, okay, what am I doing? I'm begging. You need the whole hand. This is one thing that we try to provide for those, that small percentage of you guys that want more than just today. We're trying to give you the whole hand, okay? We're trying to give you a hand up, not a handout. This isn't about a freebie. We're not giving you stuff away. We're trying to build a network of people, Terrell, that are strong, that can support one another like I'm trying to do for you today. I don't know you, I don't look like you, but I know this. I benefit by helping you. Okay? How many of you in this chat, I just want you to throw in the chat, how many of you think I will be paid rewards on this planet because I help other people? Mm-hmm. When I don't have to, by the way. Of course. How could I not? This has never, ever let me down since I was 25 years old. I have been doing two things that turned my whole life around. One, improving myself. I talked about how much time I spend on my own self. I spent a lot of time, a lot of money, a lot of energy on improving Grant, whether it's physically, mentally, emotionally, financially, networking with other people. The guy that called me earlier, we invested a lot of money so I could sit at tables with this guy. The second thing I invest in is giving back to other people, because it creates a flow for me. It makes me feel good about me. I feel good about me, I do more stuff, okay? So I'm going to New Jersey right now. I'm going to open it up. Boom. All of a sudden the list opened up, okay? Now watch this, Terrell. Okay, you see this right here? Kislak. That's a group you need to get on their list. You're going to click that, and they're going to require you to give your name to be on their list. I'm not even looking at the real estate now. Okay, here's the deal. 10X. Look, they tried to steal my damn 10X. Okay. 10X. Oh, see that Marcus and Miller chap right there? Bang. I'm gonna get on their list. Okay, watch this. Here's the deal right here. You're like, I don't like this deal, but watch this. You see this punk right here, Michael Sherman?
Yeah, Michael.
You know Michael?
No, I don't know Michael, but
but he looks like a punk.
Karen looking Michael Sherman. Okay, boom. I'm gonna get on this guy's list. So I'm gonna start building names. I'm gonna get on all these lists. I could be on 50 lists by the end of today and start seeing every property in New Jersey that comes on the market. In addition to that, CBRE, Cushman Wake. In our resource book, by the way, where's my resource book? In this resource book, I'm going to talk to you guys about here in a second, is a list of every broker in the country. There's a network, a built-in network. Great shot, Johnny. I don't know if you guys can see this because of all the light. Man, that light's bright. Okay, that's just 2 pages. It goes on and on, okay? Brokers in the market. How can I get in on their list? If I go to like, if I go to this company right here, Cushman Wake Real Estate, okay? This is one of the largest real estate brokerages in the country. Guess what they sell? Commercial real estate, period, full stop, okay? So I'm going to agree to whatever they want. I'm going to give them their name, my name. I'm going to get on their list, and I'm going to be able to literally see deals in specific markets. I could be just Atlanta. I could be the Southeast. I could be the Northeast. I could be the West. I could be the middle, whatever, okay? All right. Speaking of our resource book, can I just talk about what I'd like people to do?
Yep.
Okay, yeah.
Okay,
yeah.
You good?
Yeah.
What we did and what I'd like you guys to do now, okay, after a big day of a lot of information, what we're trying to do, and I mentioned this to Terrell, is I want to provide you guys with strategy. You got to have a strategy. If you don't have a strategy, What are you going to do? The first part of the strategy was today was like, look, we want to go find 32 units where the rents go up $200 because that's $1 million. That is a financial strategy. It's a business strategy. Okay. Now, in addition to that, let's say you found the 32 units, okay, at 200. I want to also hold you accountable to what your goal is. So everything starts with a goal and a target. Okay. I want you guys to throw in your goals and targets. What do you want to accomplish in 2024? One of your exercises today is what do you want to accomplish in 2024? Is it 1 unit, 4 units, buy a house?
32 units,
32
million
units.
net.
You want $1 million score? You want to refinance it? What is your goal? Okay? Whatever your goal is, it's your goal.
40 units, 20 units, 4 units, 64 units, 12 units, double my units to 16, 32 units. Own my first 200 unit deal with partners, secure my 1 to 2 deals totaling 200 units, 100 units, 64 units, 2 units making 2 million, 32 units, 48.
Wow.
Good.
Slam.
Okay, so good. Now you have the goal. I can't do that. Only you can do it. I'm going to introduce you to a way for us to support you, and then I'm going to turn this over to Jared to talk about the details of it. I want to put a group together that holds you accountable. Because let's keep it real. Most people have a plan, and then nobody holds themselves accountable, okay? I want to fix something. I hire somebody to help watch me that I fix it. I don't trust me on new endeavors. Why? Because on a new endeavor, I'm no good at it. And what happens when you're no good at something? You go do shit that you are good at, and you abandon the thing you're no good at. I just finished 7 days. Show me how to do this, bro. Hold my hand and make sure I sit here and do this new thing, okay? Literally like a sixth grader. I'm going to go into the classroom. Here's my schedule. Here's my goal for today. I'm going to cover 66 pages. I'm going to get through this much material. Hold me accountable. Keep my score. Time me. Clock me. And guess what? I get more done. And you guys can keep just trying to make life better, or you can do that. I'm just telling you what I do. I put myself in a situation where my goal is held accountable by a third party. The third thing is I need confidence, and so do you. You're not going to have confidence in the beginning. This is what we want to give you guys. I want to give you confidence. That's a good deal. No, that's a terrible deal. Would you learn something? That's not the right way to do it, dude. Straighten that lake, okay? Or do it like this, okay? And then stay with you. Come back tomorrow. Come back again. We're going to do it until you keep building that confidence, that certainty. And in real estate, man, once you know for sure, okay, now you got to score. It's like I asked the young lady.
Vale or Wendy?
Wendy. I said, Wendy. She's like, I don't want to sell my condo. If I found you one deal that would make you $1 million and you knew for sure it'd make you $1 million, would you sell your condo?
That's right.
It was instant. Yeah, I'd sell the condo.
Right.
Oh, you don't love it that much, do you?
Hell no.
Okay. I don't want to leave, blah, 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 blah. Well, if you could make $10 million on one deal, would you leave? Oh, yeah, I'd leave now. Because you can now use the money to fix some of these other things that keep you fixated. The problem is you don't have the certainty. What happens? What happens to you guys when you leave here tomorrow and you find a deal that could make you $1 million or $2 million or $3 million or $200 million like one deal made me, and you don't do it? You're like, oh, I didn't do it because I didn't have the money. No, you didn't do it because you didn't have the certainty, because if you had the certainty
that it was a good deal,
all you had to do was call my ass.
Right. That it was a good deal.
If you knew for sure.
It was a good deal.
If you knew for sure, okay, it was going to be a blackjack, you would bet everything. But you don't know for sure, so you don't do it. Now, we're not gambling with real estate, okay? The last thing you guys need is community. And that's what I want to talk to you about right now, if I can. I want to provide you with a community. I want to provide you with certainty. I want to provide you with accountability. And I want to provide you with strategy. You have to determine the goal. I can't. Okay? So if I can, I want to show you guys something we put together for everyone here today that many of you already, by the way, have taken advantage of. We put together a 12-month mentoring program. This is an opportunity for you to join us for 12 months. Every week we meet at 3 p.m. to do full-blown Q&A with our team. Accountability for targets. What are your goals? What market are you in? This is a very select and very exclusive community. We also go over and use our buying apartments, introduction to buying apartments. We give you lifetime access. This is a 16-hour program. It's $10,000. We give it to you. Okay, stay with me here because I'm going to make you an offer and give you an opportunity to join me in something that will change your life forever, okay? Also, I'm going to give you our real estate masterclass. We're going to use this to launch each one of our weeks so that you guys don't just have the program, the masterclass, but we actually go over with you. So I become the guy that you walk through the material with, and you get to actually break this material down. We start every week from this program. We use about 10 minutes of it and then say, let's talk about that piece of data, okay? And it opens up questions for those of you who never got to the program. That's a $10,000 program. We give you that for life, but we actually go over with you. It's like almost like a book club, okay? Also, we give you our real estate resource book. This real estate resource book is purchase and sale agreements, due diligence samples, LOI samples, many of the things that we'll be talking about tomorrow. How do I actually write an offer, okay? The purchase and sale agreement by itself, by the way, would cost you somewhere between $12,000 and probably $50,000 just to do a purchase and sale agreement, okay? That's what this is right here. This is our boiler sheet purchase and sale agreement. It'll at least get your lawyers off of you, okay? Now, go ahead.
No, I'm just laughing. That was funny.
Okay. We're going to give you also our due diligence. I mean, you can see this book is massive, okay? This is everything that we use to basically work a deal, including due diligence, disability family, trash, roommate release addendums, everything that you need and we haven't talked about today is how do you manage a deal once you have a deal. Also, I want to give you, and you can go on my website right now and buy this for $2,500. Or you can just let me give it to you, okay? Also, we want to give you access to a private networking group that is used online. We're not going to tell you the platform we use right now, but it is a private networking group so that everybody in this group can start connecting with deals, networking, vendors.
Hundreds of people in there asking questions 24 hours a day, 7 days a week from every
market. Where I can
all
find a
around
good plumber,
yeah.
I have my sewer back up, and they're quoting me $3,700. I got some mold remediation. You know a good mold remediation guy? Dude, had a guy come down from Fort Myers, friggin' did my whole place. It was going to cost me $350,000. You know, it's taken almost 8 weeks. It's been 4 weeks. He thinks it's going to be another 8 weeks to get it all out. Okay, we're going to give you guys that. Also, this is super cool. 2-day live event.
We only have 100 of these, by the way.
Okay, first 100 people get our next event right here in Miami. This is 2 weeks from right now.
Yep.
I'm going to give you this as a $5,000 seat. There'll only be 400 or 500 people there. Okay, we only have 100 of these left. I could go literally sell all of them tonight. I'm going to give those to you guys today that want to take advantage of this. The first 100.
And you get to come meet people. You get to come be a part of the community. You get to see people face to face and start building those relationships.
Build a network. See people doing deals. This is 2 days where all we're going to be doing is going over Q&A, walking through deals, answering questions in person. 12 months of mentoring. Every single week we do a mentoring call. Every single week we go over the real estate masterclass, introduction to buying apartments. We give you the resource book, the private networking group, and the real estate summit. And I'm going to do all this, not for $37,500, but I'm going to do it today for, how low can we go?
$49.97.
$49.97, okay? Okay. GrantCardone.com/join is the link. GrantCardone.com/join is the link. Only the first 100 get access to this next event. Otherwise, you have to wait until our next event, which I think is July.
July, yeah.
Yeah, good. So what am I giving you? $22,000 worth of training materials, $10,000 worth of coaching calls, $5,000 seat, all of it for $49.97. And for those of you who need to make a payment, we put together a payment program for you, GrantCardone.com/join. And we can do what? What's the payment plan?
Yeah, just go to the page.
We'll work something out with you guys, okay? If you need some help, all right? Just be genuine. Be committed. Be interested in being part of a network. And please be interested in doing some big deals, okay? 100% risk-free, by the way. If you don't, listen to me. If you don't do a deal in 12 months, okay?
Or invest in a deal.
Or invest in a deal. In the first 12 months, I'm going to give you 12 months for free. I'll give you an extra 12 months for free. Now, if you come in here and do one deal, and one deal makes you $1 million, all I ask you to do is this. You got a 200 or 20x return on your investment. Okay? Now, what are you going to do?
20 would be 100,000. 200,000. 200%.
A 200x return. Because that's what you're looking for, folks. You're looking for one deal to give you a 200x return. One deal. Now, you got to go through the material. You got to listen to the material. You got to show up every week. I know this is work, man. Huh? How is you going to make $1 million damn dollars? Ain't nobody going to give you a raise of $1 million. Your chances of making $1 million in America today are so slim. 32 million families in America have a net worth of $1 million. 32 million. That is less than 10% of the entire population. Okay? Less than 10% of the entire population. And the truth is, every American family should have a net worth of $1 million. And there's plenty of assets for every American to own $1 million worth of assets, but you don't. You know why? Because you're not paying attention to the main thing. And the main thing is an asset that can pay you and your family. If you have a question, you can call my office. I want Jared to go over some of these other details.
Yeah, sure.
Also, I know you want to talk about some of our success
I just want to share with you guys just some successes of people that have been in our programs. This is from Chris and Marcella. They were in our program for 2 years, and they were the first person to come in and go, hey, I want to be a part of this community for the next 10. And so they went from having 35 units to being a GP on 1,800 units and a limited partner in 1,000 units. Mike Bailey, in 36 months from being mentored, he went from 1.8 million in assets to 8.3 million in assets. Very active in our club community. This is from Jadeep. Is a member of the real estate mentoring program. The Q&A calls are amazing. Grant delivers on these calls. Ryan is there, who is Grant's right hand on the real estate side of things. You guys have seen him. He's working in the business day to day, handling all the calls with the properties, the management, the brokers. He's talking to people that are in other markets. They're giving him intel. So you guys get to tap into all of that on those Friday calls. Yoko, the weekly meetings on Zoom with the team. She's learned so much. Very quickly about the world of real estate investing. So it's an opportunity to really get more comfortable with the terms, the math, and then again, specific questions that you have about how you can grow your real estate portfolio. Colleen recently joined the mentoring program. Without a doubt, I'm above and beyond satisfied with everything she's learned. It's an amazing opportunity, guys. Here's a list of the people that have taken advantage of the program just since we did the webinar. So congratulations to all of you for being a part of this community. You're joining right now a group, an active group of, I'm pulling it up here. By the way, there's been 306 messages since in the mentoring community. There's over 759 members in that chat group alone right now. So a lot of opportunity for you guys to get connected with people that you don't know yet, that are in other markets, that you want to be in, that you maybe can't get into. You get to tap into the deal team here so that you can ask questions. Go ahead, Grant.
One deal. One deal. One deal. You have, how many days we got left in the year?
10 to 300. Yeah.
300. One deal, 300 days. Now, I want to ask everybody in here right now a question, okay? How many of you think I could find one deal in any city in America? Any city. Just put in the chat if you believe Grant Cardone could find one deal that would make me $1 million. Who in the room is confident I could find a deal in any city? I don't care where you put me. Maybe not. I don't know if I could do it in Alaska. Probably could. I bet I could. Shit, maybe I'll go there and prove it. Okay? Yes, you can. Yes, you can. Does anybody think I could not do it? See, why do you guys have so much confidence in me? Dayton, Ohio. Yes, I could do 10 deals. Okay, why do you guys have so much confidence in me and so little in yourself? This is not about you becoming a great salesman. Okay? This is not about you becoming a great ballerina. This is not about you becoming a baseball player or a football star. It's about you finding one deal that could make you and your family millionaires, okay? What's your cost? $5,000. That's what you're gonna spend on it. By the way, that is part of, when you do that, when you spend the $4,997, that is an investment, not a cost, in this venture. Along the way, you're going to spend some other money, just so you know. You're going to spend money on due diligence. It's going to cost you about $37 per unit for somebody to walk through each unit and take pictures. You're going to spend money on title. You're going to spend money on insurance. You're going to spend money on legal. This won't be the last time you spend money. But it doesn't matter what you're spending. This is your score. Okay? One deal in 300 days. We have 300 days of the year left for you to find one deal this year. Okay? You have to get started though. You're here, it's cool. You could try to go it alone right now. You can be like, I'm just gonna take the information I have right now. I'm gonna go see how good I can do. You ain't gonna do shit by yourself. Okay? I'm telling you the truth.
Because you don't.
I don't do anything by myself. What are you talking about? Jesus didn't do anything by himself. Why would I go alone? Okay, it's stupid what you're saying. I'm gonna go figure out this thing on my own. You ain't gonna figure nothing out good on your own. What you're gonna do is, your intention today is go out on your own and try to do this, and then you're gonna shrink up. You're gonna shrink up. You're gonna quit before you start. You know it's true. You won't even finish the whole program by yourself. 83% of all people that buy books never, ever finish the book, okay? 30% of them never open the book after they bought the book. You're not gonna use it until we hold you accountable, okay? We're gonna bang you with emails. The network's gonna say, where are you at? We're gonna find out what your goals are, and we're gonna hold you accountable. And if you don't want that, don't do it. Don't do it. If you don't wanna be held accountable, if you don't want to achieve your target and change your life, do not join. But for those of you who are like, I'm committed, this is my year, I'm going to change, I can't just keep working my ass off, this is my moment. I'm a nurse, I'm a chiropractor, I'm a doctor, I'm a plumber, I'm working my ass off, I'm a good ethical person, I'm 50 years old, I'm 25 years old, I'm busting my ass and I'm not getting ahead. Guess what? It's because you're not buying assets. You're just getting good at a job. You're just working hard. And working hard does not pay dividends. It pays a salary. And your job is to work hard, by the way. That was the deal when you went and got the job. I want a job, I want some money. Good, work hard. They can only pay you so much for working hard. The rest is about you investing in yourself and in your assets, okay? You could go start a business this year, another business. Come on, let's keep it real. Most people in business don't even make money. 64% of all businesses in America break even or lose money. Most of those companies won't even be in business 10 years from now. That piece of real estate you bought, it will be here 10 years from now. I can show you properties we have today, showed you properties that were here 100 years ago, 90 years ago, 80 years ago, and they will be here 100 years from now. I promise you this will be worth your time and worth your investment, and my team will make sure to meet with you every single week to make sure you get through the masterclass. Again, one last time I'm gonna tell you, this masterclass is 10 grand. That's what you'd have to pay. Now, some of you have this program already. If you don't go through it, it costs you 10 grand to buy it. It'll cost you 10 million not to understand it. Tens of millions, okay? There's hundreds of millions of dollars of information in that program. Some people would say there's $1 billion worth of information. The guy that called me on the last break is worth over $8 billion. And he said, Grant, what you're doing to help people is unbelievable. It has never been done at scale like this. We're making this as affordable as we can for you, okay? We start you with the introduction to the apartments. This is your introduction class. This is where you should start. Then you want to follow it up with the master class that we're going to go over with in the weekly meetings to make sure you're going over it. And then we're going to do Q&A each week. Your question is somebody else's question. That's 52 weeks of support. Look, we only need 300 days to find one deal, okay? Okay, you believe I could find a deal. Well, guess what? I'll be with you the entire 300 days, okay? Okay, if you're ready to go, join me, grantcardone.com/join. We're going to give you the resource book. We're going to give you the coaching calls, the resource book I mentioned, the buying apartments, and, oh yeah, how many spots do you have left?
2-day event. We've got 64 spots, but they can attend virtually as well.
Okay, 2 day. If you don't want to travel, you don't want to get on a plane, you don't want to leave your work right now, you can't, whatever, cool. We'll give you the 2 days.
Virtually.
2 weeks from now, virtually. We literally spend 8 hours both days. Grant Cardone the entire time. And I can't wait to see you there. But most importantly, I cannot wait to find your first deal. And Jared said we'd also do this. If you don't get that deal in the first 300 days, I'm not going to even blame it on you. I don't even care why you didn't get it. We'll give you this
the second
12
year of
months,
mentoring.
the second year of mentoring. We're going to still be doing deals 12 months from now, okay? Now, the other option you have is this, okay? We have a club. That club is $25,000. This is for people that are super serious. You're like, dude, I want more than that. I want access to deals. I want access to flow. I want access to equity. I want to raise money in deals. We do a club. It's $25,000. And this is what I want to do for everybody that acts today, without me spending time talking about the club. At any time in the first 90 days that you decide to get into the club, I will credit the $5,000 or the $49.97 to the club. Or you could join the club today and I'll give you both for the same price, okay? So if you want to join the club, just talk to the team. I think that's the only way to do it,
You know what I think we should do also?
What?
Just for people that are interested in the club. Like we had one of the gals I want to bring up tomorrow. Her name's Jennifer. She joined the mentoring program, went on the first call on Friday and heard about the club and upgraded to the club immediately.
Yeah.
And so if you have a bunch of cash, you need to get around deal flow, which means you need to get a community. The mentoring program is for people who need to learn and build up their confidence and understand things and go through the math. The club is for people who are ready to pull the trigger as investors. So I'm just going to do this. We hadn't planned or prepared for this, so this is going to create a manual problem. But you guys heard us talk about the deal finder a couple times today. Anybody who goes directly into the real estate club today, and anybody who already has, because we already had some people.
That's a $1,500.
We're going to give you a 12 months of access to the deal finder included in the real estate club. It's a $1,500 a year subscription. Tons of data and information, all that data about transactions and loans and maturities. The deal finder is so that you can find distressed deals, the exact type of deals Grant was talking about. You can search by loan maturity date. You can search by foreclosure activity. You can search for delinquent tax activity. You can search for all of that in the deal finder. So anybody who goes ahead and moves forward with the real estate club today, we're going to go ahead and include that for you as well. Look, folks, real estate's changed my life forever. Understanding this makes me more confident that it's the right place for me to be putting my money. If you have questions about anything that we've covered today, call our office at 310-777-0255. It's 310-777-0255. We've got our team here. They'd love to chat with you. If you got a couple questions about how something works, or when it's available, or how you can attend the event, or when the next event date is, we can answer all those questions for you. Just buzz the team, 310-777-0255. Tomorrow morning when we come back, we're going to start talking about finding deals. We're going to go through underwriting deals. So it's going to be an amazing, jam-packed, super, super valuable day. You won't want to miss this. We're going to be going into markets that you guys are throwing us, and Grant's going to be live underwriting deals, and maybe we might get a broker to call us back tomorrow. So maybe not. So thank you guys so much for being here today. Look forward to having you tomorrow. Be here on time. A lot of people I saw, they showed up late. They're like, is there a recording? This is a live event. There is no recording. Do not miss tomorrow. Tomorrow is where we teach you how to find deals and how to underwrite them so that you can qualify whether or not it's a deal worth putting time and attention going after. So we look forward to seeing you guys tomorrow, right back here, 11 a.m. East Coast Standard Time. Thanks so much for your time today. We'll see you tomorrow.
Apartments, I send checks. Yo, billionaire went undercover, help y'all discover who did it best. Just bought 2 choppers, can't wait till they see the face and they see what I do next. When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. When I walk through the door, I'm talking cash flow. And if you know like I know,
do I buy something stupid? How stupid can you go? You can go as stupid as your cash flow.
You know what heels on is?